Good morning, traders. Welcome to Traders Corner Special Investor Summit, Traders Roadmap to Success. I'm your host, Anthony Chapman, and I'm thrilled to guide you through a full day of insights, strategies, and powerful presentations from 8 professional traders who are thriving in today's dynamic market. From interest rate shifts to global trade shifts and market highs, this is one of the most opportunistic environments we've seen in years, and today's speakers are going to show you exactly how they're taking advantage of it. So let's dive in and kick things off with our first presenter, Simon Klein of TradeSmart. Simon, it's all yours.
Okay, thanks for that introduction. It's great to be here. And yeah, you're here for fastest way to trading profits, or we could say the fastest way to get to any level of consistency with your trading. So if you're not there yet, there, and you want to know the process to go through to get there, then listen carefully to what we're going to cover. Also, stay until the end. I'm going to be offering 1 month access to our live trading room to one of you. So remind me of that, and do engage. I'm going to see if I can put up the chat here to see. 1 sec. And then it's going to be full steam ahead. Okay, I've got the chat. So one of you just type something in there and I'll see if I can actually see it. Okay, so let's begin again. Fastest way to trading profits. So imagine this. You're driving down a highway with a friend, and he just gave you, you're going about 150 miles an hour, say, and he gave you the wheel of the car, and you don't know how to drive. And he puts it into auto drive, and he gives you, swaps places with you, and now you're sitting behind the wheel of the car. How does that feel? And you don't know how to drive. Well, it's pretty scary, no? You're driving really fast, the car's going really fast, just about to take off the auto drive, and you have the car in your hands. How do you feel? So most people approach trading like this. They open up an account and they start to trade because it's easy to place orders, but they've got no idea what they're doing. And they start to feel pretty scared. It's pretty scary, isn't it? You might make money, you might get a beginner's luck, and then you lose it, but there's no kind of, and then you come back the next day thinking, okay, I'm going to make the money back I lost the previous day, and then you make a bit and maybe lose it again, and there's no process to what you're doing, and you're living on hopium. We call it hopium. That was the word that we used at the beginning. It's like you get almost high on this because you don't know how it's going to play out, and you're sitting on the edge of your seat, your heart's beating, you may be sweating. That's not the way to do it. That's not the way to do it. So most people approach trading like this. So let me share with you a trader success story. Jane came to me a number of years ago, and just to tell you that she went from beginner to consistent profits in about 3 months. And she's been consistently profitable ever since. And we're over 5 years later. So much so that people in our Discord community, in our trading community, wanted to know, how does she do it? And then she trades the NQ at the cash open usually. And because of that, she put on a training for them, showing her exactly how she specialized in that market. And the beauty of which we now have people in that program that are now trading consistently. So that's a beautiful story from someone who came with no background in trading, learned the foundations, learned the process, put it into practice, and specialized in her own market, got to know that market, and got very good at trading that market. So beginning to consistent profit in 3 months. And this is what she said about my training. I found the best thing was knowing what you are doing gives you confidence in your trades, and the fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or a nervous hope drop. Believe me, it's the best and the only training to succeed with. Now, if you want to trade NQ at the cash open and specialize, once you've got the foundations, then I would say Jane's training is one of the best training you can do. And we have a very high success rate of people who've gone through her training program. So here's our agenda for today. We're going to go through important things that you need to ask yourself when you embark on any endeavor, especially trading. Trading is a business like any other business. So you need to have goals. We're going to talk about defining your edge. I'm going to give you a little intro into the TradeSmart edge, into our edge, which is the foundation. Our edge is starting with a foundation and then specializing after that into whatever market you want and any time frame, and making it fit your personality and lifestyle. Then I'm going to go over the framework you need to have in place. Without this framework, you will not succeed as a trader, and the process you need to go through step by step so you can follow this process yourself in your own training and achieve a level of consistency, or at least know where you're going right or wrong, so that you can actually improve on a day-to-day, week by week, month by month basis. You don't want to be in the situation that many traders who have come to me for personal one-on-one coaching are, after 30 years of trading, gone through almost every training program and are not profitable at all, not consistent, and it's very frustrating for them. What are they doing wrong? Most people don't teach this, so listen carefully. So for those of you who are here for the first time, here's a picture of me speaking live to an audience at the New York Traders Expo. And I was also invited to speak along with ministers of finance at the Bogu Investment Forum in China, which is the only kind of financial education forum in the whole of China. I think it's run by the government. And you may know other speakers down here like Jack Schwager, who's the author of Market Wizards, and various other people. Quick disclaimer before we begin, this is for education. There's a little bit more about me if you want to know a bit more. I actually started my professional career at Credit Suisse in '96. And TradeSmart is a trading education business, and we focus primarily on teaching you how to read the market professionally and how to run a successful trading business. And that includes how to develop your own trading plan and strategies which fit your personality and lifestyle. That's the key. So let's begin at the beginning. Trading is a business, so treat it as a business, okay? Hobbies cost money, businesses make money. So let's start with goals. If you don't have any goals, you're never going to get anywhere because you've got no idea where you want to get to. So you have to ask yourself these questions, and again, write them down for yourself and start to think about them, and maybe do this now as we're going through this. Why do you want to trade? Why is that so important? You need to know the why behind why you're doing what you're doing. So this will give you a big picture reason. And if there's an emotion attached to it as well, like I want to be financially free, or I want to have, you know, the time freedom that trading can give me, or even the place freedom, as in I can go and live in any place in the world, I can do it from anywhere, geographical freedom, then that could be a big enough reason, and trading is one of the ways you can do it. But do you really know why you want to trade? Why particularly trading? To make money is not a good enough reason. You can make money in many different ways. So why particularly trading? You need to ask yourself these questions. You need to have a why. And the reason why that is important, because without a big enough why, you won't be able to get through the process. You'll probably give up, like most people do, in the process. You'll throw your arms up in the air. It won't be working for you. And the why is not big enough to get you through that. If you have a big enough why, then you figure out the how. You'll do whatever it takes to get there. That's the important, that's the commitment. We'll talk about that soon. So why are trading goals important? You need the big picture reason of why you're doing it, but why are trading goals important? Because they give you focus and direction. You need to know where you are now and where you need to get to next, and where you need to get to after that. What's your destination? Where are you going? Where are you now and where are you going, and how are you going to get there? That's the plan. The reason why they're important, because they give you satisfaction when you achieve them. Even though you're not yet consistently profitable, you're a better trader today than you were yesterday. They provide you a positive trading experience, even though most developing traders are not yet profitable. But you're learning during that process. So long as you're improving and getting better, then you're going through the learning curve. So what are your trading goals? For example, it could be to acquire expertise in reading the market. That would be a good goal if you're a trader who's trade off charts. If you're a technical trader, if you're a fundamental trader, it may be less important, but you may be able to use charts to help you time entries and manage risk. And you should set challenging and feasible goals. They need to be challenging enough. You never grow unless you go out of your comfort zone. You know, if you get good at trading, I don't know, a $1 risk, for example, and you get consistently profitable, you're never going to make big money unless you start to increase your risk size once you're consistently profitable. And that may not feel comfortable. So you need to push yourself beyond the comfort zone in order to grow. And that goes with anything. If you go to the gym, for example, if you keep lifting the same weights, your muscles aren't going to grow. They're going to get used to it. You're going to adapt. You need to be able to pull or push or lift heavier weights in order to challenge your body to grow. The same thing with anything in life. In order to grow as a trader, you need to challenge yourself. You need to move to the next level. You should set goals according to your level of mastery. Don't set a goal today of making $1 million a year if you can't even make $10 in a month. You see what I mean? It's not realistic at this stage. So set a goal according to your level of mastery. And again, this is a skill that you need to be able to learn as well in order to get through the learning curve. Realistic goals lead to a sense of accomplishment and progress. Setting unrealistic goals are not going to do that, but you want to set your big goal. You know, the big why is going to drive you, is going to be the emotional force that's going to keep you going through this learning curve. As we said before, the next very important thing that you need to ask yourself, and this is really at the beginning, is how committed are you? If you're not 100% in, don't start trading. It's not the right thing to do. It's not for everyone. It's not easy. And I think if you ask many people at the beginning, if they would understand the learning curve they would go through, most people, Janie, we mentioned earlier, is not most people. She's more of the exception than the rule. But if you look at the majority of people that become successful traders, it takes much longer than a few months for most people. So are you willing to go through all that? Are you willing to, you know, be in a situation where you're losing money consistently in order to go through the learning curve until eventually you can make money consistently? Or at least be consistent. Will you invest in an education and training? No, it's very hard to do it by yourself. The best way to get anywhere quickly in life is to find someone who's already succeeded at it, and if it fits you, and learn from them the path, what they did, how they got there. So find someone who's already an expert in what you want to achieve and go and learn from them. Will you work on yourself? Now, again, just like if you want to become a professional tennis player, just watching someone else play tennis is not going to do it for you. You're not going to become a professional tennis player watching someone else. You have to watch to learn, but then you need to actually do it yourself. You need to actually put what you're learning into practice and start making mistakes. My first boss at Credit Suisse was a guy called Greg. And when I first came to Credit Suisse it was in 1996, Greg pulled me aside. I was like really afraid of making mistakes. I was a bit of a perfectionist then, which is probably not the best thing to do or to be. So he said to me, Simon, I want you to make mistakes. You're a newbie. If you make mistakes right now, people will understand because you're just beginning. Don't not make the mistakes now and make them a year or two in where people will be less forgiving. At the beginning, make as many mistakes as possible and learn from them. A mistake is a reason, or is a opportunity to learn something. So it really helps you grow. You grow from your mistakes and make as many mistakes as possible when it doesn't really matter. So when you start trading, start with very small money on the line. So it doesn't really matter, and make all the mistakes you can possibly make. So that when you start trading with bigger money, for example, you've made all the mistakes. You're now at a level where there's nothing you can do wrong in trading that you haven't yet experienced on small size. It's good to know that there's no mistakes that you can make now that you haven't yet made, if you see what I mean. It's very comforting to know that there's nothing I can do now with my trading account that I haven't yet gone through. So therefore, what's there to be afraid of anymore? Once you've experienced every possible mistake, there's no fear anymore. Does that make sense? The key, will you learn from your mistakes and failures? Will you do whatever it takes? Remember, when you have a big enough why, you'll do whatever it takes to get there because it's meaningful to you. Okay, so ask yourself that question. The next thing you need to do when you're trading, you need to define your edge. If you don't have an edge when you're trading, then how are you going to be consistent in your approach and be profitable? You need to have something that gives you an edge in the market. So you have to know exactly what is an edge. So an edge is an advantage you have over others. What is your edge? Or whatever you do in whatever, and especially in trading, you need to have something that's better than others that are trading. So what exactly, if you're trading technically using the charts, what's the technical edge in the market? So this is recognizing when the odds in the market are in your favor. When you're on the buy side, the odds are more likely that the market's going to go up than down under these circumstances. Always ask yourself the question, at least at the beginning, who's on the other side of your trade? You want a novice trader on the other side of your trade. You want to trade with the professional traders. So you have to understand all the different tricks and how the market can have. Part of what I did over the years is used to keep track of trades that didn't work out, and then I came up with I've got a whole folder in my on my computer called Think Opposite, because every time I thought the market was going this way and it didn't, and then I went back and analyzed those trades, and you start to see patterns. When this and this, I'm thinking this, but I should be thinking the exact opposite, and then you start to switch your thinking to the opposite, and that becomes your line of thinking now. And then you trade in that way when you're looking at the market, and it becomes more natural now, because what was difficult to do at the beginning because it was opposite of what you thought. So when you flip it on its head, you're doing the right thing now, and you understand exactly why based on looking at many mistakes or many failed attempts at what you thought was an edge in the market. Is that understood? So what you have to do is, this is a question you need to ask yourself. And again, do you know what your edge is? Ask yourself, what is my edge in the market? And here is something that most people don't want to hear, but it's the truth. If you cannot clearly explain your edge, you do not have one. And what follows on from that? If you don't have an edge, do not trade. You have no right to trade if you don't have an edge. If you can't explain what it is, you don't have one. And you should be able to explain it very clearly to a 10-year-old, for example. It shouldn't be complicated. The next thing, once you have an edge, is, have you proven your edge? For example, I'll give you an example. Your edge could be buying in an uptrend, buying pullbacks in an uptrend. Simple, yeah? So you have to define exactly what an uptrend is and what a pullback is and how you get in and how you manage risk and everything else like that. But have you proven your edge? If you trade it, does your edge have a positive expectancy? What does that mean? That means that over a large enough number of trades, it makes money. Positive expectancy means you expect to make money over time. It doesn't mean that every trade's going to be a winner. You may have, maybe 50-50, half winners, half losers, but if your average winner is 1.5 times or 2 times or 3 times or whatever, your average loser, then you have a positive expectancy. My trading this month it's actually it's around the 60% mark. Is 6 out of 10 trades were winners, but my average win to average loser is just less than 2 to 1. That's a positive expectancy. That's this month. I'm done trading for the month. It's the last day of the month, but that's a positive expectancy. Now, some months it could be better. Some months I could get to 100%, but you know, every month is slightly different, but you want to come out with you know, with an edge that has a positive expectancy that you've proven yourself. Now, the beautiful thing is once you've proven it, the next stage is, can you trade it? You've proven it, you may have back tested it, you may have traded it small size, but have you proved it works for you, that you can actually follow it in real time, in the real market, with real money on the line? So you've proven, first of all, you've got an edge, you know exactly what your edge is. It's got a positive expectancy, you've tested it, but can you actually put it off in real time with real money on the line? Once you can do that, then you can move on to the next stage. Then you can start trading bigger size and everything else like that. But this is the process you need to go through. I'm going to go into more detail soon. So let me share with you quickly what the TradeSmart edge is. Now we have trading programs that can quickly teach you how to do this. We've got a program called How to Read the Market Professionally, which will take you through the framework of reading any market so that you can build from the foundations up. It's a bit like if you would become an architect or an engineer, you have to learn basic, you know, physics about forces and everything else like that. And you can apply it to building buildings, okay, for example. So you need to have the foundation. If you learn medicine, you need to have the basic medical sciences foundations in biochemistry, physiology, pharmacology. If you're going to be prescribing stuff, you have to understand how that and everything else, and anatomy. And it's not an exhaustive list, but you need to have the basics. You wouldn't want someone who's a brain surgeon, say, and he's just learned how to do one brain surgery, but doesn't know the basics of medicine. Just learned one thing and that's it. You wouldn't want someone like that performing a procedure on anyone of your family, for example. So it's the same thing with trading. Get the foundations down. So these are what I put into my foundations as a trader without going into the details as to why, but you'll see now. I mean, there's a story behind this because when I first started trading, I learned the specialist system of the New York Stock Exchange. But because of technology changes, that system no longer works. So I had to come up with a way of looking at the markets that would be timeless, and this was it. So supply and demand is timeless. Yeah, so that tells you where the market's moving from or to. Price direction is a way of looking at the candlesticks, the Japanese candlesticks, and it tells you which direction is price currently moving in. And then the trend tells you which way the market's going from a trend perspective. Is it trending up or down? Remember, we could be moving down in an uptrend. We could be moving down from supply in an uptrend. You could call it resistance, but supply is the reasoning behind those levels. If there's more willing sell orders at a certain level than willing buy orders, prices will always drop. That's a supply-demand equation in any market. And we do this using multiple time frames. So we have a time aspect to this. So we can zoom in and zoom out. We can go up to a weekly chart or a monthly chart and then go down to a 1 minute chart if we want and see exactly what's going on. So let's just give you an example. We can go into the live markets right now for a few minutes or so because there's still quite a bit I want to cover with you. So let's just quickly jump into the live markets from today and we can look at, let's just look at, say, the dollar, for example. Now I'll give you this is a beautiful example of the dollar. So this is a monthly chart, and I can see the beginning of this month, we're in a demand. These are levels. So if I go down to a weekly chart, for example, this is this week, we said in our, if you come and join our live trading room, then you can actually see this ahead of time. So the beginning of the week on Sunday, we said that it's most likely the market's going to fail to make a new low. This trend down, this moving market down is going to come to an end, and we're going to take out these highs and go higher. That was the kind of odds for this week. So how do you play that out? So if we go down to a daily chart, just make it bigger, we see at the beginning of the week, we come to a demand level over here. And at the beginning of the week, we're pointing to the upside, direction up. So it's highly likely we're going to go up. So look what happens. This is Monday, Tuesday, Wednesday, and Thursday. We already, why are we slowing down on Thursday? Because we've hit a higher level. We've got a higher level, and we've hit level over here where we came from. You see, we came down, and we're now revisiting back into this level that we broke below. So that's why the market's kind of starting to, you can see we're kind of reversing from here. We're in supply on multiple time frames. Direction is now down on this time frame, so we're moving down. The trend here is now down. So that's just to give you an idea of how this works and how we can be pretty accurate on trading the markets here. Now, let me just show you one other example. We can look at any market, and we can look here at, this is gold. And again, if we look at the bigger time frame, you can see we're clearly uptrending here, and we've come to the highs. Now, at the end of this week, or the end of the day, this is going to put in, this will be the potentially the top of the market unless we go above here, because we're going to be changing trends, or we're no longer in an uptrend. We may end up going sideways, but we know these levels ahead of time. You can see what happened into this level. The market sold off again. And down into this level, we pushed up. So we're trapped in between levels here. Okay, so that's a little bit of an example of how to use the supply, demand, price direction, trend, and multiple time frames to come up with trading ideas. So the first, before we do anything, is we read the market. Most people apply a strategy without reading the market. It's a bit like driving a car without reading road conditions. So we look at the market and we say, what's going on in the market? What do we understand? What are the odds here? What's likely going to happen now? And what's the probabilities? And then we apply a strategy based on market conditions. Does that make sense, everyone? Okay, so let's move on. This is a very important part. So I wanted to give you a taste of that. Obviously, you can come and join the training I'm going to share with you soon and get the whole complete picture. It's too much to do in a short 45-minute session here, but I want to give you a taste of this that you can actually take away with you, even if you don't join the program, and actually start to make progress with your trading. So this is important, and this is a quote by Mike Hawkins. You don't get results by focusing on results. You get results by focusing on actions that produce results. So most people who are trading are focusing on how much money they're going to make, but not the process they need to go through to get to those results. So don't focus on the money, focus on the process. And in order to have a process, you need a framework. So the framework is the framework, and the process is how do you navigate through the framework. And I'm going to share with you what exactly that is. And again, this is the big picture view, so you can actually take this away and start to implement this for yourself. So the first thing you need is to have a trading plan. Now, if you do not have a trading plan, you will not succeed. Impossible. Just like you can't have a business without a business plan. You need to have a plan. If you fail to plan, then you plan to fail. What are you doing? If you're not planning anything, then how are you coming to the market? What are you doing? And how do you track what you're doing if you don't have a plan to track it against? Within your trading plan, you need to have money management rules. Okay, big picture rules of how do you manage your money. Risk management is how do you manage risk, different. And then you need to have trading strategies in there. This is a kind of big picture view. You also need to be able to log your trades. Now, your broker log is not enough. You need to be able to log your trades more specifically. You need to know what strategy, what time frame you got in, how did you manage the trade, so you can actually start to see patterns in your trading. What's working with you, what's not working with you, what strategies are working at different times of year, for example, in different market conditions. You have to assess the market. Is the market trending? Is it sideways? Is it transitioning? What is it doing? You need to be able to read the market and then apply your strategy. In a trending market, you're going to be holding your trades longer than in a sloppy transitioning market. You might get whipped out many times, and you have to understand how to trade those market conditions. Trending markets are easy. You buy pullbacks and hold them and just keep going. And you keep adding on the pullbacks until the trend comes to an end, and you need to know where and how that happens. And then a trading journal. You need to be able to journal, and then the journal's more kind of what are you doing and how can you improve? What mistakes did you make? So it's the reasoning behind what you did. The trading log is what you did. The trading journal is why you did that. Why you did that, what emotions were you, if you got out of a trade too soon before it hit your target, why did you do that? Go and analyze your trades. You need to know how to do that. And I'm going to share with you like part of the process of how to do that. And again, you can follow this step by step. So let's go now over the trading process. Okay, that's a big picture view of the framework, trading process. So this is very important. This is based on the performance and psychological effects of goal setting in sport. It's a systematic review and meta-analysis. Okay, so this is what it says. Choose the right kind of goal based on this is based on a recent meta-analysis. So on the impact of goal setting on performance, this is what was found. Okay, so you have to choose the right kind of goal. Process goals had a large effect on performance. Performance goals had a moderate effect. And outcome goals, listen to this carefully, has a negligible effect. So if your goal as a trader, I'm going to make $1 million a year, that's an outcome goal. Performance goals is, for example, I'm going to have a batting average this month at 70%. Last month was 60, for example. And process goals are even better. Is let me improve the process. How do I identify trades better? How do I read the market better? How do I manage myself better? Those sorts of things. So these are the things that you need to have as part of the trading process. You have routines that you go through. For example, a preparation routine. Ask yourself the question before you start, am I ready to trade? Is the market ready? You need to have patience, discipline, and psychology and emotions. You need to keep track of those, and you need to be able to measure your progress. Whatever you don't measure, you don't know if you're improving or not. So measure what you're doing and know if you're getting better. Measure how many mistakes you made this week. Over the number of trades, that's a percentage of errors you made compared to what you make the following week. Are you improving? Are you making less errors? Are you staying in your trades longer instead of jumping out? How many fewer times are you making those mistakes as you get, or you keep making mistakes and you need to go back and address that? And again, I work with people one-on-one to address the root cause of some of the issues that may go back to some things that happened years ago, for example, to help people become aware of them and then deal with them at the root so they don't no longer hinder them and they're able to get to that peak performance. So here's an example of the trading process. And again, you can write this down if you wish. Prepare yourself to trade. That's the first thing you do before you do anything. Prepare yourself. Analyze the market you trade with a view to finding trading opportunities. Then wait for the market to show you a trading opportunity in your trading plan. That means you must have a trading plan. Remember, this is part of the framework. Then take the trade once it sets up according to your plan. And we have a specific way that we go over in the trading room of how to do it so that you're in control all the time and you don't get into that flight or fright state where the prefrontal cortex, which is involved in decision making, switches off and you're more in survival mode. You never want to be in survival mode when you're trading, because if in survival mode when you're trading, you're not going to make the right decision. You're going to make a decision that's going to get you out of danger or perceived danger. There's no tiger that's chasing you. It's just money that you might be losing in a trade that's going against you. But your biological self doesn't know the difference between that, and the same mechanisms that happen on a biological or level inside your body, because we're biological beings, are happening. You go into flight, fright, or freeze. Some people freeze when they're trading. Anyway, so take the trade, take a picture of the trade entry so that you can go over it later. Write an entry in your trading journal, write something about the trade. Manage the trade according to your trading plan, and then take a picture after the trade is completed. Take a picture of what happened next so you know, did I get out at the right price or was my stop in the right place? Enter your trade in the trading log, write an entry in your trading journal, and repeat. Now, can you imagine if you did that, every single trade you did, where you would be with your trading now? Now, you might not know how to do that in detail. That's what I'm going to cover with you shortly. But this is what we've discussed today: how to define your goals, how to uncover your edge, the trading framework, and the correct trading process. It's not that complicated, but most people don't do this. So here's where I'm going to share with you how you can take the next step. The best investment you can make in life is in yourself. Warren Buffett even said that. And Jim Rohn says, for things to change, you have to change. For things to get better, you have to get better. But knowledge alone is not going to get you there. Let your knowledge lead to action. You have to take massive action. If you take no action, you're just going to be in the same place in a year's time as you are now. You need to make a change. You need to take action. You need to, if you don't know how to do this, then learn how to do this and you'll be in a better place. So as a trader, you are a business owner. And as a business owner, there are things you need to know. I want to help you discover everything you need to know. So I've designed a course around exactly that, giving you the tools and the knowledge you need to run a successful trading business. So this is how to run a trading business. And I'm going to go over with you very briefly what's in there. So session 1 goes over similar to what we covered today, but in much more details. Goals, tools of the trade, and trading strategies. How do you make or design or build or develop a trading strategy that fits you? Then we go over in detail the trading framework that we do. How do you write your trading plan? How do you actually do it? So at the end of that, you'll have a trading plan. And how do you log your trades? What's the reasoning behind it? How do you journal in the correct way? How do you take pictures in the correct way? Everything you need to do step by step. And then we go through the trading process. And how do you do a follow-up and review of your trades? How do you look at performance statistics? What do you make of them? How can you uncover what's working for you and what's not, and how to improve by looking at performance statistics? Much like if you're an athlete, for example, you can look at your performance, for example, and then you can adjust your technique. So the same thing here, you want to be able to look at your trading results with performance statistics and be able to know how to tweak it, what to change in order to get better results. And then we go over very important topics about money management. How do you manage your money? It's a big picture view. How do you do risk management? And we go over the framework for all trade management. Once you've got this, you've got a foundation in trade management. You'll be able to manage any trade however you want. And from this, we teach the fundamentals, the foundations of trade management. You can pick and put together whatever works for you. Everyone's different. So that's why it's not a one size fits all. It's a let's tailor make it to fit you, and I'll teach you how to do this in the training. And then a very important topic, we discuss trading psychology. How do you get yourself to do what's difficult to do? Why do you keep slipping up and making the same mistakes again and again? And how do you overcome it? What do you do? You're stuck. You keep making the same mistakes again and again. You've got limiting beliefs. How do you overcome them? How do you figure out what they are? So this discusses trading psychology, and basically psychology in anything that can be applied to life. So here's what people are saying. I thought it would be good to drop you a quick note saying that I have been through the course How to Run a Trading Business, and I found it worthwhile. There were lots of little things or gaps, as you put it, in my approach that I've become aware of. For example, I knew about the benchmark, how to benchmark a trade, but I wasn't actually doing it much and was very sloppy as far as my trading log was concerned. I like the part where you say, fix your mistakes one by one, starting with the biggest one until there aren't any left. I have now become aware of an embarrassing large number of mistakes in my approach that I need to fix one by one. Man, the trading room is very helpful in understanding how to go through the process. I've been trading for 11 years and I've not seen anything like what you do. Love how simple it is. I've mainly traded options with trades that last 30 to 60 days. I've been looking for something I could use to day trade for 2 years now. I want to round out what I'm doing with another source of profits. I've not been able to find anything I could execute consistently. I'm just paper trading with your system. I've been doing it for a couple of weeks now, and I've had far better results than anything I've ever tried. Here's what Kevin said. This is in our trading room. Hey, Simon, you're always spawn. Really glad I met you. You've literally changed my life and with my way of thinking and life. Marcus. Simon's probably one of the best coaches out there with a heartfelt passion for coaching and a real understanding of how the market works. He helps you view everything in a new way. The way he teaches is also really good, and he goes through it until you understand. I can honestly say I've gotten more out of this training than I expected. So this is what you're going to be able to do with this knowledge. You're going to be able to run a successful trading business. Develop as a trader within a proven framework. Create, test, and deploy your own trading strategies. Easily track your performance. Manage your risk, and much more. This is what you get in the training. It's 5 sessions. Each session is about an hour and a half. It's on demand. You can watch it as many times as you want, watch it at your own pace. And you also get personalized support. If you have any questions, you can ask me afterwards. We have a 24/7 trading community, which you can join on Discord. Here's my offer to everyone here watching. The regular price is $4,997. It's been the same price. We've had this course on offer for over 10 years now. And the deadline is 2 days from now. Again, if this is something that resonates with you, use the coupon code 1000 off. The actual I'm going to share with you, and then it's $3,997. This is where you need to go to. You can type this into your browser, tradesmartforex.com, the number 4. Maybe people are here. You can type it into the chat area. Anthony, maybe. /start now. So the deadline, again, you're going to get 1000 off. Type in the coupon 1000 off at checkout. And again, for those of you, and I'm going to watch, for those of those fast action bonus, you're going to get free access for 3 months to our live trading room. So our live trading room is a subscription service. It's $497 a month. And again, that's 1491 that you get for free for the first 10 people who sign up before the deadline. So again, you're going to get how to run a trading business. Once and for all, you're going to learn what you need to run a trading business like we just covered today, but in much more detail. 3 months in the live trading room for the first 10 people, that's 6488. This is the link that you can go to, and it's 3997. Get your trading on track. If you're not where you want to be, this may help you get there. And again, when I was younger, what we used to do is we used to use our time to save us money. But as you get older, I'm 51 now, you use money to save you time, because time's precious. So if you're not getting anywhere quickly, then maybe this will give you what you need to help you get back on track. And again, it can be applied to any form of trading. It's just a way of how to get your trading from not knowing what to do to knowing what to do, at least from a business perspective. So I'll show you very, very quickly. We've got a couple of minutes. And again, for those of you who are here live, you can ask questions maybe if we've got time. But if you want to ask questions, you can email me at simon@tradesmartforex.com, which was with the number 4. And let me just show you very, very briefly what it looks like. So you come to the checkout, you come to this page, and again, you can read what we have inside and what other people are saying. And then when you come to, this is the actual checkout, type in the coupon code here. I think it's 1000 off. Oops, 1000 off, and it should work. You click here, and it gives you the discount, and then fill out all your details here. You don't need to have a PayPal account, just type in an email address. That's a valid email address, and you got a choice to pay with credit card if you want at the end. And then this is what you get access to. This is the membership area. You can join our trading community here. How to run a trading business is this. So these are the 5 sessions that you get access to. And for those of you who want to join the trading room, you get access here as well for the first 10 people that sign up. You get 3 months access to this. And again, the schedule's here. We record all our sessions, and we've got a weekly prep session where you can get a heads up of what the market's likely to do in the upcoming week and why, and the reasoning behind. So that's what basically I have to offer today. And would like to say thank you for those of you who watch this. I have a YouTube channel you can join. And again, the link to join the training is tradesmartforex.com/start now. For those of you who have joined, look forward to helping you on your trading journey, and join our trading community. And thanks a lot for having me.
Hey, thank you so much, Simon, for that powerful and structured breakdown. It's always refreshing to hear trading presented with clarity and purpose. You do such a great job. Thank you so much. Traders, the special offer link is now available in the chat box, so make sure you check it out. Simon, what was the discount code? I'd like to put that in there for you as well.
Oh, 1000 off. Like the digit, the numero 1000, and then off.
No spaces?
No spaces.
Okay, excellent. Thank you so much, Simon. I'm going to put your YouTube in there too as soon as I finish up your outro. Thank you so much. That was Simon Klein. So be sure to pick up that offer. Come back again, Simon. We really appreciate it. And I'm going to put your YouTube in there.
Okay, thanks a lot, Anthony.
Thanks
everyone for watching and for joining. I hope this helped you. And yeah, go through it again if you. I'm sure there'll be a replay. Go through it again, take notes, and put it into action. do something with it, and then you'll start to see results.
Thank you. Next up is Marina Villatoro, better known as the Trader Chick. She's here to simplify the world of day trading and introduce the power of one of her favorite setups and breakout trades. Her session is titled 4 Steps to Simplify Your Day Trading and Understand the Power of the Breakout Trade. She'll walk you through understanding market movement, how to use indicators for precision entries and targets, and how to spot and profit from breakout setups and more. Here's Marina, the Trader Chick.
Hello, how are you? Can you hear me?
Good, Marina. I'm making you a presenter right now. Sorry.
Okay, no problem. Hi, everybody. All right, let me just organize this. And can you give me the question box?
We got to ask our audience to write something. Do you guys hear Marina? And it should
Hi,
pop up.
yeah, I can hear you. Can you give me the question box, please? Can you hear me? Hello?
Yeah, we can hear you. The question
Okay.
box did pop up. So if you see it, yeah.
No, I don't. I definitely don't have it.
Are you kidding? All right, I'll let you know. Is that okay?
Yeah, that's okay. Yeah, if you
Everyone's
could do
telling
it,
you,
I'd like to.
you sound great.
Okay. Yeah, I just like to ask questions and chat. I don't know if it's possible to, I
I'll
don't know.
monitor those for you if you want. Is that okay?
All right, cool. Yeah.
Yeah.
Well, hi everybody, and thank you so much for having me. And there's always a little bit of a glitch. Actually, right before this all began, I was totally hacked. All of my Google accounts, I have 4, were hacked. It was the craziest thing. You should have seen me completely going crazy because the slides you're seeing are also in my Google account. So yeah, I was like a quarter of a second away from writing and saying that I wouldn't even be able to come. But somehow I managed. It was really, really insane. Yeah, it's crazy how much our entire lives are dependent on all of this. Like nothing is backed up because you feel like this is backed up, right? So, anyways, but I'm here and I'm very grateful that all is looking wonderful. So, thanks everybody for being here. And I'm just grateful that everything's up and running once again. So, I am Marina, the Trader Chick, and today we are going to be talking about the breakout trade. Breakout trades are by far my favorite. However, what's important to understand about breakout trades and about any sort of a trade is that you need to understand what it is before it actually happens, right? So if you are going to be on the highway and there's an exit, you need to first understand how to even merge into that exit versus, oh, there's the exit and not knowing how to steer the wheel to go there, correct? It's the same thing with day trading or any financial markets. You need to understand the setup formation before the setup actually happens so that you could hop on the setup. So that is exactly what we will be talking about today. So I am Marina, the Trader Chick. Hang on just 1 second here. Yeah, I'm seeing some things pop up, but okay, I'm not really sure what that is. Okay. Yeah, there's definitely some sort of a glitch. I don't know if it's my computer. I think it might be. Anyways, what I want to cover with you guys today is how to understand the market movement so that we set ourselves up and are ready to identify for the breakout trade so that we are ready to hop on it, and also how scalping can truly help you as well. So before we go any further, my official intro is I am Marina, the Trader Chick. I am actually an expat living in Barcelona. So right now for me, it is 5:20. And I have been an expat now for over 22 years. And the reason why I say that is because a lot of people constantly ask me how is living as, as an expat, because before we lived in Spain, we lived in Central America for 20 years. And the coolest thing about day trading is that you can do it from anywhere. So if you guys ever consider moving, day trading is without a doubt the best profession, the best live livelihood that you could have to be able to do anywhere in the world. And before I became a day trader, I was actually a fitness instructor. And why does that matter? Because a lot of people have this misconception that you have to come from an economic background or a software engineering background or a financial background or even a math background, but really you don't. Anybody can become a day trader. That is the beauty of day trading. And I am trilingual. So the reason why I'm bringing up trilingual is because I was born in the Soviet Union. I learned English when I was 6 years old, but I didn't really learn English as much as I learned I just continued learning how to speak a language. But Spanish, on the other hand, I learned in my late 20s. And there's this whole format, there's this whole commitment that you have to give to learn a new language, correct? And one thing that I recognized after struggling with trading for quite some time was that when I recognized it as a new language and I started to treat it as if I was learning a new language, everything shifted for me. So if anybody here today has learned a second language or a third language in their later years, you understand the process. And if you want to apply that process to learning how to read the markets, it will be absolutely amazing what you will be able to understand and how you will be able to work with the markets as well. And like I mentioned before, the coolest thing about trading, you can do it from anywhere. All right, guys. So before I hop into the presentation, I have the entire presentation actually for you in a free cheat sheet. So go to makingofaDayTrader.com. We only have 45 minutes altogether. So I want to be able to make sure that you guys are able to go back to this and really learn, because I'm going to be able to give you all this information. However, you are going to actually have the real stuff in front of you. So go to makingofaDayTrader.com and you are able to download it and immediately for free so that you can follow along with me. All right. So before we get into the breakout trade, let's go to the beginning, right? Understanding how you could understand how the format actually happens. Again, one important thing that I'm going to tell you right now is if you want to do this as your livelihood, as a career, you need to have a platform. You need to use a platform. There are tons of platforms out there today. Some are for free, actually, but you need to have a professional platform. You cannot just be doing this off of your rinky-dink app on some phone. You need to really become a pro at it. Okay, this way you are able to really understand what is going on, because we have a saying in the trading world, everything happens to the left. So whenever you enter a trade, everything is to the left, meaning that you have done all the work leading you up to that trade on the left. So when you are in the trade, you could look at your chart and understand why you entered that trade. But you can't do that if you do not have a chart. All right, guys, let's begin. Market movement and the breakdown of a trend. So we know technically that there is a upward trend, downward trend, but the most important trend of all is actually the sideways trend. Why is that? Number one, sideways trend, you could call it, first of all, what is a sideways trend? It is a channeling market. It is a consolidating market. It is the chop, the exhaustion pattern, the indecision zone. I don't care what you call it, it's all the same thing. It is a flat line, right? Why is this the most important of them all? Because this is where we end up losing the majority of our money, right? This is where we end up losing all of our money. Why? Because there is no actual movement going on, but we need to recognize that, right? So when we are able to recognize the sideways movement, we can then stay out. And not only can we stay out and save our money, but when it breaks through, then we can see the breakout trade. So now let's learn how to spot these areas. First of all, how to identify when they're happening, and then how to identify where the breakout actually happens. So as you can see here, trending market, right? You have the downward trend. It doesn't matter if it's strong or not. Sometimes you could just go into a flat line and then boom, it could transition into an entirely different trend. Now, what is the breakdown of a trend? So an upward trend is when each pivot is higher than the next, right? That's pretty much what it is. It's the bull market. It's when the market is trending up, market going up. This is when you are entering a buy, right? This is when you are buying or going long. You know, when you hear people say you're in a long position, that means that you are entering at a low price point, exiting at a higher price point, and then taking the profit in between. You are going long. You are buying. The downward trend is literally the opposite. It is each pivot is lower than the other pivot. Your downward trend. Here, this is what you're doing is you are selling. You are going short. Basically, what you are doing is you are shorting the market. Okay, what does that mean? Pretty much breaking it down to super simple terms, you enter when it's a high price point, you exit when it's a low price point, and you take the profit in between. Selling, going short, this is actually probably how most traders make most of their money, right? Because even though the market could go up, interestingly enough, when it goes down the strongest, and that's when a majority of the traders that make the most amount of money. So it's really important to understand how to be able to short or go or sell in the downward trend. Okay, so short the market when the market is going down. This is when there's a bear market, the market is trending down. So how can we start to identify and recognize these areas overall? First of all, they are the consolidation areas and the transition areas. I personally call them a trader's worst enemy. And we are going to now learn how to spot them and to be able to avoid them. All right, so this is what a consolidating market really looks like. Is this something that you want to put your money into? This is something that you need to always ask yourself before you go into any trade at all, right? First of all, what do? You say to yourself, is this something that I want to give my money to, right? Does this look like a market that you want to be in? No, right? Because it's terrible. It's just bouncing in between. It doesn't have any actual rhythm. It doesn't have any actual movement, right? So this is the reason why the majority of traders end up losing money in these types of markets. When you have, let's say the market has been running up all day, and there is this kind of a trader, it's called the trend is your friend kind of a trader, and they're recognizing these areas and they're seeing these, that the market is going up, but all of a sudden it starts to flatline. A lot of them tell themselves this story that the market is just going to continue going up because it's been trending all day, and they're just going to continue putting in a long position, right? Then you have the contrarian trader. What they're looking at is they're saying, you know what, the market's been going up all day. It's got to correct. I'm going to be shorting the market. And then they're going to try and short the market. However, in the moment, what the market is actually doing is doing nothing. It's just going flat, period. Nothing at all, right? So what a real trader, a pro trader does is they sit out entirely when they see these areas. Okay, so the thing is that we create these stories and we want to pretend that we could beat the market or we could predict what the market is going to do, but it doesn't happen that way, right? The market will always beat us, and we always get humbled by the market. So when you see this kind of a market, you just need to stay out. You need to be a pro. All right. Why? Because it doesn't matter how strong the trend can be. Once it goes into that consolidation, it could do anything. So what we need to do is sit out. First of all, we need to recognize it. Then we need to sit out and wait until it gives us massive confirmation of what the next step is going to be, right? So in the beginning, our number one job is to recognize these areas when they're happening, and then to know when to stay out, and then to understand when to actually get in. All right, so we see that this area is happening, and then boom, it starts to consolidate. Sit out. Don't touch the market. All right, because these happen often, and the more money we keep in our pockets, the more money we can put in when the market is a confirmation that it is going strong, right? You want to always have some money in there. You don't want to just be putting it in just for the sake of putting the money in. Now, the market respects areas, and we as the individual retail traders, we also need to respect these areas. What are these areas? They are the support and the resistance areas, and they are so important, guys. You need to understand these areas, you need to identify them, and most importantly of all, you need to draw them out. Why do you need to draw them out? I call these areas like the safety zones. This is like the seatbelt of our charts, right? I don't know if you guys just seen this movie. It's a really great movie, by the way. Formula One, the movie. It's out right now with Brad Pitt. It's a really great movie. But the point of the story is that Formula One racers, they know how dangerous it is to be a Formula One driver, right? So what do? They have a helmet on, they have a fireproof uniform on, they have several seat belts, right? They go in protecting themselves, right? Why are 98% of traders not protecting themselves? They're just going in and donating their money to the market. This is how you protect your money. This is how you protect yourself, by recognizing the support and resistance areas. So, what are these areas? So, let's break it down. Resistance area. What is a resistance area? It is literally the ceiling of the market. It is the ceiling of the market. It is where the market is going up, and now it starts to hit a certain area over and over again, and now it is a ceiling, right? It is an area that the market is respecting. Can it break through? Maybe, but we don't want to be putting in our money blindly until we know what it's actually going to do. Can it transition off of it and bounce to a totally new trend? Absolutely. Again, we don't know. So what we do is we recognize that area, we draw it in, and then we wait and see what the market will do. What is a support area? It's the exact opposite. It is where the market is hitting the floor. It is the floor of the market. It is when there is a downtrend and all of a sudden it starts to hit this floor. And it doesn't matter if it is going 150 miles an hour, there could be that wall. You have to understand it. You have to recognize it. You have to draw it in, and then you have to sit and wait until it either breaks out or completely transitions to a new trend. Okay? These are support and resistance areas, and they are also used for channeling markets. As you can see here, it is a very defined channeling market, right? It is bouncing in between two areas. It's super narrow. It's super ugly. I would never, ever put my money into anything that looks like this, right? Look at this. It's just grindy. It's choppy. It's so ugly, right? There is no real direction. But the majority of people feel like, oh, but the market is going to do this. How do you know what the market is going to do? The only thing you need to know is what's happening right here, right now. And this is something that you don't want to touch, right? This is ugly behavior. So you have to understand that. You have to draw it in, sit out, and wait. Now, a lot of people ask me, well, I usually get stopped out in the beginning of that happening. And that makes total sense, because sometimes we don't know it's forming until it's already too late. However, you have to also stop when you do recognize it. But there's also ways to be able to identify it when it's just beginning. And how do we recognize that? Through reversal areas and divergences. This is my absolute favorite way to recognize these areas. Why? First of all, it's free. You could do it on any charting software. You do not need to get any new indicators and just waste more money on indicators. Absolutely not. And they're so simple. All of my students, when they learn how to do reversal areas and divergences, they always have these beautiful aha moments. And that is exactly what I want to teach you guys right now. So what is a reversal area? It's a double top, double bottom, triple top, triple bottom, head and shoulders. And divergence, hold on, I'm going to show you right now, because divergence is amazing. So this is what a reversal pattern looks like, right? What is the divergence? So as you can see here, my price action is going up. I personally use MACDs, right? They are these red dots on the bottom. That is my MACDs. I love the MACDs. I find it to be the least lagging indicator, and it's going down. So this is a divergence area, correct? One thing is going up and then the other one is going down. So when I'm seeing this divergence, what is it telling me? It's telling me that the market is losing its strength. It is losing its steam. Do I want to be in a market that is getting weak? Absolutely not. I want to be where there's total strength, where there's no divergence, when the market is running and flowing. Okay. Now, when I see a reversal pattern coupled with a divergence that is like extra strong, indications showing me that the market is totally slowing down and it has a very high potential of either going flat or reversing entirely. These are called reversal patterns, but that does not mean that it is 100% reversal at all. It is a very high indication until we actually see it happen. What it is telling me 100% is to stay out. And that is a massive, massive action that we as traders have to learn, is when to stay out. All right. This is when it is divergence. Understanding it all together. So let's put this all together and see how we can apply it to spotting those breakout trades. Like I mentioned earlier, please go to makingofadaytrader.com and get your free presentation. You'll have this entire presentation at your fingertips completely for free. And this way you could just go and learn from it. And you could write to me, please do. I love answering your questions, to ask me, any questions you have about the cheat sheet. So makingofadaytrader.com. All right, so let's see, how do we spot a valid breakout trade? You need to be drawing in your areas, right? It's absolutely crucial. You need to draw in your your support or resistance area. It needs to be drawn in. Only then are you able to actually spot when it's going to break through, right? That's the whole point, when you are understanding when it's going to break through. So what is a breakthrough? Just in layman's terms, really quickly. It's when the market is going in one direction. Let's say it's going up, the market's going up, and then all of a sudden it just flatlines. It goes totally, totally flat. And then boom, it continues in the same direction. That is the breakout. That means that the market has gotten steam and energy to go in the same exact direction as before. All right, so that is understanding what a breakout is. It's when it's going in one direction, pauses, goes into an uncertain area, and then continues in the same direction. All right, now this is how I personally take the trade of the breakout. As you can see here, I have a massive resistance area. Now, I want you to take a look at my MACDs. You'll notice that my MACDs, so the MACDs are the red dots, and there is a dashed black line. That dashed black line is the zero line. That is when there's absolutely no movement. Now, if you look really closely at the resistance area, right, the flat area, you'll notice that the red dots are predominantly circling the black line, right? It's showing me that there's very little energy, very little strength. It's stuff that I don't want to be in. But then all of a sudden, boom, it flies up, and guess what? That is a breakout trade. It flies out, and I am right there waiting to see it. And if you look at my MACDs, it is super high. It has broken through the resistance area. This is how you spot a breakout trade. You have to have it drawn in. Now, I have a bonus trade for you guys. I call it the initial reaction trade setup. Again, we have to use those areas, the resistance areas, the support areas, and then we have to I personally use the MACDs to recognize when it has completely shifted and headed down. This is the initial reaction trade. What does this mean? So you want to be in a new trend as early as possible, right? Why? Think of yourself when you want to go biking. You are full on ready to go biking. You got your biking clothes, you got your bike, you head out the door. I know for a fact that in that moment, you're probably going to go at least 2 to 3 miles, right? Because you're full of energy and you're ready to go, right? However, would I consider betting on you to continue another 5 miles after you've already gone 3 miles? Not so much, because you're not as strong anymore. Maybe you're tired, or who knows what the reason is, right? So the same thing goes for a new trend. You want to be in as early as possible because that is the most amount of energy. Now, earlier you get in on that new trend, the better. However, when it goes to the consolidation area and it breaks through, basically what happens there is that there is another burst of energy in the same direction. Okay, so that's why I love these two trades the most. Like I said before, makingofadaytrader.com. All right. So here's the thing, guys. We have absolutely everything we need to take action. Everything we need to take action, correct? We have these amazing summits, these events, we have different presentations, we have a ton of YouTubers, we have all these different podcasters, books, right? But at the end of the day, how do you know that you are doing it right? How do you know that what you are looking at, that what you are trying to understand is the right thing to do, right? Because all of this is great, but at the end of the day, you're probably saying to yourself, well, how do I even get started? What do I do? I don't understand, right? And interestingly enough, I don't get this question asked from beginners only. I get this asked often from seasoned traders who are just saying, at this point, I just really want to be profitable and consistently. What do I need to do? What am I doing wrong, right? And interestingly enough, I personally have found this through my own experience, is a lot of times we lack just the basic understanding of what is happening right in front of us, right? Understanding the basics, which is the foundation of absolutely everything we do, can change absolutely everything. What happens a lot is with especially like beginner traders is we put in windows, but we've never built the walls to hold in the windows. So those windows keep on falling, right? Our trades just keep on getting stopped up because we don't have the foundation of the basics holding us in place, right? For example, I don't know if you could remember this, but if you could try, or if you have young kids that are just learning how to drive, when we first sat down in our car, we didn't know what to do. We weren't born with this information of learning how to drive a car, right? We learned this. This is something that we went through. We were taught the basics of driving. We were taught where's the clutch, where's the brakes, where's the accelerator, where's the gears, where's the steering wheel, where are the blinkers, right? This is not stuff that we are born with, but now it's just automatic because it's the basics. Without those basics, we can't continue driving either, correct? And it's the same thing. Let's pretend this is something that I want you to get really creative. Imagine somebody who's never ever been in a car, sits down in your car, and you tell them, all right, buckle up, it's going to save your life. And they're like, buckle up, what am I buckling up? No one ever showed them the seatbelt, right? It sounds pretty rudimentary, but you have to remember that at one point someone showed that to you. Otherwise, you would not have known, right? So it's the same thing for trading. And this was my own personal sad truth. I had spent over $20,000 on all these different trainings, on chat rooms, on mentorships, on sitting in these alert groups. I mean, you name it. But every time I was asking about what is a divergence? So can you please explain to me how to do the resistance area? Or other basic questions, I was either ignored or treated like I was born with this information. And because of that, I struggled for years, to the point where I remember sitting in a chat room and they were saying, oh, this looks like a really great trade. I didn't know why, but I wanted to be in it. I was already like trying to trade for a couple of years, totally struggling, totally losing. And guess what? I ended up losing almost $4,000 in 5 minutes because I had no idea why they were doing what they were doing. I was chasing the trade and I was just devastated. $4,000 within 5 minutes. And you know what I did? I quit. That's right. I ended up quitting because I just felt completely defeated. I felt like I was not moving forward. I kept on going backwards, and it was just devastating to me. And And all I wanted to do was become a trader, right? At this point, but I never learned the absolute basics. So I quit. But what's interesting, and I have a feeling that this goes for everybody in the room here today, that we are all bit by the trading bug. What does that mean? That it's something that it's never stops itching, correct? And you know why that is? Because deep down inside, we know we can do this, right? So we know that we can do this. And whenever I was looking, while I quit for about 4 months, I was still constantly saying to myself, you know what? If the other people could do it, I know that I could do it. And guess what? I came back and I decided to completely strip my charts of all my indicators. I also had 3 charts going at one point. I literally donated my high definition monitors to my garbage men. And I eventually just went back to the basics, learning from a bare naked chart, and then I slowly put in 2 indicators. That's the other thing. A lot of times, it's a massive misconception, is that we need to have a lot of indicators and be spending money on indicators. Every platform that you get, they have like over 100 universal indicators that you can use. You do not need to spend any more money on indicators. Okay. And when you actually understand the basics, you'll be amazed how simple it could be with just one chart and very, very few indicators. And that is exactly what I decided to do, was just study the basics. And interestingly enough, about a couple of years back, one of my students says to me, he's like, you know, Marina, your philosophy of teaching is very similar to Coach John Wooden. And I've never heard of Coach John Wooden before. So I had to, of course, look him up. And Coach John Wooden was, and probably is still, one of the most legendary coaches that ever existed. And his entire teaching and training philosophy, when in doubt, get back to the basics. And I'm talking about, this guy has had 88 national championships, 10 NCAAs. He trained A-star basketball players, but it didn't matter, because every season, no matter how many competitions they had won, no matter how many championships they had won, he would start them with the basics. How to tie your shoe, how to roll up your sock, how to dribble the ball. Why? Because it is so important. It is so important to understand the basics. You could be running on the court and you could get a blister, or you could sprain your ankle because your shoe wasn't tied properly. This is so important, guys, to just get back to the basics. So today I have a very special offer for participants only. My introductory course, Bootcamp for Day Trading. And you could do this course on any apparatus, laptops, iPads, tablets, phones, desktops, you name it. All of this, one-time price, $97. One-time price. Now, I want you guys to just take a few minutes. Please just come back here, stop whatever you're doing. Just give me the last few minutes so that you can see everything that you're going to be getting from me. Please just take these few minutes. I want you all to go in your browser and put in bootcampfordaytrading.com. Go to bootcampfordaytrading.com. You should be able to open it up. If you're unable to open it up because Google sometimes could put the different things, just go into the browser and it should be http bootcamp for day trading. The S sometimes could mess things up, but just go to bootcampfordaytrading.com and let's see what you guys would get for your $97. But first of all, I want you to just think of, what can we get on our investment today for $97? Do you guys like to play golf? Because me and my husband love to play golf. And guess what? It's like $250 per person, usually at a golf court. Seriously, per person. And going out to lunch, I'm not even talking about dinner. Lunch for 2 people today with wine could be around $97, right? We're not even talking about how it used to be that you could take out a whole family. So let me break down what you guys are going to be getting in this course. Again, you could go to bootcampfordaytrading.com and follow along. All right, you're going to get the simplified day trading package. First of all, platforms could be a total bottleneck for the majority of people. So we go over that immediately. There's a tutorial that on any platform you use, because they're all very similar. Plus, you could always ask me for help so that we can get into the fun stuff and not deal with figuring out how to set up our platform. Then we're going to really jump in to the dissection of the trends, right? We're going to really understand the upward trend, the sideways trend, the downward trend, and how to recognize the reversals and the divergences, because these will be the biggest aha moments you can have. They're my absolute favorite. Then we're going to understand the defense zone strategy. So, excuse me. So we're going to understand how to spot the support and resistance area. Remember I told you about the seatbelts, the safety zones of trading? Without those, you are putting yourself at a lot of risk, but we don't have to. It's super simple to understand and to be able to identify them. We go over it entirely. And divergences. Divergences are my absolute favorite, and I will show you how to spot them. And once you do, it's going to be just this huge aha moment for you all. And the breakouts, yay, we're going to master the breakouts. So interestingly enough, there is such a thing as a FOBO, the fake out breakout. So we are going to learn how to avoid those as well, because a lot of times it could be a quick breakout and right back down into the area. And we could recognize that and stay out of it. Plus, you'll get unlimited curriculum, access for life. So here's everything you guys are getting. And this is valued at $1,600. Everything here that you are going to get: the trader's workspace, dissection of the trends, areas, understanding them, the power of the breakout. Before we go any further, here's what some of my students had to say. And I do have students from all over the world, because that's the cool thing about trading, right? You could do it anywhere. So, Michelle, I just finished the boot camp. Best money I ever spent. Derek, you're the only mentor that truly checks the work and really helps out. Adrian, I am enjoying your boot camp course so much. I'm learning every day. But I want to share something really, really important with you. If you could just remember what I said earlier. How do you know you are doing it right? How do you know you're doing it right? So here's the thing. Without a mentor, without somebody who you are accountable to, it's impossible to know if you are doing it right, if you're looking at the chart and spotting there. So what I am including in this one-time $97 fee, no extra for one entire month, unlimited mentorship and coaching with me. Unlimited, guys. You'll have any question, anything you want for one entire month. Okay, one entire month, because having a mentor could be what truly takes you to the top, and I want to be your mentor. Okay, and on top of that, I also have a live chat room where it's me. We are in the live market implementing everything that we are learning, and this is on top of the mentorship. So all of this is valued at $2,600, one-time fee, $97, bootcamp4daytrading.com. Go there right now. And here is what you will be getting. Everything in the course. 30 days, one-on-one mentorship with me, unlimited questions, unlimited time, and a live chat room. All of this is worth less than the price of one trade. I don't know about you guys, but my trades are usually between $200 to $400. That's an average trade, right? $97, you get all of that, you can 10x your investment, and then you could go to 100 of these dinners. The thing is, though, because of my mentorship, I only have space for 25 people. All right, and I see that this room is the room is packed, and I normally sell out really, really quickly. So I would just hop on it right now, because it is only open to you guys right here. It's not open to anybody else. So I'm going to show you here. All right, so let's go into bootcamp4daytrading.com. Bootcamp, whoops, that's what I mean right here. You see how that is? So you see that S? You want to remove the S, and then it's going to bring you to the order form. Okay, so I see that the order form has already been put in here, and you guys could just go and click on it right away. But Anthony already put it in. Thanks, Anthony. So as you can see here, It is a one-time fee of $97. If you want to do a payment plan, I have for 2 months, $59, but you get access automatically. Oh, and guess what just popped up? The question box. Hello, this is awesome. Okay. Let me see here. Okay, I'm not sure if there's questions. Nothing to download. Peter, if you can just go in, you could write to me directly at the Trader Chick. Go into my website, Anthony put that in. I'm happy to send you as well I'm happy to send that to you as well. Okay, so please go in and just check that out. So this is the order form, guys, right here. If you go in to bootcampfortrading.com, again, it's the HTTP minus the S. That will make all the difference. Okay, hang on just 1 second. So this is the order form right here. And again, this is everything that you will be getting right now. So let's go in here together, bootcampfordaytrading.com. Let me know if you guys have any questions at all. I'm happy to let you know of any questions and respond to any of your questions and anything at all that you will need. And let me just see here. All right, so let's go back here. So again, bootcampfordaytrading.com, right there, bootcampfordaytrading.com. It will bring you to the order form right here, and you will get everything right here and 1 entire month of mentorship with me. And if you have any questions, please let me know. And I just want to say thank you so much for being here, for showing up, for wanting to learn more. And thanks, Anthony, so much for having me. I really, really appreciate it.
Oh, you're most welcome. We really appreciate having you. So thank you for being here and being so, I don't know, the audience just really loves you. So thanks. Thanks so much.
Thanks, Anthony.
Yep. Fantastic insights, Marina. We appreciate the clarity and actionable content. Your special offer is now in the chat box, so don't miss out. She's doing great. Thank you so much, Marina.
Thank you. Bye, everybody.
Coming up next is Jeff Tompkins, an award-winning hedge fund manager and founder of Altos Trading with over 24 years of trading experience. Jeff is here to help you find stocks that are poised to skyrocket, even in volatile markets. His presentation, How to Find Stocks That Are Ready to Skyrocket, where he reveals how to identify outperforming sectors and industries, which stocks within them are most likely to surge, and the strategy Jeff uses to stay ahead no matter the market conditions. Everyone, please welcome Jeff Tompkins.
Hopefully you can hear me okay.
Yeah, we got you. Thank you.
Excellent. Well, I'll go ahead and get started. Thanks for the introduction. Welcome, everybody. As Anthony mentioned, I'll be talking about how to find stocks that are ready to skyrocket. This is a new twist on relative strength. If any of you are familiar with the relative strength methodology, we're going to be diving into that a little bit and looking at a way to drastically improve it. So what I like to start out with is, it might not seem trading related, but you'll see how this ties in. If you haven't ever picked up Sam Parker's book, The 212-Degree Difference, I would encourage you to do so. It's a great read, and also a great quote there from Thomas Edison, looking at how close we often are to success without realizing it, and it often just takes that little extra degree to get us there. So we're going to talk a little bit about the 212-degree difference, because at 211 degrees, water's hot, right? It's you certainly wouldn't want to stick your hand or your foot in it, but it's not doing a whole lot. It's just kind of sitting there, right? Stagnant. But at 212 degrees, it starts to boil. Okay, so it just takes that one extra degree to make that difference. And with boiling water comes steam. And steam can power a locomotive train incredibly. So if you just put water that's 211 degrees into a steam engine, it's not going to do anything, right? But that one extra degree will power a locomotive, and it can make all the difference. Okay, and that one extra degree of effort in business and in trading and in investing and in life separates the good from the great. In fact, the average margin of victory for the last 25 years in all major tournaments combined was less than 3 strokes. Okay, incredible, right? The margin for victory between an Olympic gold medal and no medal at all is extremely small. In the men's 800-meter race, the margin of victory was 0.71 seconds. And in the Indy 500, the average margin for victory for the past 10 years has been 1.54 seconds. On average, the winner took home over $1.2 million. The second place prize, not too shabby either, but it was much, much less, about $621,000, just in that little minute difference of about a second. Okay, so that's a difference of over $657,000. So guys, it's your life. You're responsible for your results. We're going to turn up the heat on our session today. Okay, because if you want to get what you've never had, if you've been struggling in the markets, if you've been struggling with your trading, okay, you have to do what you've never done. And we're gonna focus on a methodology today that I think will spark a light bulb for you that will help you find stocks that are ready to explode. So before we dive in, I'll give you a brief background on myself. Again, I'm Jeff Tompkins. Great to have everybody here today. I have over 2 decades of experience trading the stock, options, and futures markets. Received my professional training at Morgan Stanley as an intern at the trade desk back in the early 2000s. And about 10 years ago, we're coming up on our 10-year anniversary. Later this year, I founded Altos Trading, where I'm the chief investment strategist. We've rapidly grown to over 60,000 members in over 100 countries across the globe. As Anthony mentioned, I'm also a hedge fund manager, so I do manage money for my clients at Altos Capital. And the strategies, tactics, methodologies that we'll cover in our session today are those that I've used inside my hedge fund with great success. Launched the fund back at the beginning of 2020. We've never had a losing year. So I'm excited to share a lot of this with you. And I'm also the founder and manager of some of the top performing options and stock alert services out there in the market today, and I'll share some results with you on the session. So before we do, I'll cover a quick disclaimer. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and options and must meet suitability requirements. We'll be going over some various results in our session today. I'm going to be sharing with you real world, real money results, okay? But just know that anything that I do share is not necessarily indicative of future performance. And so while they might be based on actual trades, including hypothetical results, due to the time critical nature of trading, brokerage fees, activity of other subscribers, we don't guarantee any and will mirror that performance. So by the end of our session today, you're going to discover how to gain the extra 1 degree trading edge that can put you ahead of some of the best traders and investors in the world. In fact, if you've ever seen the statistic regarding institutional money managers, hedge fund managers, less than 1% of the professional money management world is able to consistently beat the S&P 500. But the strategy I'll share with you today can allow you to do that. And whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets. So let's get back to the 212 degree difference. So as I mentioned, at 211 degrees, water's hot, right? But it's still standing still and it's not doing much. Kind of like stocks before they explode. So if you've been involved in the markets, you've likely noticed that often stocks will just kind of trade in a range, or they'll trade sideways for an extended period of time before they go into a strong directional trend. Okay, so as that temperature rises 1 degree, water starts to boil, and it creates that steam that can power a locomotive train. So keep this analogy in mind as we look at the strategy on the session, right? So that extra 1 degree makes all the difference. It's kind of like when a stock starts to outperform a major benchmark index or sector and then skyrockets. So if you've ever wondered, why all of a sudden does a stock take off? Well, typically there's going to be some catalyst to that, whether it's a fundamental factor or it's a news headline, whatever it might be. We don't care what that catalyst is. Okay, we just care about identifying that opportunity. So we're going to do this using what's called relative strength. Now, many of you may be familiar with a common indicator called the relative strength index indicator, okay, or the RSI. Now, this is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. So it's what we call a bounded oscillator, okay? So it has a minimum and a maximum, so 0 to 100. It's shown on a line graph, so it moves between 2 extremes. This was originally developed by J. Wells Wilder back in the 70s. He introduced it in his book, New Concepts in Technical Trading Systems, which is also a great read. If you haven't picked that up, I would encourage you to do so. But in terms of interpretation, okay, an RSI value of 70 or above indicates that a security is becoming overbought or overvalued. It might be primed for a trend reversal or a corrective pullback in price. Now, an RSI reading of 30 or below would typically indicate an oversold or undervalued condition. All right, but there are a couple problems with this, okay? And we're gonna talk about what these problems are and then address these. We're going to overcome these two major drawbacks to the RSI indicator. One is that stocks can remain overbought or oversold for extended periods of time. So it's that old John Maynard Keynes saying that the markets can remain irrational longer than you can remain solvent. And frankly, we're kind of seeing that type of market environment now, right? We've had this incredible run up in the markets since early April with not much pullback, okay? And at least many of us wondering, how is this, how is this irrational exuberance occurring, right? Well, that's a good example, right? So markets can continue to remain overbought or oversold for extended periods of time. That's a major problem as it relates to the RSI indicator. We'll take a look at that on a chart. So this is a past chart of Tesla with the RSI indicator plotted below the chart. All right, and so what do we notice here? Well, in August and September of this particular year, so if you look kind of on the left edge of the chart, the stock wasn't doing a whole lot. It was just kind of trading sideways, right? Until around mid-October, it starts to break out of its range. So it was in kind of a consolidation channel. It breaks out, and then an uptrend ensues. Now, what do we see on the as it relates to the RSI indicator? It's giving us overbought readings. So notice how it quickly rises above that 70 level as the stock is trending upwards, okay? Then kind of dips back below for a period of time in late November, early December, and then it's back up, giving us extreme overbought ratings. But what do we notice is happening with the shares of Tesla? They're skyrocketing. So what's going on here? Well, this ties into problem number one, right? That the RSI indicator is telling the stock is overbought and maybe primed for a pullback, but the shares of Tesla are skyrocketing. So it gave us misleading information. Here's another example. This is a past chart of Best Buy, okay? Notice how the stock's in a well-defined uptrend, okay? But the RSI indicator is bumping up against that overbought level in May, okay? The stock continues to go up. Then in July and August, we're getting extreme overbought readings. But what does the stock do? It continues to go up. Okay, so this is the problem. Okay, if you're using this indicator as a overbought oversold oscillator, it's going to give you misleading information. Okay. We'll look at one more example. This is Amazon. So past chart of Amazon, what do we see the stock doing? It's in a well-defined uptrend. What is the RSI indicator telling us? The stock's overbought. It told us it was overbought in June. It told us it was overbought in July. But the stock continued to go up. All right, so we're gonna look at a new approach to relative strength, because relative strength is a extremely valuable methodology if you know how to use it correctly. So we're gonna look at a twist on the traditional RSI indicator. Okay, now this is, again, a chart of Amazon, okay? But notice how, and I'm gonna actually give you the formula here to calculate this, but I've visualized it on a chart here for you. Notice how in May, June, July, August, September, October, this new approach is telling us that Amazon is a strong relative strength performer. And sure enough, what is the stock doing at that time? It's going up. This is when we want to look at buying shares. Okay, but then around early November, that all shifts. Okay, Amazon begins to underperform. And what do we know happens with the shares of the stock? They go into a sideways channel. So they're ranging for December, January, February, March, into April. So we may not want to, buy shares of the stock, or we may want to look at a different approach or strategy to take advantage of the consolidation channel. Okay, so notice the difference here. But this leads us to problem number two. So the relative strength indicator only measures the current strength of a stock relative to its past price. And in fact, this is what virtually every indicator does. It simply uses the current price data and compares it to past price data. Can you see the problem with that? If a stock is going up, of course the RSI indicator is going to tell you that it's eventually overbought, because it's comparing its current price to its past price. So what good does that do? You don't even need the indicator. You can just look at the price chart. But there's a solution to all this. Wouldn't it make more sense to identify a top performing index or sector and select a stock that is outperforming it? So rather than comparing the stock to itself, right, its current price to its past price, why not compare it, use an actual comparator, right, that we're comparing it to a benchmark index or sector. And that extra 1 degree difference can take a losing system and give it the steam that can spot the next stock that's ready to explode. So we're going to start to dig deeper into how to do this. Looking at the 1 degree difference, okay, often when a stock begins to outperform a major index, industry, or sector, it goes on to make a big move up. So again, if you've ever wondered, why is a stock that was just basically doing nothing for, maybe weeks, even months, all of a sudden start to take off to the upside? Well, the key is to identify stocks that shift from underperforming to outperforming relative to a benchmark index or sector. And once we identify these opportunities, they can be the golden ticket to beating the market. Okay, you just have to understand the process. And I'm going to walk you through a simple 4-step process to do this. But to use the famous quote from Jim Cramer, right, there's always a bull market somewhere. So even when we're in a market correction or a full-on bear market, relative strength can help us identify opportunities to outperform the broader markets. So even in the worst market conditions, there are always stocks that are going up, okay? And again, the question is, why is that, right? Well, it's all relative strength, and that can help us spot these opportunities. So I'm gonna show you kind of a comparison here now between the old RSI indicator, I call it the antiquated RSI indicator. I don't use it. I never will use it. I'll show you what I do use, but let's look at these in comparison on the chart of Tesla that we just looked at. Okay, once again, in August and September of this particular year, right, the stock wasn't doing a whole lot. And you can see that the formula that I'll reveal to you here momentarily was telling us that. We see a negative print, right? So you see the red bars there, right? So it's telling us the stock is underperforming its benchmark. Okay, what's the RSI indicator doing? It's rising. Okay, it's getting close to telling us that Tesla's overbought, but the stock hasn't even really done anything. Okay, but then something interesting happens around the 3rd week of September of this prior year. Okay, the formula then tells us that Tesla begins to outperform. What's really cool here is look how it gave us about a month of advance notice before that actual breakout occurred. So it gave us almost but just almost spot on a month of advance notice that Tesla was about to skyrocket. Okay, but what was the RSI indicator doing? It was telling us the stock was overbought. Okay, so this is where we know the exact day this occurs, the exact day. Okay, the RSI indicator didn't know that. Tesla went on to make over 1,800% move up in price in just a matter of a few months. So we're going to throw the old RSI indicator out the window, and we're now going to focus on the new twist of relative strength. So this is another chart, Teradata. Okay, we're going to compare Teradata to the S&P. Now this is the past year. Okay, so this is not a current chart. At this point in time, the S&P 500 was a strong performer. The market was doing very well. Okay, so we could simply just go out and buy an index product like the SPY. Okay, but what if we want to actually beat it? What if we want to outperform it? Well, we can see that in October, November, December, in early January even, Teradata was not doing a whole lot. It was just in a relatively tight consolidation channel. Okay, until around the 3rd week of January. Okay, the formula tells us it begins to outperform its benchmark, in this case, the S&P 500 index. Okay, if the S&P 500 is already a strong performer and something's outperforming it, we want to pay attention. And notice how in late January into February and March, okay, the formula tells us that Teradata is a strong relative performer. And what does the stock do? It goes up 125%. And we knew the exact day that this occurred in January of this year, prior year. Okay, we knew the exact day. And notice how it was before the stock actually skyrocketed. Okay, the RSI is going to give us a huge lag. Okay, and it's going to give us misleading information. Here's another example on Futu. This is actually what I did in my hedge fund of this prior year. Okay, I used this formula. I noticed that previously Futu was underperforming its benchmark, the S&P 500. Okay, it then began to outperform. I knew the exact day it happened. I went in and bought shares. There it is. And the stock went up 380%. And it continued to outperform. So let's now walk through the 4 steps so that you can identify these opportunities on your own. Okay, so step 1 is first to identify a top performing industry or sector. And I'm going to show you how to do that. So I'm just going to go through the steps now, and then we'll break each step down. Step 2 is to screen for stocks within that industry or sector. Step 3 is to compare the relative strength of each stock to an index or ETF that tracks that industry or sector. And finally, step 4 is to select a stock that changes from underperforming to overperforming. Okay, this is that exact day, and we'll know the exact day, okay, that occurs. So let's dig into each of these steps. The secret to finding the top performing sectors. Okay, there's a number of ways to do this. There's a great resource. It's a free tool out there. I think they offer paid subscriptions. We don't have any affiliation with FinViz, but you don't need them. Okay, you can use their freebie version. If you just go to finviz.com, you're going to click on the groups tab up at the top, okay, and that's going to take you to a relative performance page. Now this again is not current, so don't look at this thinking that industrials are the top performer over the past week. But I'm going to point a few things out here. Okay, so notice how it breaks it down with 1 week, 1 month, 3 month, half year relative performance. Okay, those are the 4 time intervals we want to focus on. What we're looking for is an industry or sector that is outperforming across these 4 time intervals and ranks in the top 3 across all 4. So notice over the past week at this point in time, industrials was the top performer. It was outperforming the S&P 500 by just under 4%. We go out to a 1 month time interval. We see it at the number 2 spot, outperforming the S&P by almost 4.5%. We go out to a 3 month time interval. We see it at the number 3 spot, outperforming the S&P 500 by just under 12%. We look at a 6 month time interval. There it is again at the number 3 spot, outperforming the S&P by just under 30%. So wouldn't it make sense if we're looking for trading or investment opportunities to focus on the industrial sector? So we've identified the industrials as ranking in the top 3 across all 4 time intervals. So then what do we do? Okay, we're going to start screening for opportunities inside the industrial sector. Okay, here's an example. This is Builders First Source, ticker BLDR. Okay, in June and July of this prior year, okay, the stock again wasn't doing a whole lot. In fact, it was trading down there in most of June into around mid-July. Okay, now when we apply the formula that I'll give you here in just a second, it told us that around the 3rd week of July, Builders First Source began to outperform its benchmark, which in this case is industrials. Okay, and I'll typically use a sector ETF as my benchmark. So like if we were looking at energy, for example, we could use the XLE. Okay, and we're going to plug the formula in again. I'll give that to you in just a second, but I want you to visualize this. So here's the outperformance. The stock goes up 113%. Another industrial stock, John Deere. Most of us are familiar with the yellow and green John Deere tractors, right? Ticker DE. Okay, stock's not doing much in July, at least the early part of July, until around the 3rd week of that month. It begins to outperform. We know the exact day that occurs. Okay, you can see it go from underperforming to outperforming. Stock goes up 122%. So here's the formula that we're going to use. It looks a little complex. I'll walk you through it. It's actually quite simple. We're just using 2 data points. Okay, we're using data point 1, which is the stock price. And by the way, I'm saying stock, but you can do this with any asset. Okay, so that's our data point 1. Data point 2 is our reference price. So remember, with the old antiquated RSI indicator, it just compares itself to itself. It compares the current price of the stock to the past price of the stock. Okay, here we're using a benchmark index sector, ETF. That's our data point 2. So the logic is if the stock price is greater than 0, and of course it obviously it should be, otherwise you wouldn't buy shares of it, and the reference price is greater than 0, then we take the log value, which is the log times the stock price divided by the reference price. So just data point 1 divided by data point 2. Now to get the relative strength number, okay, we're going to use two inputs, an RS length of 90 days and an EMA or exponential moving average length of 3 periods. Okay, so we take the average, right, of the log value minus the log value length, again, that's 90 days, and the EMA length 3 days, and then we're going to multiply it by 100, and that's going to spit out a number. Okay, that number is either going to be positive or negative. If it's negative, then data point 1, which is the stock price, the stock we're looking at trading, okay, is underperforming. We don't want to buy it. If the number's positive, okay, it's outperforming on a relative strength basis. It's outperforming its benchmark. We want to look at potentially buying it. Okay, so that's the formula. All right, and what you want to look for is the day when it's when that formula spits out a negative number. Okay, and then on the following day spits out a positive number. So you want to look for that exact day when it shifts from a negative to a positive. Okay. Now, once we've identified these, and let's say we've placed the trade, right? Trade management's critical. So let's talk about locking in profits. I use a profit target approach. So I'll explain the reason for that, but I've been doing this for many, many years. We've been doing this for many, many years with our members at Altos. And historically speaking, so statistically, a very high percentage of these, probably somewhere around 90% of these opportunities go on to make an initial 5 to 10% move up. So that's where I set my initial profit target, okay? But as we looked at in some of those chart examples, they can also go on to make very significant double, triple, even quadruple percentage gains. So I'll scale out of the first half of my position at target 1, which again is a 5 to 10% move up in the stock. And then I'll leave the remaining half of the position open and manage it with a 10% trailing stop to help capture the big gains. Now, of course, we can't, most of the time can't capture all of those, but we want to capture as much of that as possible. Okay, so for that reason, we use a 10% trailing stop. Now, the really cool thing is we can apply this system to options trading. So if any of you trade directional option strategies, the relative strength system is ideal for timing directional option strategies, which are very time critical, right, strategy. So whether it's buying calls, selling puts, vertical call spreads, bull put credit spreads, calendar spreads, there's a, the list goes on and on. You've got to be spot on in your timing. Okay, otherwise you're facing theta decay and a lot of the other drawbacks to being a long directional options trader. And that's where the relative strength system comes in. I do a lot of trading in the options market, okay, and I use this approach for my directional options strategy. And the cool thing is, there's a 5% move up in a stock can often equate to 100% increase in the premium of the option. Okay, let's look at a real world example. This is Apollo, ticker APO. Okay, applying the formula that I just gave you. At this point in time, the S&P 500 was a very strong performer. Okay, we were in the midst of a decade-long secular bull market. We want to find opportunities that are outperforming, and we want to know the exact day that occurs. So in this case, discovered Apollo. Okay, plugged it in the formula, compared it to its benchmark, the S&P 500, and in April of this prior year, it wasn't doing a whole lot in the first half of the month or so. But in the second half of April, something changes. Okay, that formula went from spitting out a negative number to a positive number. And shortly thereafter, the stock skyrockets. So how could we have played this with options? Well, on April 16th, again, we know the exact day. Okay, we know that Apollo went from underperforming to outperforming on April 16th of 2019. Okay, so the relative strength formula told us that Apollo Group was beginning to outperform the S&P 500, which was already in a strong uptrend. On that day, the stock closed at $29.66 a share. So we could go in if we wanted to and either buy shares Or we could do what? We could buy a call option. So what if we bought an at the money strike call? So the September 30 strike calls at that time were trading for $1.70 a contract. Okay, here they are. So for our example, we'll just say we go in and we're going to buy a 10 lot, 10 contracts at the 30 strike out at a September 20th expiration. Okay, that would be, if you were just to buy one contract, that would be an investment of 170 bucks. Okay, on a 10 lot, you're looking at a $1,700 investment. And that's of course before broker commissions and fees. So let's see what happened. Well, the formula told us, again, on April 16th, there was a high likelihood this stock was going to take off to the upside. And only 6 days later, that happened. It was trading at 5%. So remember, that's our initial profit target goal. And that resulted in nearly 100% move in the option. There's the P&L. Okay, again, a $1,700 investment is now up $1,650. So we can also use that scaling out approach with options. So rather, we have a couple of choices here, right? We can close out the entire position, book that $1,650 in profit on a 10 lot, or we could close half of the contracts, keep the remaining half open, move our stop up to break even. We've now got essentially a risk-free trade because the formula continued to show us, as we just looked at on the chart, that Apollo was continuing to outperform. Okay, if it had shifted to negative, we would have probably just booked profits on the entire position. But what happens if we just scale out? So the remaining 5 contracts would have picked up $4,225. That's a $5,050 profit potential on a $1,700 investment, or a 297% ROI. Okay. Pretty incredible. So now you know that when a stock gains that extra 1 degree and begins to outperform a top performing index or sector, it starts to boil and often results in explosive moves to the upside. And I've revealed my 4-step process for identifying these opportunities. But it does take a considerable amount of time and work to sift through over 5,000 stocks every week to find the very best. And this is what I do. I do this every single week. Okay, I do all the homework. I find the best opportunities, and I send them out to our members at Altos. So I want to offer you the opportunity to let us do the heavy lifting for you and receive 5 to 10 opportunities just like this to your inbox and smartphone every single week. Now, this number will vary depending on market conditions. So sometimes it might be more, sometimes it might be less. But you can actually take any indicator system that you're currently using and apply it to our top performing relative strength stocks. So a lot of our members have, systems that they're using, or strategies or methodologies or indicators that they like and might be working okay for them. Okay, but they don't want to do all the legwork to find the stocks to apply them to, or they're not sure they're picking the best ones. Okay, so a lot of our members will take these picks, these opportunities, and apply them to something they're already doing to really supercharge it. So this is what our relative strength alert service is all about. This is an exclusive membership that gives you access to our best trades right to your inbox. You don't have to sit and watch your computer all day. Okay, we actually send these out after market hours. So again, on the very day that stock begins to outperform, you're going to know via email and priority text message. You're going to get it right to your smartphone, right to your email inbox. You're going to get that list of stocks that are outperforming on that exact day with easy to read instructions, including profit target levels. Again, the number will vary based on market conditions. Okay, we never obviously force opportunities. We strictly adhere to this 4-step process every single week. Okay, but on average, you're probably going to get somewhere, I would say more like between 15 and 30 opportunities every single week. So you're going to get the ticker symbol for each stock that we've identified, the name of the company, the current price and suggested entry price, profit target 1, profit target 2, and our analysis of why the stock is expected to outperform in the near future. Here's some recent examples of alerts we've done. Okay, these are real world that we sent out to our members using this exact 4-step process. XPEV went up 8% in 1 day after we alerted our members. Vail went up 11% in 4 days after we alerted our members. DocuSign went up 12% in a single day. US Steel went up 16% in 1 day. TECL went up 25% in 12 days. SGH went up 31% in 5 days. MCHP went up 15% in 14 days. ESI went up 9% in 14 days. SGFY went up 13% in 7 days. This is just a handful of examples of opportunities that we found using the relative strength approach. So we've built a really powerful package. Again, that's going to include 15 to 20 trade alerts per month, short to medium term swing trades. Okay, these typically play out very quickly in terms of hitting that initial 5 to 10% profit target. And again, a lot of these go on to make much more significant upside moves. That might take, a little bit longer, weeks, maybe months, that have the potential for large percentage gains. So you're going to be alerted the very day a stock begins to outperform a top performing sector or index. Okay. Now there's more that comes in this package. So I'm going to walk you through each thing and then let you know how you can get your hands on this. Okay. So you're going to get an annual subscription to our relative strength signal service. Okay. We normally retail this service for $1,499, which is by itself is very well worth it, as you can see based on the results I've shared with you. You're going to get priority text alerts to your phone. You're also going to get weekly live strategy sessions with me. Every Tuesday at 7 p.m. Eastern, we meet with our members and we do an overall market analysis. We map out key levels on the major indices, and then we cover a specific strategy each week, kind of like we did on our session today with the relative strength strategy. Okay, that normally retails for $9.97, but you're going to get weekly access to me and you're going to learn a whole lot more. The relative strength system is just one of our powerful systems that we use. We're also going to throw in an online training curriculum that focuses on trade management and trade adjustments. And we'll walk you through different strategies. This relates specifically to options, where you can mitigate risk, mitigate losses, and even in some cases take losing options trades and transform them into net profitable outcomes. Okay, you're going to get all that online curriculum and training, which normally retails for $900. It's a great supplement to the strategy as well. Again, all the alerts are delivered after the market closes. So if you have a day job or you're retired and out doing something else that you'd love to do, this is perfect for you. You don't need to be at your computer that day. Okay, you're going to know after market hours, and you're going to have all those opportunities right in front of you for when the market opens the next day. Okay, and you're going to get an abundance of opportunities. Okay, even in bear markets, we actually killed it with this strategy in 2022 when we were in a full-on bear market for the entire year. Okay, this system helped us spot some incredible opportunities. But ultimately, this is designed to help you to learn to trade stock and options with consistency, which of course is prices. So we can't put a price tag on that. Okay, and there's a couple of bonuses in this package as well. Bonus number 1 is our professional trading series online course. Okay, this normally retails for $9.97. This is over 10 hours of content of our very best strategies, all built into an easy to follow online curriculum that you can watch at your leisure. You're also going to get my latest ebook, How to Create Risk-Free Trades. This is a great supplement to the relative strength system that walks through money management tactics to mitigate risk and even in some cases eliminate it from your trades. This ebook normally retails for $97, but you're getting this as part of your package as well. So the total retail value on this package is over $4,700. If you went and bought all of this stuff from us individually, that's what you would have to pay. Today only, we're knocking a huge amount off this price. So if you amortize this out over a year, okay, this breaks down to an 88% discount. So only $49 a month. Okay, so if you want everything you see here on your screen for an incredible steal, we're practically giving this away. altostrading.com/RS2025 is the link. You can hop right over there and claim one of the limited seats. So we're only offering this discount to the first 20 people. Okay, because again, we don't make money on this, right? This is a loss leader for us. We're hoping that you get in the door and you see all the other really cool stuff that we have to offer at Altos, and that you stick with us for many, many years. All right, so this is again, we're pretty much giving this away. It's only $49 a month. You get almost $5,000 worth of stuff All right, and again, that's altostrading.com/RS2025 for that 88% discount. Now we've designed this for everyone from beginners to seasoned traders. So if you're just starting out, that's fine. You're gonna get all the exact instructions. There's not gonna be any guesswork. It's very, very simple, okay? If you've been trading for a long time and you're just looking for that extra edge to supercharge what you're already doing, okay? This is built for you as well. It's built for people who work full-time, part-time, or retired and out doing something else they love to do, okay? And don't wanna be at their computer watching a stock chart all day, or spending, you know, hours and hours each week digging through thousands and thousands of stocks and applying a formula, right? If you don't want to do that, then we're here to do that for you. Our team does all the legwork. If you want to do it, you have the knowledge now to do that, right? So totally up to you. This is for traders worldwide. We have students in over 100 countries across the globe, and that are using this strategy, right? That are using our methodologies, tools, systems, etc. This is for any size account, so you get to decide how many shares to purchase. Okay, we're not managing your money for you. We're not telling you what your position sizing should be, what your risk exposure should be. That's totally up to you. You can trade one share, you can trade 1,000 shares or more. It's up to you. This is for traders who want to learn how to trade on their own, and for those who want to be spoon-fed. That's a big thing for us at Altos. A lot of companies out there will just teach you, but not actually back it up with real world, real money results, or they'll just basically spoon feed you and give you stuff, and you really are just left crossing your fingers hoping it works, and not teach you how or why they're doing it. So we do both, and that's what we've done on our session today. You're free to go out and do this on your own. If you want to do all the homework and legwork, that's totally up to you. I want you to have the knowledge to do that. But I think it's better to have the knowledge and not have to do all the legwork, right? So again, that link is altostrading.com/RS2025. Once you join, you're automatically going to be added to our membership list and directed to the Trade Alert membership registration page. Once you register, you're going to receive a confirmation email in the next few hours confirming your access. You're going to be able to go in there, see our current picks this week. In fact, I just sent out 3 new opportunities last night to our members. So you're going to get access to all that in the members area. Okay, you'll get your login to the portal, and you're going to get your very first alerts. Again, those already went out last night. They're sitting there waiting for you. You're also going to get the 2 special bonuses: our professional trading series online course. This is over 10 hours of content. We've actually built this up and added to it. 9 modules covering our very best option stock and Forex strategies. You can watch this anytime. The trading doesn't expire. It includes all future updates and additions. It also comes with our coaching trade tracker spreadsheet to keep track of all your trades. It includes trade selection, trade adjustment. So we go into trade management, chart reading, a whole lot more. You're also going to get bonus number 2, how to create risk-free trades. Okay, this is my latest ebook. Again, great supplement to this strategy. It walks through different money management tactics to mitigate risk and in some cases eliminate it from your trades. We also have a guarantee. So if you aren't convinced this is the best strategy for you, we do offer a full 30-day money-back guarantee. Okay, so just shoot us an email, let us know. We're happy to do that. Obviously, we want serious traders and investors who are committed and will stick with this for many, many years. And when you see the results, I think that you will. So I'm gonna go ahead and open it up to questions. I have just a few minutes left. I want to also give you our contact information. Our email is support@altostrading.com. Our toll-free number is 800-895-9348. I don't think anyone pays tolls anymore on phone calls, but I'm used to saying that. But 800-895-9348. Again, that link is altostrading.com/RS2025. Here's everything that you get in the package. Again, it's over the course of a year, we'll save you 88% off the retail value. You're getting almost $5,000 worth of products and services. This is limited to 20 seats. Okay, these are going to go, they're already going very fast. There's a few left at the discount, but once those are all scooped up, it will go back to the retail price. So if you want that 88% discount, please don't hesitate, because they are going to go very quickly here. Okay, so if you have any questions, please do put those in the Q&A box. Let me get that pulled up here, and I'm happy to answer those. Bob asks, sounds like you send out bullish alerts. Do you also send out bearish alerts? Good question. So this strategy, we do in other services. We have other alert services that we offer at Altos. In this particular service, these are long only opportunities. So they're just bullish opportunities. But as I mentioned, incredibly, even in bear markets, so like if we go back to 2022, we find plenty of opportunities. So there's some really incredible opportunities. And periodically we run, historical stats on this strategy, because again, we issue a lot of alerts. I mean, you're going to get probably in the vicinity of 150 to 200 opportunities a year. But again, I have to look back at our past that we run it periodically. I think the last time we did, about 88% of these opportunities went on to hit their initial 5 to 10% profit target, and a very high percentage went on to make much more significant upside percentage moves. So the strategy is performed incredibly well, and we've been running this for many years. So good question there from Bob. Srinavis asked, $49 per month, can I cancel anytime? Yeah, so we don't lock you into a contract or commitments. So you don't have to pay the full year up front. This is a month to month. You can cancel anytime. So if you just want to try it out for a month, it's $49. So yeah, no contracts, no commitments. But you are, by the way, grandfathered in at that discount. So we'll never raise the price on you. As long as you remain a relative strength member, you're locked in at that discount. Okay. Let's just kind of scanning through here on questions. Yeah, so again, it's going to be based on market conditions. So like this week, last week, we sent out 3 new alerts. Okay. I think in a recent prior week, we sent out 5. So it's going to vary a little bit week to week based on market conditions. But there are opportunities every week. There aren't weeks where we don't have opportunities. So you're going to get picks every single week, 52 weeks out of the year. Got a question, what's been the average percentage gain from your customers? Well, of course, I can't speak for our members because I don't have direct access to their trading accounts. So I can just speak to, the alerts themselves. And again, I think we're somewhere around 88% of our picks are hitting initial 5 to 10% profit target. A lot of these have gone up to make, double, triple digit returns. Those will typically take a little bit longer. Some of them happen very quickly. I gave you some of the real world examples there that we sent out to our members. We've had picks that have gone up, 100% plus in just a week or so. But not everyone's gonna, fair and balanced, not everyone's going to make a double or triple digit gain, right? So we're sending you our very, very best every week. Okay, these are our top picks. So I just have less than a minute here, so I'm going to go ahead and wrap up. I want to thank all of you for being here. I hope you got a lot out of the session. I hope you find the relative strength, and specifically the new twist on relative strength methodology, a valuable addition to your trading arsenal. I want to welcome all of our new members who are joining us. Again, we'll get you all set up today. You'll be up and running, and you'll get access to those 3 new picks for this week. Want to thank Anthony and the whole team for having me here on the session. It's always a pleasure, and I'll pass it back to you.
Thank you so much, Jeff. That was great, packed with value and real market perspective as always. Let's be that 1%. Thank you, Jeff. Appreciate it.
Thank you.
Jeff's special offer is now live in the chat box, so be sure to grab it. Now it's time to hear from Chris Sayre, lead consultant at bigtrends.com with more than 30 years of experience in financial markets. Today, Chris will share how our SPY option strategy has been doubling overnight. Let me bring up Jeff's screen here. There we go. Sorry. Chris, you should be organizer now. Today, Chris is going to share how how our SPY options strategy has been doubling overnight. Inside, he'll break down why his team trades only SPY options, how they blend price action with ATR to find quality trades, and how a disciplined 100% profit target drives consistent results. Let's hear it from Chris Sayre. Chris, are you there?
Yeah, Anthony,
Hey.
I'm still seeing Jeff's screen.
I see that too. Yeah.
So I don't know if he's still, there we go. All right, let's see. Now, it's not allowing me to share my screen.
Let me
I see
try
you
this.
have me as organizer. Here we go. We
There you
good
go.
now?
Okay, thank you.
Good? How you been, man?
Good. How about you?
Doing all right. Thank you for having us. I really appreciate that. Always
for
a
being
pleasure
here.
to speak to you and your team at Traders Corner. Can you hear me, Anthony?
Yeah, it's all yours. I'm
Okay.
sorry.
All right.
Yeah.
All right. I didn't know if there was any more coming or anything like that. All right. I'll get rolling. I know you've got me on a time clock. All right. Hey, folks, this is Chris Sayre, lead consultant at bigtrends.com. As Anthony was telling you, we're going to talk about how our SPY option strategy has been doubling overnight. The name of the strategy is called Overnight SPY Trader, right? Very simplistic, easy to understand. Before I go any further, got to read the disclaimer to you. You do see some contact information at the bottom of the slide there. The information provided in this presentation is based on our proprietary research and is intended for illustrative purposes only and are not to be construed as specific advisory recommendations. Stocks and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or methodology is not necessarily indicative of future results. See our terms of use on the bigtrends.com homepage for more information. So real quickly, Big Trends, if you've never heard of us, Big Trends has been around since November of 1999. It was founded by Price Headley. He is our founder and CEO. Fun little fact for you, I was actually one of Price's earliest clients back when he launched Big Trends. And as you can see, the last bullet point there on the slide, I joined Price and his team more than 13 years ago. So I'm quickly approaching my 14th anniversary with Price and the team, and Big Trends will be quickly approaching its 26th anniversary. We've seen and experienced a lot of things. Enough about us. Let's talk about you and what you're going to learn today. So as I told you on the opening slide, the name of the strategy is called Overnight SPY Trader. We're going to talk about how to get laser focused and boost returns, tactics from our 25 plus years of experience. What do I mean by that? We are only trading one security in our newsletter, SPY. If you're not familiar with SPY, it's one of the most heavily traded securities day in and day out. It tracks the S&P 500. Great liquidity, great opportunity, regardless of what size trader you are. Success stories and chart examples. See what trades look like. 56 years old, been doing this since I was 18 years old. Over the years, I have found that most of us learn from multiple examples, visual clues, visual representation. So lots of chart examples for you. And again, the name of the strategy is called Overnight SPY Trader. Going to reveal some of the bullet points about that strategy and how you can get these trades starting today. So capturing the overnight moves on the S&P 500 has historically been paramount to success. Let me share some data with you. So we got this data from the Chartist.com out of Australia. The latest that they published this was in 2022, starting back in 2000. So just about 22 years worth of data. And what you're going to see with the blue line here is that's buying the SPY at the open and closing that trade at the end of the day. All right, so in and out, day trade. But if you look at this orange line, right, it's buying at the close and exiting at the open. Now, don't click away, stop watching. Our strategy is taking it further than that, but it just shows you you can make some moves overnight. And we did so last night for our clients. More about that here in just a minute. So some strategy guidelines. The average holding period, 1 day or less, but no day trades, okay? So you don't have to worry about day trades. What type of strategy? 4 different price action patterns analyzed on a daily chart. So as I told you, numerous chart examples. Every candle, every bar that you see on those charts is going to represent 1 day of trading action. Now, which options do we trade in our overnight SPY Trader? We're doing straight calls and puts. So no spreads of any kind, no debit spreads, credit spreads, butterflies, straddles, strangles, condors, none of that stuff. If you can simply buy a call or simply buy a put, you can subscribe to our overnight SPY trader. We're using 2 DTE expiration. What does that mean? That just means 2 days until expiration. Now, you may have noticed on my bio, I was a stockbroker right out of college. And back then in the early 90s, the only options that we had were monthly options expiring every Friday. Now, fast forward, we still have those, but the industry chain has changed quite a bit. SPY actually has options that expire every day. So when we enter a position, we're going out 2 days until expiration. So that's what 2 DTE means. Now, how many trades per month? Being on the front lines here at Big Trends, one of the things that I can tell you that I hear from traders just like yourself, most of you are swing traders. That's how you identify yourself. And you're looking for action. So overnight SPY trader, up to 16 signals per month. So if you figure the average trading month is 21 days, you're talking about a signal almost every day. Now, a lot has changed since Big Trends was started over 25 years ago. Mobile trading blows me away. Like I said, I've been doing this for almost 40 years. When I first started at 18 years old, I had to watch the ticker tape on television. It was delayed. And I'd have to call the broker to get real-time trade information, right? And when I was a broker, same was happening for my clients. There was no immediate action on your computer, tablet, any of that stuff. So now we have mobile trading. You can be sitting poolside at the beach, on the golf course, wherever you can trade. Daily expirations, as I was just sharing with you, the SPY has options that expire every day. And here's a big one, substantially cheaper commissions. If you'd have called me to place a trade back in the early 90s, you were looking at $100 or more to put on a trade. Now you can do it for as little as $1 per contract for options, or with stocks and ETFs, vast majority of them are commission free. So lots of changes over the years. So with these factors, the search of frequency is what most traders are looking for, as I shared with you earlier. Now, of course, anyone can enter SPY into their trading platform and start firing off trades, but focusing on numerous signals with a quantifiable edge requires a more deliberate and strategic approach. Now, here at Big Trends, I have a degree, Bachelor's of Business Administration with an emphasis in finance. I've worked on the money management side. I know how to read financial statements, all right? Price Headley, our founder and CEO, degree in economics from Duke University, has the CFA designation. If you're not familiar with that, Chartered Financial Analyst. We know how to read financial statements. We don't do that here at Big Trends. We are technicians. We are technical analysts, all right? We are short-term trading. We're not trying to call absolute tops. We're not trying to call absolute bottoms. We're not looking for long-term investments in overnight SPY trader. So that's why we developed overnight SPY trader. This strategy, as I said earlier, is designed to find as many as 16 new trading signals per month. So how does it work? Let's kick off today's event with today's winning trade. That's right. This morning, our clients, to put the trade on that we sent out to them yesterday afternoon, made 130.31%. Now, I want to point some things out. I mentioned this earlier. Every bar, every candle, every green, every red candle you see represents 1 day of trading action. Okay? So these are daily candles. I also want to point out down here at the bottom right, all trades today are going to be based on allocating up to, but no more than $1,000 a trade. Please hear me when I say this. You do not have to allocate up to $1,000 per trade to be a subscriber. As a matter of fact, over the past 12 months, the average recommendation you could do for $400 or less on average. The average contract price has been $359. More about that later. However, as I said earlier, if you're a larger trader, because SPY is so liquid, if your account allows it, you can trade a lot more than $1,000 per trade. But please always trade with what fits in your financial situation. So yesterday, we had a what? We had a Fed announcement. We had earnings coming out in the morning. We had earnings coming out after the close. Again, we don't worry about any of that stuff. To us, that's all noise. We are technicians. So our team is looking at this price action. SPY had been climbing up, right? Then it's rolling over. And it dropped pretty hard yesterday afternoon. Now, here's a little key to you. These trades are put out at 3:45 p.m. Eastern time until 4:15 p.m. Eastern time. And if you're newer to options, you say, well, the bell rings at 4 o'clock Eastern. That's true. However, the SPY options trade until 4:15 p.m. Eastern time. So we entered, and you'll see here at about 3:47, held the trade and got this gap up this morning, and that's how we made 130.31%. Now, we target 100% on these trades. We made more than 100 because of the nice gap up. To stop, before anybody asks, we use a 50% stop. So as I told you, we use a daily chart. New trades can only trigger once per day. So you don't need to screen watch all day long. You need to be available that last little bit of the trading day. 3:45 p.m. Eastern time are when these trades are signaled. As I just shared with you, these options trade until 4:15. We believe this defined scanning session eliminates noise and allows us to use the power of those 2-day until expiration options. Why do I have eliminates noise there? As I was just sharing with you, yesterday was a Fed announcement. Big companies releasing earnings yesterday morning. Lots of companies releasing earnings after the close yesterday. We don't worry about any of that stuff. We're trading an index. We don't think. Right? We don't, oh, what about this? What about that? No, we follow the trading system. We eliminate the noise. Scanning for signals every day has resulted in high trade frequency, as we've discussed, and large profit potential, as I have shown you. Now, how to get the most bang for your buck while managing your risk? Well, let me share some details with you. So these 2-day until expiration options allows us to get tons of leverage for a very small investment. So as I shared with you earlier, the average contract price has been $3.59 per contract over the last 12 months. That means for a single contract, $359 has been the average, okay? Trades are going to be exited the next day at 3:45 p.m. Eastern time if they've not been closed before then. This avoids being affected by the final day of volatility. So, close before then. What does that mean? As I showed you on the slide earlier, we're targeting 100% profits and we're using a 50% stop. Now, you'll learn more as I show you more case studies. I'll also have examples of the trade alert that we sent out yesterday. But if we don't hit a 50% stop or a 100% profit target, then we will close that trade down the next trading day at 3:45 p.m. We call that a time stop rule. Again, case studies to follow explaining that concept. Frequency is great, but using a quantifiable edge is crucial to success. So Price, our founder and CEO, and his team of analysts have done a ton of research to find out what patterns work best to trade the SPY. So we look for a specific setup. Now, each day will fall into one of 5 categories. 4 of those categories are tradable price action patterns. So if you noticed on that first chart that I shared with you, there were no technical indicators. We're trading price action. However, there is a technical indicator that is used behind the scenes. More about that here in a few minutes. Now, if the setup falls into the 5th category, then obviously no action is taken. Now, our team used a historical profit factor to determine which days were the best for long trades via calls, short trades via puts, or neither. As badly as all of us itch for action, if you've been trading any time at all, you should know that some days it's best just to shut the trading platform off and go for a walk, have your favorite beverage, whatever the case may be. Don't force the action. So we're not going to put out a trade just to put out a trade. We're going to be very rigorous and follow the trading system. So I teased you about a technical indicator that is used behind the scenes. That is the average true range. It is a technical analysis indicator introduced by market technician J. Wiles Wilder Jr. in his book, New Concepts in Technical Trading Systems. The true range indicator is taken as the greatest of the following. Please stay with me on this. Current high less the current low. The absolute value of the current high less the previous close, and the absolute value of the current low less the previous close. The ATR is then a moving average of true ranges. So our team uses multiples of the average true range to identify which days to trade. Now, the exact settings are proprietary, but here's a sneak peek at what we look for. We compare the current bar's range with the average true range to identify momentum or lack thereof. We look at the price action of individual candlesticks to determine if they provide bullish or bearish confirmation. And check out this hint down here. Green bars are not always bullish and red bars are not always bearish. So please keep that in mind as I go through these case studies. Now listen, not every trade's going to be a winner. Please do not have that expectation when you sign up today. If you're expecting perfection, I would encourage you not to sign up. We're not perfectionists. We are diligent, we are rigorous, we follow the trading system. So there's going to be losses. So let's talk about it. Here's a trade that we entered, okay? We got the setup that we like with the average true range. So remember, these trades are coming out near the end of the trading day. And the very next day, it gaps down and moves lower, and we get stopped out for 50%, right? It's going to happen. But managing those is how you can stay in the game. Here's another example of a loss. Again, we get the price action that we like. We enter that trade near the end of the day. Again, a gap down, move lower, we get stopped out for 50%. Into June, we entered this trade, been moving higher. We enter calls, gap down, move lower, get stopped out July 1st, 50.46%. They are going to happen. Now, as I mentioned to you earlier, the system will trade to the downside as well. So let's look at a couple of put trades. Here's a trade entered on a Friday. How many of you out there will not enter trades on a Friday and hold them over a weekend? If you do have that belief, please put in the chat box there why you have that belief. We don't believe that way. We follow the trading system. So we got the setup that we like. On the 20th, that Friday, we enter the trade. We hold it over the weekend. And then on Monday, we get a slight gap down and move lower, and it hits our 100% profit target, $759 in gross profit. Remember, all trades today based on a $1,000 allocation before any commission or subscription investment. Now, what you're going to notice, these are puts. As I said, we've had two big red candles. We had a drop down and a rally higher. As I told you earlier with the hints, not all green candles are bullish. Yes, we bought puts on a green candle. Following our trading system, our clients were rewarded on that Monday when they walked in shortly after the market opened. You can see SPY been moving downwardly, right? Oh, we get a rally up. We're entering on a green candle. Puts, gap down, move lower, make 100%, $828 in gross profit on that trade. Now, as I told you, not all winning trades will hit the 100% profit target or the 50% stop. Let me share a few examples of what we call the time stop rule. So remember, these trades come out at what time? 3:45 p.m. Eastern time, right? 3:45 p.m. Eastern time. So as I told you, if they don't hit the 100% target or the 50% stop, then we will get out the next day next trading day at 3:45 p.m. Eastern time. And that's what we did here on this Thursday in April. 73.30%, $670 in gross profit. So got in at 3:45 on the 23rd, out at 3:45 on the 24th. Client still made 73.30%. To me, not a bad trade for about 24 hours. Enter this trade. Call trade. Yes, we enter calls even after this gap up. It's one of the identifiable price action patterns that fits within our trading system in relation to the average true range. Enter that trade. Now, it got stopped out the next day for 35.35%. Time stop rule. Again, not all trades are going to be winning trades. July 9th, so just a few weeks ago, entered calls. Yes, we entered calls even after the SPY had been moving downwardly. It gaps up and moves higher. Perfect setup for us in relation to true range, and we close it the next day for 48.67%, $330 in gross profit on that trade. Remember, all trades today based on allocating up to, but no more than $1,000 per trade. Now, as I mentioned, frequency, right? Look what I mean by trade frequency in action. Got into this trade on a Thursday in January. These are calls. You'll notice it's a red candle. We're not afraid to enter calls on a red candle, just like the trade yesterday. All right, let me get the slides to work here. Well, there we go. Next day, on that Friday, we get out for 106.70%, $764. So that was on the 17th that we got out, right? We got in, we got out on this gap. Later that day at 3:45, we got a signal saying buy calls again. So we hold them over a weekend, a holiday weekend at that, because you can see the 17th, that's a Friday. The 21st was a Tuesday. Monday was Martin Luther King Day. So not only did we hold it over a weekend, we held it over a holiday weekend. Walk in, get stopped out via the time stop on the 21st for 50.52%, $386. But remember, this is January 21st. It's a great day. Why? It's my birthday. Are we trading that day because it's my birthday? Heck no. But look, that afternoon, right after we close that previous trade out, the system says it's time to get in again. We get in again. Very next day, close it down for 100%, $927 in gross profit on that trade. I mean, boom, boom, boom. Within days, multiple trades. As I said earlier, almost a trade every day in this strategy. Now let's review a couple more winning trades that were closed recently. Back in May, we get the call set up. Yes, we'd had gap low. Look at these gaps. One gap, two gap. Here's a gap, right? Here's another gap that we made 100% on, 669. We're trading price action and using that average true range multiple to help with the trade. You're going to see calls here near the end of June. Look at all of this upward action. Yes, we still got in after these gap ups. It's all about price action. It's all in relation to the average true range. We make 100% on that trade, $676 gross profit on that trade. Here's another call trade just a few weeks ago, July 2nd. Enter. Yes, we're still trading calls even after this up move. Enter. Very next day, July 3rd, close it down for 100%, $710 in gross profit on that trade. How about this one, July 22nd, last week, entering calls. You'll see that it's a red candle. Remember, not all green candles are bullish. Not all red candles are bearish. So we get into this trade on the 22nd of July, close it down on the 23rd for 100%, $789 in gross profit on that trade. Now, this strategy is currently sold out on our website, okay? If you go to www.bigtrends.com, go to the alert services section, you will see Overnight SPY Trader is currently sold out. However, since you're a Traders Corner follower, I have received approval to offer you a sensational trading opportunity. I'm going to show you how you can get real-time trade alerts when this strategy finds a trade. But this is only available to the first 34 traders, and I can tell you, and Anthony, if he wants, can vouch for me, there's more than 34 of you in the room today. So remember, the name of the newsletter subscription is called Overnight Spy Trader. Here at Big Trends, we call them alert services, okay? Alert services. Why? Because when they trigger an alert, we alert our subscribers with the trade. So 3 months of trade alerts from the Overnight Spot Trader Alert Service. It comes with trader education if you want to utilize it. Price Headley, again, is our founder and CEO. He does weekly video updates for you where he's breaking down every trade, showing you why we got in, why we got out, why it worked, why it didn't. You're going to get access to the settings and rules. This is the proprietary information. So I haven't shared all the details with you. You don't know what setting that our team is using on average true range. You don't know what the multiples that they're using for the bearish and the bullish signals. You sign up today, you'll get access to all of that information on the settings and rules sheet. It resides in your Big Trends account under member newsletters. No need to worry about all that. The welcome email will have those details for you. What if you have questions about trades, or when you start studying that settings and rules sheet, or watching Price's weekly video updates? You can email him and our team of analysts via a dedicated email address that is revealed to you in your welcome email. Now, total package value is $891. It's based off the monthly list price of $297. Now, as I told you, sensational trading opportunity for you. Traders Corner special package. 3 months of trade alerts. Total package value, $891. I told you this is only available for the first 34 traders, $177. That's not per month. That's for all 3 months. And guess what? It does not automatically renew. So no surprise charges in 3 months. What'll happen? 3 days prior to your expiration, we'll send you an email giving you the opportunity to renew. If you miss it, ignore it, no worries. Your subscription will simply expire in 3 days. How do you take advantage of it? You go to members.bigtrends.com/corner. I'm going to throw that in your chat boxes here for you. Right? There you go. members.bigtrends.com/corner. No www needed. And when you go to that page, this is what you're going to see. You're going to see our checkout card. It's one page. It's very simple, very easy to navigate, and most importantly, it's secure. Billing information over here at the top left, first name, last name, email. Please put in your trading email address. I know most of us have multiple email addresses. Put in your trading email address so you can get your purchase receipt, your welcome email. And guess what, folks? You could get your first trade this afternoon. You could be well on your way to trading our overnight spot trader. Am I promising or guaranteeing a trade this afternoon? Absolutely not. But you could get your first trade this afternoon. Contact information is up at the top. It's at the bottom as well. I'll show you that in a minute. We take the 4 major credit cards: Visa, MasterCard, Amex, Discover. If you glance down there to the bottom right-hand column, you'll notice that we also take PayPal. Remember, it does not automatically renew. It's 3 months for $177. Terms and conditions are listed there. Also here, contact information is there. Anthony has posted that in the chat box for you as well. So Anthony, thank you for doing that. And as it says down here in the footer, we're here to help. Remember, Big Trends has been around for almost 26 years. We have experienced a lot of things, helping traders all around the world. Like I told you earlier, I've been here for almost 14 of those. Was a client myself way back. We are passionate about helping you with your trading. Maybe you have some questions. Let's see if I can hit on some of these. What type of strategy is used? As I told you earlier, buying calls or puts. Here's a little tidbit for you that I haven't shared with you about those 2-day until expiration options. They're going to be at the money. Okay? So we're using 2-day until expiration at the money options to trade calls or puts on SPY only. How are you going to receive these trade alerts? Real time via email. You heard me talking about the importance in the checkout cart, putting in your trading email address. You can see out here to the right, we also use WhatsApp. Do you have to use WhatsApp? You do not. You can simply just get your trades via email. However, if you want to be notified a second way, that second way that we use is WhatsApp. It is a free, no-cost application. You can put it on your computer, your laptop, your tablet, your mobile device, or all of the above. We do not text. WhatsApp is faster and more efficient than texting. New trades are sent at 3:45 p.m. Eastern Time on any trading day. Following day, time stop. If we don't hit the 50% stop or the 100% profit target, remember, we will close the trade the next trading day at 3:45. How many trades per month will you receive? Average is about 14 trades per month. Day trades, no day trades. Average contract price, $3.59 per contract the last 12 months. Educational resources, remember, Price Headley, our founder and CEO, is going to do weekly video updates for you. These are not live sessions. We post those in your Big Trends account. We send you a courtesy reminder email to go to your Big Trends account and watch the video when it's posted. Speaking of your Big Trends account, this is where you'll find the settings and rules sheet. Again, this is a 2-page PDF with the proprietary settings for the ATR, the multiples that our team uses in relation to the ATR to find these 4 tradable patterns. Remember, you get a dedicated email address to Price and the team of analysts should you have any questions. Now, I've told you this a few times. I've been with Price and his team almost 14 years. I've been on the front line the whole time. Love interacting with traders just like yourself, whether it's old school on the telephone, texting, email, or in webinars like these. What I'm about ready to read to you is an unsolicited, unpaid testimonial from Tom W. Dear Chris and all at Big Trends, I cannot thank you enough for always working with me to smooth out issues or questions I have with my subscriptions. I've been with you now for 10 years plus and don't regret for 1 minute for choosing BT, that stands for Big Trends, as my #1 and only trading organization now. I spent years prior to BT trying many different programs and all without success until Big Trends. Not once have I ever had an issue that BT could not fix or suggest a way to correct. Their customer service is the best and above all others I've dealt with prior, and never without a quick response or phone call to answer any questions or issues I was dealing with in my account, and always with professional and courteous responses every time. You will not regret joining this team of experts, and I'm sure you will always be pleased with their professionalism and knowledge in trading, especially with options. I'm blessed to be a part of this organization and always will. Tom W. Again, unpaid, unsolicited testimonial from a long time Big Trends client. Now let's review today's winner one more time. So remember, we sent this trade out yesterday afternoon to our subscribers. Yes, the market had gone down for 2 days in a row. Yes, the Fed's sitting still on interest rates. Yes, there was earnings announcements coming after the close. I believe it was Microsoft and Meta, 2 of the big names that people were worried about. We didn't give a crap about any of that stuff. We factor out that noise. We are technicians. We follow the trading system. We sent the trade out. If you just joined, we got this gap up this morning. We went from here to up here, and when we did, we closed it out at the open for 130.31%, $1,122. Now, what do those trade alerts look like? 3:47, trade comes out yesterday afternoon. Remember, these options trade until 4:15 Eastern time. Okay, yes, the bell rings at 4, but the options don't stop trading at 4. They go until 4:15. Buy to open, that just means you're starting a new position. Okay, think about me handing you your favorite beverage. You got to open it to enjoy it. We're always trading SPY and SPY only, hence the name of the newsletter, Overnight SPY Trader. It's one of the most highly traded securities. We tell you the exact option to trade, August 1st. We tell you the exact strike price, 634. We tell you the direction, call, down here on the second line. We even give you the option symbol, and we tell you what to pay for the trade. And we also remind you that they trade until 4:15 p.m. Eastern time. This morning, right before the open, 9:21 a.m. Eastern time, apply a stop of $1.43, a target of $5.74. Now, as I showed you, we did benefit from the gap up this morning. But what if you had allocated up to $1,000 to this trade? Well, it would have been 3 contracts at $287. It's $861 into the trade. As you have seen, we closed those out today. We were filled at $661 on the trade. That's $1,983. You do the math there. That's how you make $1,122 before any commission or subscription investment, or 130.31%. Now, past performance doesn't guarantee future results. Future results are going to vary, but what doesn't vary is our team of analysts following the trading system, getting these trades out to you. All right. Now remember, Traders Corner special package, 3 months of trade alerts from Overnight Spy Trader, total package value $891, and you have those trading resources available if you want to utilize them. For the first 34 traders, 177. Again, it's not per month. It's for all 3 months, and it does not automatically renew. Remember, it's members.bigtrends.com/corner. No www needed. It is simply members.bigtrends.com/corner. As you can see there, members is plural, bigtrends is plural.com/corner. Don't delay. Be one of the first 34 traders to take advantage of this Traders Corner special package. Now you're going to see in the checkout cart, email field highlighted in red. I do that on purpose. Okay? Do that on purpose. Contact information, Anthony and I have put it in your chat boxes for you. You can see that we accept the 4 major credit cards up here at the top right. We accept PayPal down there at the bottom right. Very simply, 3-month subscription, no automatic renewal, one-time investment, $177. As I shared earlier, terms and conditions are listed twice, there and there. Contact information is down at the bottom as well, 1-800-BIG-TRENDS. That's 1-800-244-8736, or email clientcare@bigtrends.com. And as I pointed out earlier, in case you just joined, we are here to help. We have been around for almost 26 years. We have seen, we have experienced a lot of things. Hey, Joan, good to see you. Please email clientcare@bigtrends.com, Joan, and they will get you that information. Looks like we got G saying, show on the screen how you actual trade alerts look like on the screen. I showed you what a trade alert looked like, G. Let's see if I can back up to that here. Let's go. You want to see a trade alert. I think I've got a few minutes. All right. So here's the trade alert. Let me take this ink off the slide. So the trade alert comes out 3:47 p.m. Remember, we got to wait and see how the system sets up at 3:45. Trade comes out at 3:47. Buy to open. Again, that's just trader language that you're starting a new position. SPY, August 1st. This trade has been closed. Yes, these options are still trading for tomorrow, but we have closed out this trade. So don't go try to put this trade on. We tell you exactly what to trade. The 634 call, we tell you what to pay, 320 or less, and we do remind our clients that these options trade until 4:15. This morning, as you can see there, 9:21 a.m. Eastern time. Apply a stop of 143 and a target of 574. Okay? Tell you exactly how to handle it. Now, you could set this up as a bracket order, or in trader lingo, a one cancels the other, OCO. Do you have to use bracket or OCO orders? You do not. But if you're busy for whatever reason, going to the golf course, the pickleball court, taking care of a spouse, taking care of the grandkids, maybe you got a job, you can set up an OCO. And that just simply means if one of those levels is hit, the other order is canceled. So if one is hit, which we knew the target was hit, right, this order would get canceled. But again, you do not have to use OCO orders. So as I shared earlier, let me take this ink off here. As I shared earlier, if you'd allocated up to $1,000 to this trade, it would have been 3 contracts, $287 a contract. Selling those 3 contracts at the open this morning at 661 brought in $1,983. You do the math. 1,983 less the 861 is $1,122 or 131.31%. To me, not bad for holding a trade overnight, right? Amongst all the noise, chaos, and worries. Are tariffs on? Are they off? Are they getting delayed? You know, all of that. Who's reporting earnings? Who's speaking now? We don't factor any of that stuff in. As I had earlier on one of the slides, we eliminate the noise. We are technicians. We don't let any of that stuff play in. Now, past performance doesn't guarantee future results. Future results are going to vary. So remember, Traders Corner special package. It's 3 months of trade alerts, package value $891, available for the first 34 traders for just $177. It's not per month. It's for all 3 months. Members.bigtrends.com/corner. No www needed. Simply members, plural, bigtrends, plural.com, corner. Be one of the first 34 traders to take advantage of this special package. Anthony, I am finished, sir.
Thank you so much.
Well,
I
thank
appreciate
you.
it.
Yeah, hey, I almost got to the 130 mark. I know I have a history of getting done a whole lot sooner that one time, so I've tried to work on the times that you've had me back to fill up my whole time slot. So I'm always worried that I'm going to disappoint you and the crowd, that I get done too quickly or go too long. So I hope today's okay.
You know, with those results and confidence, I don't think you're ever going to let anyone down. So thank you.
Kind. You're very kind.
Yeah.
Anthony, appreciate it. I put the link, I know you did too, as well, in the chat box for them. Hopefully your crowd likes what they've heard today. If they have any questions, they can reach out to us, 1-800-BIG-TRENDS, clientcare@bigtrends.com.
Thank you, Chris.
Thank you, Anthony.
That was profound. Thanks for sharing those confident, sharp insights and a system with real edge. That was Chris Sayre from bigtrends.com. Keep building those profits, Chris. Chris's offer link is now available in the chat, so be sure to grab it while it's available. And moving along, it just, you know, we're so lucky to have so many great people here. This is always good. Our next speaker is none other than Lawrence McMillan, author of the legendary Options as a Strategic Investment, and often referred to as the Bible of options trading. If you've been around trading enough, if you heard who's the Bible, it's Larry. In Larry's session, McMillan's Market Outlook, what option indicators are saying now. He will give us a timely and in-depth look at what current option signals are showing about the market, how to use those indicators to forecast movement, and how institutional traders apply them in real-world decision. Here's Larry McMillan. It's all yours, Larry.
Thanks, Anthony.
You're welcome.
Good afternoon, everyone. Hey, you see that okay, the screen?
Yeah, it looks good, and you got movement. I like it.
Right. Okay. Oh, I see. I can actually see the audience view. There we go. So we're going to spend the next 45 minutes or so looking at the market indicators. They're pretty interesting right now. They are, of course, most of the time, but they're especially interesting now. Just a little background on our company. We started as a derivatives research firm about 35 years ago, and we're selling research and newsletters and things like that. But in 2008, we made a number of good calls. So people wanted us to move into money management. So we're both a CTA and an RIA, managing option-oriented accounts. And then we also have a division that does option education, including mentoring or seminars like this, etc. So I'll come back to this later. We will be sending you the PDFs of this webinar. By PDFs, I mean one in color, one in grayscale, in case you want to print something out. And I'll talk about this more later, but if you go to that website there, you can also subscribe to our newsletters for a very discounted price. So here are the main indicators I look at. Of course, first and foremost, the chart of the S&P 500, which has really been very bullish lately. It keeps going higher and higher, but some of the other ones have not really kept pace. Equity-only put-call ratios, you'll see that we're sort of beginning to get some bearish action there. Market breadth, also some bearish action there, but we're not getting bearish action yet in VIX. So we'll talk about all of these things. I have two important rules. The first is oversold does not mean buy. So in a market that's selling off hard, you can get oversold and stay there for a long time. We don't have any oversold conditions right now, but we do have overbought conditions. And overbought does not necessarily mean sell. So we've been overbought for probably a month, really, in some of these things, but the market keeps going higher. So if you sold a month ago, and especially if you sold short a month ago, you wouldn't be too happy. So we wait for confirmed sell signals. We'll never catch the exact top by doing that, but we're also not going to keep repeatedly trying to sell into a rising market. So here's a long-term chart, 2-year chart of S&P. Of course, we had that big correction that came about this spring in April. That was 21% sell-off in just 37 trading days, a really unbelievably nasty but quick reaction, and then the V bottom. So now we've come up so far from the V bottom that we are in an overbought state. But you can see here that once we broke out to new highs, we've added on, another couple hundred points in the S&P. The new highs were around 6150 or about 6300, now 6350. In fact, this morning we were even at higher highs. This chart's through yesterday. So this chart is bullish. I mean, there's really no way you can say that's a bearish chart unless you're like contrarian or something. But we're looking at various support areas, and if we fell back below 6150, that would be a big negative, because that would mean that this whole last part was a false breakout. So there is support at 6260 and 6200, and then of course the 6150. So basically this is a bullish chart and warrants a bullish stance. Now we also calculate or compute or draw, if you will, modified Bollinger Bands on the chart. Bollinger Bands were invented by John Bollinger a number of years ago, and in order to calculate Bollinger Bands, you need to estimate volatility, or you need to calculate volatility, and he defined it as the standard deviation of closing prices. And that seems to make sense to normal just thinking about things, but that's not the way that the math people do it. So Black-Scholes and other math people calculate it as a standard deviation of percentage price changes. So it gives you a slightly different calculation, but we calculate that, and we look at where the where the S&P is in terms of these indices. So for example, right here, that's the +4 standard deviation band right there, the outer band. Let's see if I can get why am I not having this thing? It's not writing on here. Okay, well, anyway, that's a +4 standard deviation band, and inside it is a +3 standard deviation band. So you can see back here, we moved outside the 4, then inside the 3. That was a sell signal. When we get those, we look for it to move to the opposite band, which it did, and then gave a buy signal. So for a long time, we were riding that buy signal, and we roll our positions up as we go along. We've had now recently 2 failed sell signals. The blue letter indicates a failed signal. So we had a decent buy signal down near the lows down here in April, late April, but then we've had 2 attempts at sell signals from this indicator, one there in mid-May, and then another one here in early July. And now we're potentially setting up a third one. So if we fall to 63.60, we're going to get another sell signal from this indicator. In fact, I'm sorry, 63.16. So we're like at 63.68 right now. I'm looking at and that's a low of today, but it's still above that. But if we fall to basically 63.16, we'll get another sell signal. Now, this indicator has a very long and profitable track record. If you subscribe to our Option Strategist newsletter, you'll see the accumulated profits in there are very large. And so even though it's had a couple of signals here that were stopped out, there is a stop out on these, so they you don't just lose all the money you paid, so let's say for a put option. But we're waiting to see if this new sell signal does in fact occur. There's no guarantee, of course, that it will occur, but if, as I said, if we drop to 63.16, we'll have a new sell signal from this, and then that stays in place unless you rise back above that 4 standard deviation band. So this logic of drawing these bands and then calling buy and sell signals as you move outside the band is can be applied to any chart, stocks, futures, ETFs, etc. So here's just a couple other ones. We run this through TradingView as a subscription service. This is the S&P from just a couple of weeks ago. I didn't have time to update it this morning, but we're up here above the 4 standard deviation band. But that was a failed buy signal, and then that was the good buy signal there, and that was the first sell signal. Another one, silver. The software puts the little red arrows for sell and green arrows for buy in the charts. And so you can see there was a pretty good buy signal there. In fact, the silver ETF has a decent track record with these signals. Here's Coinbase. That thing has gone, of course, crazily high and hasn't really generated a sell signal in quite some time, but it did have some buy signals there near the lows. Also, Disney. I'm always a little wary of taking sell signals in Disney. It's really got a cult following, and so I probably wouldn't really be too anxious to jump into a sell signal in Disney. Anyway, so let's move on. The next indicator is put call ratios. So first of all, we use the equity only put call ratio. That's all stock options that trade to predict the broad market. But in reality, put call ratios were invented as an indicator, as a contrary indicator, in fact, by Marty Zweig back in the 1950s. Zweig was a very good portfolio manager and also created a number of useful indices or indicators, and this was one of them. In those days, he would get the volume of puts and calls from the ads that ran in Barron's on Sunday. The major put and call dealers, brokers, would run the ad and say how many puts and calls they traded that week. So Marty suddenly realized that if he saw a lot of people, a lot of put buying going on, that pretty soon the market went up, not down. And conversely, when he saw a lot of call buying, he realized that pretty soon the market went down, not up. So it's a contrary indicator. And of course, defining what too much is, if it's defined in the way that I'm going to show you here, we have a methodology for doing that. So let's just take a simple example. Let's say it's IBM, and we're going to, at the end of the day, sum up the volume of all the puts traded in IBM, separately sum up the volume of all the calls, divide the two, and that's the put call ratio. So as put buying increases, that's in the numerator of the fraction, so the ratio would go higher when put buying is increasing. But when is put buying likely to increase? Well, that's when the stock is going down. The public is chasing the stock down. So the put call ratio and the stock price move in opposite direction. Same thing can be determined with calls. If the denominator of a fraction increases, the fraction drops. So if there's heavy call buying, the ratio is going to start to go lower. But when is there likely to be heavy call buying? Well, that's when the stock's going higher. So again, they're moving opposite to each other. We keep a moving average of using 21 days here, just in case there's something to Fibonacci. But overall, you do need to have some moving average to smooth out the data. Now, we publish about 1,600 of these charts daily on our website in an area called the Strategy Zone, which is a pretty cheap area to gather data from. And when we publish the put-call ratio chart, we show the chart of the stock price and the put-call ratio on the same chart. Now, this is a theoretical example, but it shows, it demonstrates the point. So let's say the stock is declining here, and as the stock is going down, people are buying puts, and that's forcing the put-call ratio higher. So the public is right during the move, but eventually the put-call ratio tops out. It forms a local maximum, and that's a buy signal for the stock. So now the stock starts to go higher. Put-call ratio is going lower because people are buying calls. Move over to the left side. So this is, again, the people are buying calls, forcing it down. Eventually, you get to a local minimum in the put-call ratio, and that's a sell signal for the stock. So in theory, you should have this symmetry, and I'm going to show you some charts later. You'll see the symmetry that exists. If you don't have that symmetry, then something else may be going on, such as arbitrage, particularly dividend arbitrage, but also other forms of takeover, that sort of thing, that can distort this symmetry. Now, this is not a current chart. But on top is the S&P 500 index, and on the bottom is all stock options that trade. In other words, all equity options that trade. And you can see here the inverse symmetry that exists most of the time. And so that's why we use the equity only put-call ratio as a predictor of the stock market itself. So here's the current chart. And this is just the standard one I just showed you, where we just use the volume. So you can see we had a local maximum that was a buy signal coming out of that bottom in April. We had a local minimum in February that was a pretty well-timed sell signal. And then we came down and it looked like we were going to get a sell signal, but it quickly reversed back to a buy. But now we have gotten a sell signal down here. And we use a computer analysis program, sort of like a chess playing program that can look forward 10 days and builds a tree of values. It knows what's coming off the 21-day moving average, of course, and it can estimate what's going to be coming on. And so the computer analysis confirmed that is in fact going to be a lasting local minimum or sell signal on the chart. You'll see there that that's the lowest it's been on last year and this year. In fact, it's the lowest it's been since November of 2021, right before the bear market began in 2022. Now, to be fair, it had been much lower in 2021, so I'm not just saying that it gets down there below 50. 50, by the way, means that 50 puts are trading for every 100 calls. That's the scale on the left side there on the y-axis. But that, so we don't use that absolute number as anything. Rather, we look for the local minimum. So now this has formed a local minimum, and it's going to be in a sell signal as long as the ratio continues higher. We're setting a stop for ourselves. If the ratio drops back below there, in other words, makes a new 2025 low, then we would stop at this signal. But right now, that sell signal's in place, and we're not sure how long that will last. Some of them last months, some of them just last a few weeks. So, but this has turned bearish. Now, as computers came along, we were able to calculate, which I think is a better put-call ratio. It's called the weighted put-call ratio, or the dollar weighted put-call ratio. And in this case, what we do at the end of the day, again, let's just say it's IBM. So we're going to calculate the dollar volume of each option. So we're going to take the option's closing price and multiply it by the option volume that traded that day. Now, you could do that on a tick-by-tick basis, but that's an expensive data set. So we do it this way. We tested both ways, as it seems to work just as well. And so we make that calculation for every option in IBM. Then we sum them up for all the puts separately. We sum them up for all the calls and divide the two. And now we've got the dollar weighted put-call ratio. And the reason I say this is better, now we're measuring the dollars being spent on puts versus the dollars being spent on calls. And that should give us a better feel of the contrary opinion. It turns out that the signals occur about the same time. They're just more extreme usually. So again, this is the current chart. You can see that we had the local maximum back here in April. By the way, this one was not confirmed by the computer analysis programs as a local maximum, but that one was. So the buy signal is above that one. Anyway, that was a good buy signal, and of course we had the local minimum back there in February for a sell signal, and now we've had, again, similar to the previous chart you just saw, a new local minimum here, which is a sell signal. Now that one is not lower than we got last year, so it's maybe not as extreme as the other chart was showing us, but in any case, we're using that same sort of stop. If it were to fall back down here, make a new low for 2025, that would stop at that signal. But otherwise, as it rises, the signal remains in place, and we'll be, getting a bearish signal from this indicator, bearish for stocks, signal from this indicator until it reverses direction again. So the put-call ratios are historically very strong. Again, with our track record in our newsletter, you can see how they've done over the years, and with these new sell signals that are in place, that is one pretty major bearish sign, at least auguring for some sort of a correction in the market here. As I said, we would stop these sell signals out though if the ratio dropped to new 2025 lows. So what do we trade when we have these signals? Typically, we trade SPY options, and we trade slightly in the money SPY options. Well, why in the money? Well, I'm in the business here trying to predict where the market, in this case SPY, is going, and whether it's a McMillan volatility band signal or this put-call ratio signal, I want to buy an option that's going to reflect my opinion. So I don't want to buy an option that's so far out of the money that I lose on the option, even though I was right on the direction of SPY. So we buy slightly in the money call. The delta of a call option ranges between 0 and 1. 0 means that the option doesn't move at all when the stock moves. So that's usually something that's way out of the money near expiration. And on the other hand, 1 means that the option moves just like the stock. So that's a deeply in the money option. Again, you don't need that. But we do try to have something with a fairly high delta so that when the stock moves, SPY will move, the option will move. So we're buying typically in the money, 1 strike or 2 in the money for SPY. And a lot of our short-term trading, that'll give you a delta of 70 or higher, certainly 60 anyways. If we're going to that, so that would be like for a 2 or 3 week trade. If you're going out a little farther for like these intermediate term and the put-call ratio, we saw some of those last for months, then you might buy an at-the-money option. But even an at-the-money delta of a call is about 55. So as the stock starts to move, the SPY starts to move up, that call's delta will increase. So that's what we're looking to buy in these situations. And if you watch TV, you see the options trades, they're almost always spreads. And you might be wondering why is that? So the spread is this. Let's say you're bullish on this stock, but instead of just buying a call, you buy a call at this low strike, and then you sell a call at this higher strike. So what that is the stock was moving up between the 2 strikes, fine, you're making money, you're doing well. But once you get to the higher strike, you've cut off your profit potential. Well, that's a pretty devastating thing to do to yourself if you get a big move in the underlying, especially some sort of overnight gap move, you harmed yourself. So there's only one time that is appropriate, and that's if the implied volatility of the calls is very high. Now, in April, the implied volatility of SPY options was extremely high, and it's remained high until just recently. So we have been doing some spreading of SPY calls, but in general, I would not spread just any old, option on any old stock. You really want to see, the options be expensive. The proponents of spreading will tell you, oh, well, you're risking less. That's not really true. Your broker asks you to pay for a call in full, or he asks you to pay for the call spread in full. In both cases, you're risking everything, 100%. So you're not risking less. Yes, less dollars. Okay, so then instead of buying 5 bull spreads, maybe you buy 4 calls. But if you buy a call, you see here you have a little bit of worse performance down here, but then this makes up for it here. If you break out through the upside, you have unlimited profit up there. So we typically don't spread unless we're really kind of forced to. Most of our put call ratios recommendations in stocks are not spreads, but they have been in S&P because of the expensiveness of VIX, which is now not so expensive anymore. But even if you do spread, you can mitigate the negative aspects of that spread in 2 ways. First, widen the difference in the strikes. So when we're buying SPY calls now expiring later than August, I'll do 15 to 20 points wide, and puts even wider, 25 to 30 points wide, because the S&P options are really all index options are skewed to where puts are more out of the money puts are more expensive than out of the money calls. And secondly, we want to roll if the short strike is hit. So what do I mean by that? So let's say we start out in this particular trade, SPY is 620, and we buy the 620 call and sell the 640 call. So that's a call bull spread, and it has this profit graph like we just saw. And now we're fortunate enough that the stock has risen, and so now our spread is marking pretty well. But now we've gotten up here to where the higher strike is, and we don't really have a whole lot of profit potential left. This is just going to flatten out here at this point. So what we recommend doing is, if you get up to that higher strike, sell the spread you bought before, sell this spread, take your profit on that, and buy a new one. Reset both strikes 20 points higher. So that's one thing you can do to mitigate the negative aspects of that. Now, what's happened is that sometimes these the calls are kind of expensive, especially if interest rates being where they are. Maybe if interest rates come down a little, the call spreads would be more favorable. But right now, you're paying like 10 points almost for a 20-point spread. So you can pay 10 and make 10 and max out at 20. And that's nice, but that's not that great. On the other hand, if we're talking about puts, so here we're buying an at-the-money put and selling a put with a striking price 30 points lower. Now we're only paying 6 for that, and it could max out at 30. That's much better. That's like an option trader likes to see, that kind of thing. So, and in this particular case with puts, you would roll down if S&P got down to 590 or SPY got down to 590. You would roll both sides down 30 points. So the point is that don't spread unless you really think the options are expensive. And then if you do spread, use these 2 things, spread the strikes apart and roll your position when you hit the short strike. Okay, just a couple of other put call charts that we recommended recently. This is DocuSign. The stock had, it was messing around for a while. It gave that local maximum there, a buy signal, but it really didn't, it wasn't doing well just in terms of the stock chart price. So this is the stock chart up here. And finally it broke through and went above 80. So we said, okay, fine, we'll buy it now. It struggled though, it really is falling back from there. But in any case, the buy signal is in effect for that one. And you can see the 3 red letters there indicate pretty good buy and sell signals in the past. Now with individual stocks, we only use the signals at the extremes. So like here, there's some local maximums, local minimums down in here. We're not trading those. We're only looking for these extreme ones. That was a good buy signal there. But now recently, we just got a sell signal in this applied materials. And this one, we did not really need to have a conditional recommendation on it. We put, we bought puts there on that just last Friday. I see the stock is down 10 points today. It must have been earnings or something. In any case, we can also do the same thing with futures. So if there's 10-year treasury notes, they have futures that trade on the Merck and the board of trade, or the board of trade, I guess is where they trade. And you can use the data from those options to create the put-call ratio here at the bottom of the chart. So this put-call ratio here is created using the weighted put-call ratio of the futures options that trade. However, you don't have to trade futures. You don't have to trade the 10-year note futures. You can, in fact, trade an ETF that simulates that. And in many cases, there is a ETF that simulates a commodity. This particular one is IEF. So if you got a sell signal here, which we did back in March, you can trade. You can buy puts on it, IEF. You don't actually have to go in and trade, have a futures account or go in and trade futures on the 10-year. But some of them don't have one. So this is soybean oil. There is no corresponding ETF for that. So if you get like this pretty regularly, buy, sell, buy, sell, buy, sell is done pretty well. If you want to trade those, you have to have a futures account and go in and buy the actual calls for puts on soybean oil. All right, let's move on to market breadth. So two things you can do. Breadth is just advances minus declines. I mean, that's very simple. There's two things you can do. One, you can keep a cumulative running total, and two, you can keep an oscillator. So we do both, and our oscillator is calculated this way. Today's oscillator value. So the oscillator value of today is equal to 90% of yesterday's oscillator value plus 10% of today's advances minus declines. And so what do we use for data? Well, we use New York Stock Exchange data. Of course, just about everybody would for advances and declines. But it turns out that there's a bunch of things on the New York Stock Exchange that are not stocks, and they can distort your advance decline ratio. So yes, the New York Stock Exchange recognizes that and puts out what they call operating companies only data. But we decided we have a better data set to calculate stocks only information, and that's all stocks with listed options. There's over 6,000 of those now, so that's a big data set. That's way bigger than the number of stocks on the New York Stock Exchange. And it's got, big caps, small caps, NASDAQ, New York, everything is in there. So it's really a pretty much more robust data set. And that's what we use. Even though we calculate both, we use mostly the stocks only. So here's the oscillator going back a few years to 2018. And so when the oscillator is below minus 400, that's considered to be oversold. And when it's above plus 200, that's considered to be overbought. Now, these are things that we've decided, we define those. It's not some general definition in the universe somewhere. This is what we did. And so let's just look at, well, first of all, from 2018 to 2022, we were mostly in a bull market, really from way before 2018. Really since 2009, but we did have a couple of nasty periods. We had a very nasty sell-off in December of 2018, right before Christmas, and then of course this was the pandemic in 2020. But for the most part, the market was not oversold very much in that whole time period. But then we got into the bear market of 2022, and it was oversold quite a number of times. And then since then, it's been back and forth. And this, the correction we had in April here drove the oscillator all the way down almost to those lows set previously. So remember, oversold does not mean buy. So we don't buy until it stops being oversold. So in this particular case, it stopped being oversold in, it stopped being oversold at the end of, or actually in early June. I guess April, I'm sorry, it says April 22nd on there. Okay. So we had to stop being oversold right there. That was a buy signal, but we came up, we got into very overbought territory. It was struggling in overbought territory for quite some time. And then it finally dropped back and just gave a sell signal yesterday. So we have a brand new sell signal from our breadth oscillators as of yesterday. And this morning, even though the market was up strongly on the opening with the Meta stock and Microsoft earnings, there really was not a very good reading in breadth. Breadth has been pretty much negative all day, and right now it's negative again. So this oscillator had been overbought. Overbought does not mean sell, but now it's stopped being overbought, and that is a sell signal. So this is a brand new sell signal we have from this indicator. This is our most short-term indicator, so it is subject to whipsaws, can be back and forth, but in this case, it would have to go back into overbought territory to stop us out. So we've taken new positions just this morning based on this sell signal here. Doesn't mean we're getting out of all of our longs. We still have those. I'll go over them in a minute, but it does mean that we've added a new bear spread to our portfolio of positions. Now, another thing you can do with accumulative, remember I said you can accumulate breadth, is we do this with volume. So advancing volume minus declining volume. And we use, for this, we look at both stocks only and New York Stock Exchange. And when that makes a new high, that's very bullish for the market. And it actually did make a new high well before S&P did. So we had a trade earlier this year where this was making a new high and the S&P had not yet made a new high, so we bought the S&P. Here's how that chart looked. You can see that happened in May, and the cumulative volume breadth went to a new high, so that's a new all-time high there, higher than the previous. But S&P was still down here, and so we had a target for it to get there, which of course is what it's done much better than that right now. So that's an indicator that when it's making a new high, that's positive confirmation for the S&P, and in fact indicates the S&P will get there. This has made a new high many times since then. In fact, just this week, well, actually, I guess last week at July 23rd or 24th was the last time it made a new all-time high. So that's a bullish indicator for stocks, though. Another thing we look at is new highs versus new lows. This is sort of an intermediate term indicator. We don't get a lot of signals, you can see here, and they've been pretty good. And it gave us a buy signal in late June, which is still in effect right now. For this to be stopped at, we'd have to see new lows on the New York Stock Exchange exceed new highs for 2 days in a row. It hasn't even done it for 1 day yet, although it might today. I don't think so, though, because we were up this morning. So going up this morning generated a lot of new highs. Yeah, I'm looking at the data right now. There were 86 new highs made this morning versus only 61 new lows. So again, that indicator is going to remain positive, at least for another few days. So that brings us to VIX. So VIX is a very important thing. I think is a very misunderstood thing in the markets, but that's a couple of things you can get right off the VIX chart itself. First of all, the trend of VIX. So VIX should be trending opposite to the stock market. And then secondly, there are many spike peaks on the VIX chart. This is where people panic in a little sell-off. They buy puts, force VIX higher, and then it spikes right back down again. And those are buy signals. So here's the current chart. Now VIX, going back 1 year, and all those Bs on there, except for the pink one at the bottom, are spike peak buy signals. So the red letters are successful trades. We have a trading system we built around these. The blue ones are unsuccessful. They have stops on them, though, so you're not losing, again, your entire value. You paid for the option, and some of them have really been excellent because they last for quite a while. Now, typically, we hold these for a month, 22 trading days. So the last spike peak buy signal we actually had here was the one that just expired right here, or it began in late June, and then it just expired a month later, expired about a week and a half ago. So that signal is terminated as a successful signal. Market moved quite a bit higher over that time period. So this is something we watch constantly. And again, this has a long and successful track record. It's noted in our option strategist newsletter. The trend of VIX is the pink area there that I surrounded. So the trend of VIX is, we define the trend of VIX as being bullish when both VIX and the 20-day moving average, so this is the 20-day right here, cross on the same side of the 200-day. So this is the 200-day. So right there was the first day that they both crossed and were below the 200-day. Below the 200-day is bullish for stocks. And so that was a buy signal on June 4th. And that's still in effect right now. Of course, what happens, and with all of our positions, is as they mature and as they make money, we roll the options up to higher strikes, as I showed earlier with the spread example. But even if it's not a spread, we still roll them up to higher strikes when they get deeply in the money. So right now, this trend of VIX buy signal is still in effect. Today, VIX is just a little bit higher. It's at 1650. That's really just up like 1 point, so it's really nowhere. And it's not even above yesterday's high. So the VIX is not displaying any panic, even though the market seems to have gotten itself to generate a couple of sell signals, and we've had these overbought conditions, what have you. VIX is staying low, and while that is an overbought condition of its own, I wouldn't worry about VIX until it crosses above the 200-day moving average. Then you might start to worry. But right now, it's not a worry. So it just sort of summarizes what I'm saying there. But we're watching that 200-day moving average. If we get a 2-day close above that, it would stop at that buy signal, would probably indicate a lot more negative things are about to happen as well. Now, you can't trade VIX itself, but you can trade VIX futures and options. So there's a couple of things we can learn there too. In a normal course of events, the near-term VIX future would be the lowest priced, and then you'll have a little higher price than the next one, and et cetera, et cetera. So the term structure of the VIX future slopes upwards. That's bullish for stocks. That's the way things are most of the time. Occasionally, though, this happens. The term structure inverts. That's bearish. It happened in this past April when the market sold off so sharply. It happened to a great extent in the pandemic. It hadn't really happened too much in between those two, a little bit last August, I'd say. So this is a would be bearish if that happens. But right now, oh, I'm sorry, I didn't update this chart. Well, I'm just going to skip forward on that. But basically, the term structure is still sloping upwards. This is from earlier in the month. And you can see VIX at that time was 1570. The July future was 1705, was subtracted 2, and that's a premium of 127. So if you look at them now, they're also sloping upwards like this, and the premiums are pretty large, and that's all bullish stuff. So that's good for stocks. The CBOE publishes 6 volatility indices. There's a 1-day, which is really not so much predictive of anything except reflecting what's happening in the 0-day to expiration SPY options. But there's a 9-day VIX, there's a 30-day, which is what we normally think of VIX, a 3-month, a 6-month, and a 1 year. And you can see again here, these were sloping upwards. The term structure slopes upwards as you go on time. Again, that's all bullish. So those things are all, very positive for the stock market. It would be a major sell signal if the 2 front months inverted. Right now, the front months are August and September, but August is well below September. I do want to add in one other thing, though, that VIX typically makes its annual low in July. So we're just now finishing July, and VIX did just go below its January or February lows. So the new low is in for the year in VIX. And that will oftentimes produce complacency. People think, oh, everything's good, VIX is low, and then boom, you hit August and kind of get taken by surprise because August turns out to be a pretty volatile and often negative month. Last year, VIX shot up to 70 in early August. Well, that's not going to happen every year, but we are dabbling, just buying some out of the money VIX calls now. You can't buy them too far in the future because the futures won't move with VIX when it gets going. And the options are options on the VIX futures, even though CBOE doesn't really state it that way. That's what they are. So we go out like 3 weeks, and buy some out of the money calls there. And if we get the move, fine. If we haven't gotten a move yet, we'll probably try it again. So in our newsletter last Friday, we were buying some out of the money VIX calls just based on this seasonal pattern in VIX, where it's low in July and then expands through October. Also, when we came out of the bottom in April, realized volatility, which we call HV20, that's historical 20-day volatility of the S&P 500. You compare that to VIX. Most of the time, they're relatively the same. So you can see most of the time it's trading in this kind of noisy pattern. But occasionally you get this happening, and we did. That was the pandemic sell-off. But here this past April, we had a big spike down like that. So we had a buy signal from that indicator on May 8th. Technically, it's still in place because we're just running it with a trailing stop right now. I think our trailing stop on SPY is up to like 620, 621, something like that. Also, 90% days, that means 90% of the volume is, 90% of the issues were up, or 90% of the volume was on the advancing issues, either one, or vice versa. Declining counts as well. So this, the frequency of these is important, and it's been very low for quite some time, but now we got up to here. That's 4. Now 4 isn't a huge number, but it's going that way. If we start to get more of these 90% days, we could be in one of these other patterns here that really, where we got a large number of 90% days, and that was of course bearish while it was ongoing. So we're kind of keeping an eye on that. So just to summarize, where do these things all stand? Well, on the bullish side, we know that S&P chart is bullish and made new all-time highs. We just saw the new highs versus new lows. That's bullish. That indicator where we looked at the cumulative volume breadth, that's positive, and also the one where the implied volatility was spiked down and back up, that's positive. Trend of VIX still positive, and the construct, in other words, the term structure of this VIX futures is sloping upwards. So those are all bullish signs. Right now, we don't have a VIX spike peak buy signal in place, so that's in the neutral column. And McMillan volatility band, as I said, if it falls to 63.16, that would be a sell signal. So maybe I should have moved that one over here a little bit to the right, but it's still in neutral territory right now. But we do have this brand new breadth oscillator sell signal, and you saw that we had the sell signals from the equity only put call ratio last week. So basically, we run positions on pretty much all of these indicators, and we roll them up. So a lot of these on the left side have been buy signals for a while. We've had calls in place or bull spreads in place. We've rolled them up, and then we've added these 2 new bearish positions on the right side, and we would add a third if the McMillan volatility band sell signal comes into effect. So, overall, that S&P chart is still bullish, and really, as long as you're above 61.50, I don't think you want to be heavily short or anything like that. Even if it pulled all the way back to 61.50, that could be just a test, a test. But, we do have these overbought conditions, as we noticed, and some of them are now giving sell signals. So we do trade those. And very importantly, and this I've talked about several times, when an option gets in the money deeply, and for SPY, that's 8 or 10 points in the money, in my opinion, then roll the thing, take a credit out of your position, and then eventually when the market does turn, you'll lose the money on that last option, let's say, but you'll made money on all the other options that you owned prior to that last roll. So I mentioned the newsletter. We're just about out of time. So if you go to this website, optionstrategist.com/McMillan Web, you can subscribe to our top 3 newsletters for a total of $99. You'll get 1 month each. Those are the 3 newsletters: Daily Volume Alerts, Daily Strategist, and Option Strategist. There's track records on all 3, and you'll see the track records are on our website. I would suggest taking them consecutively rather than all at the same time, because it's a lot of information to digest. We also invite you to visit our website. You'll be going to our website, of course, if you go to that link, but there's a lot of other stuff there, including free volatility data every week. We also have a YouTube channel, a couple of other newsletters, and basically that's our contact information. If you're interested in our money management, you can go to this website. I'll tell you that our minimum account size is 100,000. So I'll toss it back to you, Anthony.
Thank you, Larry. Can I ask a question?
Mm-hmm.
For VIX futures, is there a certain platform you like to use?
A platform, you say?
Yeah, I see.
Well, I mean,
like
I do my trading through RJ O'Brien,
okay.
but also IB was fine. We have a lot of managed accounts at IB with trades futures as well, interactive brokers.
One more question, briefly. Would you think about how the volatility kind of hung there in April?
You mean it didn't go higher than what, mid 40s or something? Is that what you're saying, or?
No, it just kind of reached some peaks, like it just stood there for just so long, and it just seemed a bit different.
Yeah. Well, yeah, the market made that V bottom so quickly though that VIX couldn't go much higher. In the pandemic, it went up to 90, and then if you're along some of these VIX calls, you can really make some money on them.
I know.
This time it was a little shakier on that. Then it quickly, when the market V bottomed like that, then VIX did form some buy signals, but it scared people. I think it made them a little nervous. So VIX didn't come all the way back down to 15 until just recently, and so I mean I don't think it's all that unusual, but each cycle in VIX is just a little bit different, and people react. I wouldn't say it's a fear indicator, but it's certainly an indicator of how expensive puts are, and that does represent some fear with people.
Thank you, Larry. I appreciate it.
Okay, sure.
Always refreshing and a privilege to hear from one of the very best and few volatility experts, Larry McMillan. Thank you so much for being here today. Larry, we do appreciate your research methodologies and achievements. His special offer link is now live in the chat box. Thank you, Larry.
Okay, glad to be here.
Thank you. Leigh Goldstein of 10-Minute Trades is next up. Leigh brings you a very powerful session for traders who want flexibility and precision. His talk, Trade When You Want to Trade, Cash or Prop Account, covers tools to capture big market moves, how to profit from high impact news events, and how to schedule trades around your availability. Please welcome Leigh Goldstein.
Hi, Anthony. Thank you very much. Let me know that you can hear me.
Yeah, we can hear you. Always
okay,
great to hear your voice.
All right, let me just very politely correct you. It's Leigh.
Leigh, I apologize.
My whole life, Anthony, people call me Leg. They've called me Leigh. You cannot imagine how many crazy names I've been called. But
that's the first time I did that too.
I know.
Yeah.
But anyway, I forgive you. All right. Thanks for having me, and I appreciate the invite. Welcome, everybody. I got a whole bunch of gifts today. Not selling anything real expensive, and I really enjoyed the previous presentation. I love the stats. I love the VIX. And Anthony, I don't know, were you having a problem getting the VIX on your charts? Is that why you were asking, or because sometimes you have to pay? Sometimes you have to pay extra for that indicator. It's not always included in the data.
That makes sense because I don't get it on all my platforms. I didn't know that.
That's what it is. It's usually something you have to pay. It's very inexpensive, but you usually have to pay a couple of bucks a month for it. So that might be
Thank you,
why.
Leigh. I
Okay,
appreciate
anytime. Everybody, I want to thank you for spending this time with me. I'm going to do something totally different that I've never done in this webinar before. I'm very often a guest with Traders Corner. It's very important to us at 10-minute trades. These events mean a lot to us because we get a good opportunity to connect with all of you out there. And I really believe that these are complicated markets. And I also really believe that trading is hard. You know, whether you're trading prop, you're trading cash, automated robots, it's not easy. Nobody's going to give you money in a minute. You're going to have to work hard to get the money. And my goal today is to give you a whole bunch of free tools to help you to make your trading easier and to show you exactly the way that I set up my charts for trading the news and for scalping discretionary trades. So at 10-minute trades, we have a lot of setups besides just trading the news. In fact, we're right in the middle of earnings right now, and I'll talk briefly about that. But my main goal, I'm going to show you how to set up your charts. Once again, my name is Leigh Goldstein. I'm the trading director, 10-minute trades. I've been here for almost 9 years. Please remember, you can lose money trading futures. Trade carefully. What we do at 10-minute trades, we're trading appointment-based, time-based setups. We trade by schedules, and we trade futures using the NinjaTrader platform. Our software installs into NinjaTrader. We have many different setups that our software can use and create. We have magnet trades, which is a strategy. We have our trap trade reversal strategies. We have just simple scalp reversals and continuations. Of course, the traditional method of news trading, the spike. And all of those methods are part of our software. We have 3 strategies. We have a system. We call our software the JOBB News Trader Suite. And it's all included in our pro membership. And I'm going to offer everyone an unbelievably deal for our pro membership at the end of this, a 30-day trial. But my presentation might go, I hope I don't want to go over, but I may not have any time at all to sell. And I really would rather teach and give you what I wanted to give you. So I will ultimately post the link. Our NewsTrader software is a strategy, and it installs into the NinjaTrader platform. Briefly, I'm just going to go over the system that we use. These are the elements that make up our system. We have a weekly schedule. We have daily trade reports. Many of our events have setups that we send to our members. Plenty of our events also are what we call trade room events, where you don't get a trade report. You come into the trade room, we talk about the trade, we show you how to set it up, and then we trade it together in the room. And a lot of times that's what our earnings trades are, and we are dead in the middle of earnings season. And earnings season is my favorite season. I love earnings trades more than any other trades that we take in our company. It's just the most fun. They are the biggest exploding trades. One of our members, I just have to show you the screenshot he sent me yesterday, was Microsoft, over $1,000 in a matter of seconds in Microsoft. And if you get our emails, watch your email. I'm making a video about the Microsoft trade. We find almost all of our trades on the free calendars: Forex Factory, investing.com, financialjuice.com, and tradingeconomics.com. Those are my 4 favorite calendars. When you go to those calendars, you'll see you're going to get a schedule of events. We have vetted all these events. We go through them. And one of the things we do is we let our members know which of these events are worth trading, obviously, in our opinion. And that's how we find our events, on the various calendars. We then create a weekly schedule from a collection of calendars. We send the schedule to our members, and they can see when our trade room is open, the events we're going to trade, if we're going to stream on YouTube or not for those events. And that's basically our system. And then we have what we call a daily trade report. Sometimes before, the day before we come into the trade room, we will send our members a daily trade report. And it looks like this. Today, in our trade room, we had these events that we were trading. The PCE price index report we traded this morning, it was a huge winner. Anybody that traded this report with us this morning made literally more than $500 if they just followed the way we set the trade up. It was easy. It was also a specialized reversal trade. But these are our daily trade reports. They show you how to configure our software to set it up for this particular event. And the daily trade reports also have information about the event, how it's been doing over the last 6 events. Is it a winner? Is it a loser? Has it been medium? Is it a great performer? These are important issues when we look at events that we're going to trade. So what happens then is they use our software. It's a custom strategy. It's actually 3 strategies. It installs into NinjaTrader in about 5 minutes. It's really easy to use, and it lets you either set up automated entry trades that you usually manage the exits on your own. If your targets are all hit, then a trade can be 100% automated. And then we also have discretionary setups, because over the years, we realized that just trading a spike trade at the exact moment of the news may not be the only way to trade news. Now you can trade after the news. Sometimes we trade before the news, and then we have a system called the magnet trade. Magnets are exits on the charts, high of day, low of day. Those are magnets. Lots of traders look at those areas. Those areas pull price like a magnet, and we created a strategy to trade the pulling of the price into those areas. We call that the magnet trade. And I love the fact that some of my members are in this room right now, and they're sending me messages. Yep, I made $770 this morning on the gold trade, the PCE price trade. So Ray, thank you for that. And I think that Ray also made a whole bunch of money on Microsoft yesterday in his prop account, 280 bucks trading Microsoft's earnings. So the key is for us, it's not whether me personally made money in the trade room, but I'm not being successful unless you're making money in our trade room and unless you're learning how to do this. That is the most important thing. If we make money as a company trading our reports with you, of course, that's what we want to do. But we're also taking experimental trades. We're taking the highest risk trades, and we don't always recommend that you do that. We do that so you don't have to take those high risk trades. We have to test a lot more events than what we would recommend that you trade. The key is to find the best of the best reports. There are 3 categories that create the events that we trade: high impact economic reports, FOMC statements, job reports, GDP reports. Big company earning reports would be category 2, and then market opens and closes. And we literally just started trading market open and closes again. This morning, we have a nice setup for the MNQ on the left. And it's a very low risk market open trade. And once you perfect it, you can move on to the full size NQ, or you could add more contracts. We create a spike trade. This morning, the market, it was like a gift this morning. The market just basically moved in one direction on the MNQ. It filled our trade, and it did the same thing on the NQ. It filled our trade, and it allowed us to trail. Our software automatically puts the orders on the chart, and then it could automatically trail if I configure it that way, or because NinjaTrader supports chart trading, you can manually trail your orders, and it's very, very easy to do. What was fascinating this morning about the market open, and if you look and see what happened here, we also have a setup on the YM. And the importance of setups can't be expressed more importantly. The YM, it actually jolted to the upside before it started moving down. So the importance of knowing, or at least trying to understand, how large your bracket should be when the market and your orders are put on the chart. The key is you don't want to be filled on the wrong side of the trade. The YM happened to move up a little bit more than 30 ticks before it went short. So if your bracket was 20 ticks or 28 ticks, you might have gotten filled on the wrong side. So it's very important not to just trade randomly, not to just throw trades on and hope for the best, but to study the individual event and come up with the most reliable and the safest of setups. And the same thing, of course, is true with earnings. And of course, it's true with any kind of, a data report, a jobs report, any of those reports. So once again, there's hundreds of triggers, hundreds of events within those categories. We vet those events and we try to pick the best of the best. You can trade the way that we trade in a prop account. You can use a cash account, of course. The rules vary from different prop account companies, so you want to make sure that you understand what their rules are. But almost all of our members these days in the trade room are trading with prop accounts. I'd say it's about 80% to 20% for cash. The key, I believe that the key to any type of trading, whether it be discretionary scalping, whether it be using one of our other mentors that are here today, some of them, you could start with our chart layouts, which are very clear and simple, and then add their indicators to some of the charts. The key for us is clarity in the charts, easy and simple. So what I'm going to go over is creating charts to trade the news, and I'm going to show you some tips and tricks. And I have a PDF that I don't know if I'm allowed to hand that out at the webinar. Anthony, if you let me know if I'm allowed to give everyone a PDF with some of these links for our free clock, our free VWAP, our free squeeze. If not, if you send me an email, then I can send it to you that way. But
as long as I could have one, I don't care.
Okay, yeah, no problem.
Thank you.
Okay, so before I go, I'll remember to put that in the, let me see if I have it here. If I don't have it, I'll make sure. There's usually a document where I could put it. I'll look. If not, I'll make sure everybody gets it in an email. So we have indicators that we use on our charts. This is just a layout of everything we do on our charts. We use the current open, high, low, the NinjaTrader pivots, that's a free indicator. We have a free VWAP indicator for everyone if you're not a lifetime NinjaTrader subscriber. The net change display is a free indicator, volume up, down, and I found everybody a free squeeze indicator. And then we have a free clock called Topmost Clock, and we have free time sync programs that are very important. And then I'm just going to talk about the NinjaTrader output, what it is, trading hour templates on the chart, the ruler, and reset the sim. And I'm going to do this all in 25 minutes. Our software can scalp trade, absolutely. So here is a regular NinjaTrader platform. When you start trading, you're going to go to New, you're going to go to Chart, and let's select the ES. If the ES isn't on there, trust me, on a brand new system, or if you are a new trader, the ES 925 contract will be on there. On the right side, it'll give you the default settings for the chart. You can leave it all the way it is. You're going to load 5 days of data. Don't load more than that. And very important, the trading hour template is a very important setting. When the default setting is use instrument settings, that is perfect. And we're going to just okay it. A chart is going to open for the ES. It's going to look like this. It's going to be a naked chart. And we're going to start adding all of our tools to the chart, okay? Now, the key is, first off, put your chart trader on the chart. Look up top where my mouse is. We're going to click on that icon, chart trader. Bingo, that allows you to place orders. Now, our software mostly replaces the chart trader, and that's fine. But for now, you want to have it on the chart no matter what. Now, I'm going to make a couple of quick updates to the chart trader. I'm going to right click in a blank spot. I'm going to go to properties and show realized P&L when flat. I'm going to check it. And the other thing I like to do is the P&L profit and loss display unit. I like to see the money, and I'm going to put that on currency. And then I'm going to apply it and okay it. So now I'm going to see dollars and cents if I make a trade. And also, when the trade is over, it's going to keep a running total of how much I've made or lost on all my simulated trades. When you first create a chart, it's going to be in simulation mode. Let's say you have a trade and you buy a whole bunch of contracts by pressing the buy market. You close out the trade and it's showing a profit or a loss, and you really would rather get started back at zero because you're doing another trade, a whole different setup. This I call the NinjaTrader control panel. To reset your sim back to zero, you go to accounts, right click the sim 101. That's where my $25 is. Right click it, click edit account, click reset. The default will be clear the history. Just go yes and okay it. And now when I go back, my chart and sim is reset to zero. That's what most traders like to do. You start each trade at zero so you know what's going on. Then what I like to do is put my clock on the chart. This is called topmost clock. If you put your mouse dead center in the clock, you can move it around. If you put your right click dead center, you can change the size, you could change the color, you could change the type of clock, etc. Okay? Very important for news and event traders, because obviously we want to know exactly what time it is. And we also want to be perfectly in sync, because we are trading events, and our events, we want them to be absolutely in sync with the market. So the clock is a great tool for us. So now our chart is set up, but you notice the price on the right, too close to the margin. I'm going to right click, I'm going to go to properties, and I'm going to make my right side margin 50, and that's going to give me some immediate space. So right away, I've got room, okay? I've got room to move. If my candles are a little bit too tight, I can hold down my left mouse button, spread them apart a little bit so the candles are wider, you get a clearer picture. All right, so we've got a tradable chart here. We're in sim. Up at the top, I can change the time frame, 1 minute, 30 seconds if I want. Those are the two most popular time frames we use. But now let's get cracking and let's put our indicators on the chart. I'm going to right click, I'm going to go to indicators, and my first indicator is my favorite indicator. I'm going to scroll down to current day open high low. Double click it, it configures automatically. I don't have to do anything else to that indicator, just apply it and okay it. And you'll notice if I hold the left mouse button in the price area and shrink it down, I'll see the lines that make up the indicator. Green is high of day. The orangish line is yesterday's open at 6 p.m. and red is low of day. That trading hour template, remember when you created the chart? Right click the chart, click on data series, and you wind up with that same screen when you first created the chart. Trading hour template, when that template is on use instrument settings, it configures your indicators so that they are calculated from the time when the market reopens previous day at 6 p.m. Okay, some people like to start their indicators at midnight. Some people like to start their indicators at 9:30. The default is what we use because that's what comes up when you first create a chart. what do you think most traders are going to be looking at? Default, because most people don't make changes. It's only when you become more experienced and more expert that you start making changes. Default is great, especially we have a setup called the magnet trade. A magnet is like a high of the day. Prices revolve around highs of days and lows of days at times. They're often pulled into those price levels. Look what happened here. Price went up to the 6 p.m.-ish time, pulled back down, and it hit the low of the day. That low of the day is our magnet trade, and we have a setup, a strategy that trades that exit. We exit the trade at the magnet, the low of the day. Any chart that you like, any indicator that you like could also be a magnet, because our magnet strategy also has a custom setting where you can use any level on the chart to make your magnet. So if you're a Fibonacci trader, for instance, and you want to use your Fibonacci levels as a magnet, you can do that. We have a almost completely automated high of day, low of day system called the magnet strategy. You just right click the chart, click on strategies, and then there's our magnet strategy. I can apply it and just show you. You want to be able to see your control panel, because that turns on trades in NinjaTrader. And when you turn on our magnet trade, we get a magnet entry, long or short. We get entries to the magnet and that we can move. It's a whole strategy that we love. And that is one of the best things that we do at 10-minute trades besides earnings, is trade magnets. But you have to have your charts set up the right way. And of course, you want them clear and simple and easy to use. So we've got our high of day, low of day. We're going to go back to indicators, and I'm going to put on my pivots. Love the pivots because traders are always looking at pivots. Double click pivots. We got R1, R2, R3, S1, S2, S3. PP, I'm going to click it, change the color to black just because it doesn't conflict with our high of day, low of day. Apply it, okay it. And now all my pivots are on the chart. Price often revolves around pivots. We're not done. Right click, click indicators again. And now we're going to add our VWAP. If you're a lifetime NinjaTrader subscriber, there is a VWAP that's included with the NinjaTrader platform. You go to order flow VWAP, double click it. It will then show up under configured. Standard deviation bands get set to none. And then our VWAP becomes a line. The only other thing I like to do is on the plots with the VWAP, I click it and change the width to a 3, a 2 or a 3, and watch what happens. Apply it and okay it. Look how nicely thick that VWAP line is. If you don't want it that thick, you just change that line to a 2, but that is the VWAP. Lots and lots of traders look at the VWAP. Price again revolves often during the day around VWAP. Here was a VWAP magnet trade. We love these levels and they're important. And these are very, very simple indicators that you could put on your chart. The other thing we add, a little bit of volume goes a long way. Ninja, again, free volume. And there's a lot of different ones you can use. We've been using volume up and down. It works great. Apply it, okay it. If you put your mouse on this line and shrink the line, you don't need to take up that much space. And then, as I said, I found you all a free squeeze. It's a little bit different than the one I have on my chart. Nevertheless, you're going to go to indicator. We're going to load the squeeze on. Double click it. The key with the squeeze is setting the colors. The squeeze dot color right now is going to be cyan. The normal dot color is black. And then I'm going to have lime, and then a different color, slightly different color, green, red, and coral as my squeeze colors. And what the squeeze is a fantastic, fantastic momentum indicator that we love. And it helps us, especially if we're trading after the news, Sometimes we use it before the news. I'm just looking for my coral color, apply it, okay it. Now, I love that this happened. Sometimes when you put the squeeze on your chart, it does this wacky, all the momentum lines are the same length. Right click, go back into the indicator. You'll notice, make sure you highlight the squeeze indicator. And we're going to go into auto scale. If it's checked, we're going to uncheck it and apply it. And our squeeze is now normal. The only other thing we're going to do is change our momentum length under parameters to 17. We like that setting for our 30-second squeeze. Apply it and okay it. And now we could shrink down our indicators, and our charts are pretty much set up for news trading, for scalp trading, for any kind of trading that you might want to do. Very, very, very simple setting up of the charts. Let's go back and just look at all the things that I put on the chart. So we use the squeeze, and you can add other indicators if you want. The current day OHL, very important, okay? That's the open, high, low. That's the red, green, definitely important magnets. We had the VWAP, we put that on. You know, if you're an EMA trader, you put your EMAs on using this indicator tab. There's many free indicators that are part of NinjaTrader. You don't have to spend a lot of money to get started in trading. The clock is a clock that's called Topmost Clock. And again, it's free, and I'm going to include a link so that you can have that clock on your charts as well. Now, one of the other very important elements or tools that are on the chart that we use all the time would be the ruler. Keep in mind that what we do at 10-minute trades, we're constantly trading news events. So we're trading earnings, for instance, and when a market explodes, there might be a group of candles or even just one candle that we want to look at, and we want to know month after month how big, how many ticks that candle exploded. The easiest way is to use the ruler. Yes, I could right click the chart, I could click the crosshair, I could turn it on local, I could put my crosshair at the top of the candle, and then I could look at the price on the right, I could go to the bottom of the candle. Pain in the neck, big waste of time. What I would do is at the top of the chart, we have a little pencil. Click the pencil, click the ruler, go to the top of the candle you want to measure, go to the bottom, and it shows you the Y value, 41 ticks. I know that that candle was 41 ticks. So I can easily go back in time through using market playback trades, and make a file of all the spikes, for instance, that the PCE trade made today. This morning at 8:30, that happens to be the market open spike. And believe me, you could study the market open spike. That's something you want to do when you're setting up a market open trade. At 8:30, we had the PCE spike. All right, and this is on the ES. This was the trade candle. This was the candle represented by the spike that the market made the moment that the PCE news was released. So I just click the ruler, the pencil, I click the ruler, and then I click the top of the candle, the bottom of the candle, and that is the maximum number of ticks that the ES moved on that report. Sometimes it might have started in the middle of the candle, and that's one of the beauties of doing market replay or even using lower time frame charts. One thing that is super important, people don't realize when they take a trade, a lot of times they'll see, for instance, that the market spiked. And To the naked eye, it all moved in one direction perfectly. And you look up at your profit and loss and you see that you had a tremendous loss on that trade and you don't understand why. When I first started trading with 10-minute trades, I knew nothing about news trades. I was a member. I was a member for 6 months and I begged them to hire me. And I begged them to let me start a trade room for them. And I learned how to do this on the job. And I started 9 years ago now. And I didn't know what I was doing. I thought that if a 1-minute chart moved in one direction, that was the trade. But if you realize that if you go to a lower time frame chart, particularly a 1 or a 5 range chart, the range chart with a 1 range chart shows you every single little tick the market made. So you can go to a specific moment in time and you can check to be certain where your direction was. So for instance, this morning, I can go back to 8:30 and maybe I got filled at a direction that I didn't understand. I can now look at the market literally tick by tick. So it's not a 1-minute chart. It's like under a nanosecond, because if you look at the time, all of this movement is happening at 8:30. It doesn't change from 8:30 until I'm more than a page full of data. What that means is the market moved up, it moved down, it moved up, it moved down, it moved up. And all of that was not in being able to be seen by the naked eye. So in order to understand sometimes why a trade didn't work, when you're sure it did because you looked at a higher time frame chart, you have to look at the lowest time frame charts will let you see tick by tick movement. And that's true of a 1 range chart. You have to realize there are certain instruments where a 1 range chart might be too small of a value and you can't get the chart to look in a way that you can analyze. And in that case, you might want to go to a 5 range chart. The NQ in particular needs a tiny bit longer range chart. A 5 range is better on the NQ for analysis. It just makes it so that you can see the way the market moved better. So that's just a tip. Analyzing trades is very important. Understanding why a trade worked or didn't work is critical to why you made money or why you didn't make money. All right. Now let me show you our offer for today. I want to just show you a couple of quick trades that we made, because remember what I said at the beginning of this presentation. My goal is to teach and teach and teach and to show you how to trade the news, how to trade earnings, how to learn how to use software that helps you to trade events on a schedule. This morning, we had a fantastic, what we call a trap trade. We were trading the PCE price index. Almost all of our members made a whole bunch of money on this trade. It was an 8:30 event, exactly at 8:30, right before, 5 seconds before our software. We had 2 setups. We had an RTY spike, and our software put the orders on for the RTY spike, and we also had a trap trade. We had 2 orders above the market, 2 orders below the market. If the market goes up, we sell the market. If the market goes down on a trap trade, we buy the market. It's a specialized reversal trade. This morning on gold futures, which we were trading on PCE price index, because that's what our research tells us to trade, along with the RTY, the price went down first. It filled both of our orders, and then there was a fantastic reversal. And as the price reversed, that's where we were making our money, because the price went down, we were put in the market short, and we made over $575 on that trade, and it was over in a minute. I'll show you, 1 minute and 40 seconds. That's how fast that trade was. The RTY trade was over in less than 30 seconds. Of course, we can scalp trade with our software. And then, as I showed you before, We also have something called reverse continuations. The news comes out and we can just very simply put a little scalp on, but it's as safe as a scalp can be because we have targets and we have stops and we can trail. We have many different setups that we could put on. I want to teach you how to learn how to use these setups. It's easy. Even more, it's fun to trade this way. We trade on a schedule. I've showed you some earnings. If you have questions, if you need help, if you're a member and you're having a problem, you can reach us, help@10minutetrades.com. If you all have questions about this presentation today, you can reach us also, help@10minutetrades.com. Here's the deal, everybody. I would love for you to join us for all of our upcoming news, earnings, and magnet trade rooms. I want to teach you how to do this. I spend every day, some days we have 5 trade rooms, some days we have no trade rooms, but most days we have 2 or 3 trade rooms. Here's our schedule from this week, just so you can really get a true idea. This week was a busy week. We had quite a few trade rooms. In fact, when I leave here today, we're going to be going into our trade room at 3:30, and we're going to be trading Amazon and Apple, 2 of my favorite trades. They're great trades normally. But these are all the events that we traded this week. United Health, UPS earnings, Boeing earnings. All of those were winning trades. We traded the 7-year note auction. We traded advanced GDP yesterday, and the ADP report was a loser. We had a lousy ADP report yesterday. We traded the Canada bank rate statement, and we traded the FOMC statement yesterday. And some of us grabbed a short, and some of us missed a short on the FOMC. But I would love for you to join us in all of our trade rooms, earning trade rooms, magnet trade rooms, every trade room that we have. You'll get access to our full membership, all of our software, all of our trade reports. We'll email them to you. You'll be a full-fledged 10-Minute Trades Pro member. You'll have a full trade room subscription. You can come into the trade room. We leave it open all week. And then you come into the trade room on a schedule. You get access to our trap trade strategy. You can trade, as I said, choose the right prop account. There's lots of prop companies that allow you to trade the way that we trade. 30-day trial, it's ridiculous for just $20.25. It renews at our normal pro membership is $97 a month. All you have to do to cancel is send us an email. I gave you that email, help@10minutetrades. The only thing we require, send the email before your 30 days is up. That's the only rule we have to canceling a membership. It's so easy. If you're not happy, just send us an email. $20.25 for 30 days, everything included, www.gopro25.com. This expires tomorrow at midnight. We would love if you join us. All of the things that are included, the News Trader software suite, the magnet trade strategy, the trap trade strategy, we teach every day in our trade room. It's a constant learning experience. We don't just go in the trade room, set up the trade, and leave. Most trade rooms, ballpark, are about 30 minutes long. We get there, we go over the daily trade report if we have a report that day. We go over the software setups. We explain about how the markets are. Are they super volatile? Are they safe? Should we pass on the trade? Maybe we shouldn't trade right now. Maybe there's some crazy tweeting going on that's making the market too volatile. Those are all things that you want to take into account if you're trading, especially if you're trading news and earnings. And we teach you how to trade selected stock earnings with futures. We've invented that system. Trade on a schedule. You could trade on your schedule. It doesn't have to be our schedule. And I will guide you step by step in each of the trade rooms. The pro membership for 30 days is just $20.25. www.gopro25.com. Expires tomorrow at midnight. We have something we call family money trades. Those are our favorite setups, the best of the best. They're the trades that over the course of time return a profit more than most other trades. So if you look at, maybe you'll look at the last 6 reports, last 6 Apple earnings. If 4 of those earnings were profitable, that will very possibly be a family money trade, because there's a great opportunity to make profit if you trade Apple, especially if 4 out of 6 have been winners. We include the magnet trade strategy, the live news trading room, our news trader software. But the most important thing is the teaching that we do in the room. I really care if you understand and learn what you're doing. Not everybody stays with us, but everybody who joins with us learns an incredibly fantastic lesson about trading. Lessons. www.gopro25.com. Folks, I want to thank you for listening. Anthony, make sure you send me your email, that I have your email, so I can include that PDF. Everybody, I'll include the links in our PDF that I send in our email to everyone. And Anthony, thank you so much for having me.
Oh, thank
And
you,
I'll see
Leigh.
you the
Really
next time.
appreciate it.
Okay.
Thanks, Leigh. That was, as always, a great session for any trader looking to streamline and scale. Check out the chat now for Leigh's special offer. Thanks so much for being here today, Leigh. We always appreciate it. We sincerely do. Thank you so much.
Thank you.
Thank you. At 3 p.m., we welcome Joel Wyse of Affordable Indicators, showcasing the newest tools available to NinjaTrader users and anyone looking to automate and optimize their platform. In his session, NinjaTrader upgrades elite tools for everyone. You'll discover next level chart execution features, risk management, and trade copier tools, and fully automated support and resistance tools. Let's bring in the absolute trade copier monster who's just killing it with his NinjaTrader tools, Joel Wyse. How are you, Joel?
I'm doing great. Can you guys hear me okay?
We can. Thanks for being here.
Pulled up the questions. I'm always just going to level with you guys. I just rolled into my office 30 minutes ago. I was out looking at wedding venues today. I just got engaged last
Congratulations.
couple of months. So it's been kind of a crazy day. I'll tell you, it's hard to find a wedding venue that maybe I'm just expecting a lot. I don't know. It's been hard for us to figure out the right place, but we're here and I'm so excited to be here. So thanks for having me, Anthony. And I just saw the end of Leigh's presentation. What a cool value for 20 bucks to hop in and just get some ideas and get a feel for kind of what he's doing. It seems like a pretty low investment, high potential return. So I'm going to do my best to just bring you guys some value today, just update you on what I've been doing. Is anyone in the house here familiar, anyone in the room familiar with me, or is this kind of a new, am I a new figure to you guys? So I've been on the NinjaTrader platform for a while. Thanks, Ray. I see you, man. I love interacting with you guys. So if you guys would just hit me up, I'll be watching the questions. Ray, you've been with me for a long time. Appreciate that, man. Eric, new, thanks. I see you in there. So yeah, guys, I've been on the NinjaTrader platform my whole adult life. I'm 39 years old. I've been developing software, day trading, futures, mostly developing software. Day trading is still something I love. It's still a goal. It helps me understand you guys and know what you guys want as I'm developing software, obviously. Thank you, Anthony, for mentioning the trade copier, big thing. Really just so grateful and blessed to have developed that and continue to develop it. But I'll tell you, growing a software company is hard, right? We haven't released a new update in 6 months, but I'm around, trust me, I'm around. I'm helping customers. I'm trying to build a little team and kind of build a foundation so that I can get back into the development side. And let me tell you, the AI is sick for developing. It's helped me develop my website. It's helping me develop NinjaScript. So there's some big things coming, and I'm here, going to be here for a long time. So I'm going nowhere. But yeah, let's get into the presentation, and I want to do my best to just break down the markets with you guys and bring you some value. And at the end, I'll have an offer, some of the software I've created at really good prices, hopefully. And if you guys want to jump on that, so be it. And then be sure to stick around for Rory, I believe at the end is presenting as well. So let's get into it. my name is Joel Wyse. Again, affordableindicators.com. I will put, let me see if I can find this. Here we go. I will put this link in the chat right now for you guys. Just make it very convenient for you guys to check out my website even while we're talking. Let me just do that. There we go. So this is my website, Traders Corner page. So yeah, let's hop into what I've got for you guys today. Thanks for your patience as I get acclimated here. All right. So I'm presenting today from my office. Here is just pulled in. I'm a big Tesla guy. You can see my black Tesla in the background. I've actually gotten a new Model 3 since then. This is my office building, Suite A. Super proud of this. It was a big move for me to kind of have a place where I can work and call it my business, separate my life at home from my work. So 1,200 square feet, 4 offices, kitchen, remodeled, super fun project. You can find it on Google Maps if you want to go out there and see it. This is my desk, super simple. And then here, something I love is my sauna and cold plunge. I've been showing this now in several presentations, probably need to refresh this. There's lots of things I love, but this is one of the things I love, discipline I've developed to kind of challenge my mind, challenge my body, and just decompress from the day. I encourage you guys need something like this. I mean, day trading takes a lot out of us, right? And so having something like this is a game changer as you're getting into you know, a routine around day trading and becoming a successful day trader. So I want to show you guys my most recent payouts. Gosh, it's been over a year now. That's crazy. But at one point I was trading heavily and got over $30,000 in payouts through Apex Trader Funding. So that's awesome. I'm going to show you today. I've got some new accounts set up with Apex. I'm going to show you guys exactly how many accounts I have with both BlueNox and Apex, all funded accounts. I haven't traded them yet, but I'm gearing up to start trading, hopefully, as the market in this fall. I know the market's been active this summer, but just try and stay away from summer trading. So here's the goal today, guys. Today, I want to showcase my most popular NinjaTrader add-ons for trading futures with excellence. So if I were to rebrand my company, which I want to do, I've already bought it. I think I've bought tradingwithexcellence.com. And so that's kind of what I want my brand to be, is to deliver excellence for you guys. And so let's hop into a few ideas here. These are some ideas I like to share around a trading plan. I think you guys should develop this. I'm just going to go quickly because we're going to get straight to the charts. I want to show you guys some of the things I've created right in the chart window. We're going to spend a majority of our time on that because we have 40 minutes remaining right in the chart window. But here's some concepts, and I come from not seeing the presentations today. I think it was mostly options and stocks earlier today, and then Leigh, I believe, trades futures. So, but I recommend trading hours, right? I don't think it's sustainable to trade all day long. I think it's crazy, right? This should be the advantage of winning as a trader, is that you only work 2 hours a day, right? Maybe 3 hours a day. You got your warm up if you're kind of pre-market, getting a pace for what's happening for the day. But then I think by lunchtime, you really should be done. Just my thoughts. Who wants to stare at a screen all day long? I don't. Like when I'm in my 40s and in my 50s, like I want to be enjoying my kids and off to doing something else in the afternoon, right? So just as something to think about, if you guys are addicted to the screens, you're like trading all the way until the morning. I know some of you guys are trading all the way until it closes at 4:45 or whatever it is, right? Is it 5 o'clock and then it reopens at 6 o'clock Eastern? You guys are crazy. You guys need to just, almost like Leigh. I know Leigh's thing, right? I wasn't at Leigh's presentation, but he just has a window. Like he's looking at just trade breakouts, 10-minute trades, right? So there's some validity there. Again, just having your boundaries around how many trades you make, what markets are you becoming an expert in? Maybe it's gold for you, maybe it's crude. For me, it's the NASDAQ and the ES. I'm looking for 5 trades a day. How many contracts, how many times do you trade big size? You shouldn't be doing that. Your language and your mindset. Again, I think so important to find for yourself. What's your mindset? Again, I know so many people just lose it. Leigh, thank you, Ray. Leigh, Yeah, it's embarrassing. I want to be corrected though. I want to be corrected. So you guys come in with me. If you see
I did the
anything,
same thing. I called him Leigh instead of Lee. It was the first time I did that. I just wanted to say that.
dude, it helps to just normalize things, right? Like I'm not an idiot for making that mistake. It's cool. We can just keep moving. Leigh will forgive me, I'm sure. Hopefully Leigh and I can talk because I have a bracket trader that places like a buy stop and a sell stop, and I think it could be a good tool for him. I know he has one too, but anyways, main topics, guys. I feel like I'm getting long-winded. Let's keep it moving. So thank you, Ray. And I want to hear from you guys. So I'll leave time for some questions in here. Main topics I want to cover today is chart execution features. So I've got a chart trader that I built with tons of features based on what you need and how you trade. I'm going to showcase my trade copier only briefly. Don't want to spend a lot of time on that. Lastly, the biggest thing I want to do today is just get in the charts. I want to show you support and resistance trading and how I see it breaking down. So literally, I haven't looked at the charts yet. Actually, just connected my Ninja at 255, barely in time to make it here. So let's get into the charts. So I'm going to exit out right now. We're going to take a look here. It looks like I'm missing some data. That's fantastic. Let me attempt, because I've got Boolinox. I'm connected to Rhythmic. Let me just attempt to disconnect and reconnect to my Tradebate and see if that helps me with data. But guys, like my chart is simple, right? I think so many times we overcomplicate it. I think moving averages work, right? Minute charts work. And I hope that in my next presentation, I will share this because I've actually got statistics on what charts my customers are trading now. So this is a new thing. I'm trying to do some research and I've got some statistics on what charts are actually being traded by the most traders. There we go. That looks better. Thank you, Tradevate, for the data. I guess Rhythmic just wasn't cutting it. It looks like now we filled that gap between 230 and 3. So I'm going to start with the NASDAQ and just scroll back to the open. And again, I just want to fill you guys in on what you're seeing here. This is real simple, right? I don't have any secrets in this presentation. I don't have a trading room right now, but I do have accounts. I'll show you that. Hopefully soon I'll be able to inform you guys of my trading and my performance, so on and so forth. Rory, I see you in here, so you will be presenting. Definitely want to stick around for that. My ADHD just kicks in. I'm like checking the chat. Is anyone saying anything? Nobody. You guys need to say something. I'm watching it. But we have here the 20 and the 50 EMA. This is a 1 minute chart, guys. So we have the 20 and the 50 EMA. And then up here, we have the 20 and the 50 EMA. So does anyone have an idea of what this 20 and 50 could be up here? And why do they jump every 5 bars? Why do you think you see how it jumps every 5 bars? So both of these clouds are 20 and 50 EMAs. The one at the top is going to be your 5 minute, right? So I'm able to see on here what the 5 minute EMA is doing. I built this. You don't need a secondary data series to see this. It's just there, right? And so now with this, I've also got a VWAP, which is this red line here. And then this here, I believe, is a 200 EMA. But let me just check on that. Because guys, trading hasn't been a priority for me. I'm like, I have to either build the software company or trade. It's hard to do both. The 200, cool. So that's going to be a 200 EMA. I think it also matters, right? So as you're watching all these factors, right, and we just open, obviously I'm not going to call out trades, guys, but it's easy to see trades after the fact. Of course it is, right? But I want to show you guys, okay, so we've talked about all the moving averages. I've got just simple volume down here. If it's an up bar, it's green. If it's a down bar, the bar closes down, it's going to display red. Kind of gives me a visual of what the volume's doing, right? And so a lot of times you do get these washouts. I think I've seen even a presentation recently on that. When you get high volume, like we opened, it kind of settled down, high volume here, that was the end of the move. So volume, I think, is very key to look at for end of moves or reversals. All right, and then here's the ATR. So the ATR, average true range, is telling me what's the average size of the bars I'm dealing with. So it lets me know kind of like what's my stop loss and my target going to be. Okay. So this is how I break down a chart, right? It's super simple, right? It's not hard at all. And I think this is where we get it wrong, right? We're overcomplicating it. I think a lot of times we're getting nervous. We think we have to take a profit. We're taking these small, tiny profits, these large stop losses, right? These are the common problems I see with my customers. And most of my customers buy my products. Like the trade copier, it's not really a success or failure thing. It's just like everyone needs a trade copier, right? Or the chart trader. It's just tools, right? Like if I hit buy click, now I can click and then click on the chart. It makes placing orders easier and more straightforward, right? And so, but sometimes my clients do come to me and they say, Joel, like what works? Do you have anything that you think has value and would be helpful for me in making decisions as I trade, right? And then this is what I offer, right? This is what I promote in email marketing when it comes to like clients who have bought. I've sold almost 4,000 trade copiers, guys. I'm really proud of that. Like it's crazy. You know, I'm just so grateful for the trade copier and the chart trader products and how much fun it's been to build those and continue building them out. But again, clients come to me and they want to know like, what am I doing? And I'm usually just very honest. Hey, I don't trade right now. I don't trade a lot. I'm answering your questions all day long, right? Trying to build a little team, build a software company. So, but when it comes to trading, this is what I have, guys. So I told you, we have these moving averages, right? We have a quicker moving average. I think it's irrelevant. Maybe it's a 10, this little gray one that's kind of moving a little quicker here, up and down. It might be a 10, it might be an 80 MA. We have moving averages, all right? I already talked about that. We got the VWAP, exponential moving averages like EMAs. Okay, now I want to show you the key levels confluence indicators. So you see I have the indicator here that's drawing the yesterday's high, yesterday's close, very important, right? Yesterday's pivot. So we have the pivot point down here. We have the R1 up here. So it's drawing all the pivot points. And then the Fibonacci. So you can see here we've got off the high and low, we get some Fibonacci like a 786. Up here's a fib, up here's a fib. So you see, I don't think we get to these levels today, but you see up here, these overlaps. I'll be really watching these because the fib is overlapping the pivot, right? What's cool is developing this was hard, right? You see how these jump over as they start to overlap, like the high jumps over. So labels don't ever overlap as you change your chart around. But yeah, so I'm just watching key levels and I just want things to line up, you guys. I want things to line up. So obviously I'm gonna show you some trade setups, but again, disclaimer, I'm not the expert, guys. Like I don't want to mislead you into thinking that, hey, like I can teach you how to trade because that's not my business yet, right? I believe I'll be there shortly. I'm gonna want to launch a YouTube channel, even a live stream. Well, I have a YouTube channel, but I'd love to be in this every day, 9:30 to 10:30 maybe, trading like I laid out in the trading plan. And I'll show you guys the accounts I have, the Apex and the Bulanox funded accounts I have sitting there waiting for me to man up and trade, or just set a schedule and find the time to trade. So let's take a look here. When things line up, I'm gonna make that my statement for today. I just made that up. When things line up. Right, so what do I mean by things is plural? So I want two things. I want at least two things to line up. So as the market opens, it's screaming down. So first time I have two things lining up, right? You could say it's yesterday's high and yesterday's close. They're here. They're within a 9-point difference. Yesterday's close, yesterday's high. Yesterday's high and the close of yesterday as well, or 2 days ago. The high of 2 days ago and the close of yesterday. That's what this is. So again, this is explaining the key levels, but if you have a 2, it means 2 days ago. And sometimes you'll have 3s, 4s, 5s. If things overlap, then it's going to draw a zone. It's going to use the high, low, close, and values from up to 20 days ago. So we might see more of that. Okay, so we had these at least 2 things here. Could have went long, whatever. I think the big thing is, guys, is that you want to manage a stop and a target. I believe stops and targets should be 1-to-1, meaning you have to hold out for your profit. If you're going to risk, let's say here, you're going to hop in a long here and you're going to say, I'm going to try and catch a falling knife. If you're going to risk, let's say you're going to risk 20 points on this trade, you need to target at least 20 points. This is how I would, if you guys are here and you're like looking for a restart, this is what I would tell you. Or listen to Rory after this. He'll have a more automated solution. But this is what I would tell you. Profit target, stop loss, 1-to-1. Okay, and this is my intern. I'm just going to message him back. I don't even think I had time to tell him that I'm in the presentation. Cool. So are you guys with me on this? When things line up. So what about here, guys, as we're kind of like making a bottom, but what about this? Is this a lineup? We kind of broke in yesterday's close, retested it, came back down. What about this 8 EMA in yesterday's close? If you want to hop in on a short, right? So again, if I'm trading a pullback, one of the things I like to do again is 1-to-1, right? So I'd be at least on a pullback, I'm at least targeting a return to the low. So let's say I was to get short at 62, I'm targeting 40 because I'm at least, if I'm short here, hope you guys can see my crosshair. Can someone tell me, can you see my crosshair? It's kind of dark. Not sure. Maybe one thing I should have changed. But here at 943, if I'm getting short, I'm going to target 22 points, would risk at least 22 points as well. Give it some room to come up. Again, the 20 EMA, if you look here how the 20 EMA and the 50 EMA both provided resistance, right? Obviously, this is a quick, you know, if depending on what you're going for, this might be a break even or a loss, right? If you get short here, again up here. But again, I love these moving averages, guys. Why? Because I think a lot of people are watching this, right? And the market moves based on people buying and selling. So if people are trying to sell at these levels, there's a reason why the market moves at these levels, right? So eventually we get the double top at the 50, we break down below the 20 here on a nice bar. Okay, what happens? Back to the 20, sold off. Back to the 20, sold off. And I already forgot my own statement, but what was it? Multiple things or multiple things lining up, whatever it was. Okay, right here is a great place to sell, right? Because as we've broken clearly below yesterday's close, I've got multiple things backing me up. So if I sell at the 20, I have some room. If it pulls back, I've got yesterday's close to back me up, right? Yesterday's close has already proven that it matters. It's already shown me that it matters, right? If I look at here, right? I look at here. I'm not even prepared. I rarely use drawing tools. I look at here. Yesterday's close has already shown me that it makes a difference, right? And so I have multiple things right here. If I'm trying to sell the 20 and get in on this short, I'm saying if I sell the 20, can ride it down to the low from this morning, great trade, right? So let's take a look. I'm sure at some point we crossed over to the upside. So here is a trade. I have no idea what this did, but here's a trade I like to take. The first time it crosses over, pull back into the moving averages. Obviously, this is counter trend. Do I have multiple things? No, right? I don't have multiple things. I wish I had a pivot point here, or I wish the middle from yesterday was here, but it's not. So let's see what happens. Obviously, you're sweating this out. You buy the 20, you're really sweating it out for 5 minutes, but eventually you get that run that I look for. Now, what happens when I buy a pullback? Whenever I buy a pullback, I'm targeting at least the previous high, right? So if the market's been running up, and I buy the 20, my target is at least the previous high. I'm being patient, right? I'm not going to take 5 points in the NASDAQ, okay? Because how many times can you only risk 5 points in the NASDAQ, right? So I know it feels good to get those 5-point wins, but I really believe the path to success, and hopefully I'll have payouts again soon to show for it, is through this kind of an idea, right? It is, all right, so if you buy the 20, so you're going from 64 up to 84. So if I'm taking this trade, I'm thinking I'm going to give it 20 points of room, right? So I'm going to go for 20 points, risk 20 points. And while we're talking about targets and stops, look down here, okay, at the ATR. A lot of times I like to at least risk 1 ATR, sometimes up to 2 ATRs. So if the ATR is a 12-point bar, it means that I'm risking between 12 and 24 points. I'm also forcing myself to target at least 12 or 24 points, whatever I decide to risk. Cool. Are you guys tracking with me so far? Is this cool? Do we have some NASDAQ traders in the room? Do we have some S&P traders in the room? Yeah, so let me just continue here. Obviously, we get into lunchtime. Shouldn't really be trading this anyways. Like, you should just get a few shorts here and be done if I talked about my trading plan. But let's just look, just for fun. Let's see some more trades. So what happens when the moving average crosses over? This would be more of a with the trend cross. So again, when this crosses over, first pullback, what does it do? I mean, this is like to the tick, hits the 20 and it's gone, right? So what's in this? If you talk about getting short at 80, let's say 79, riding it down to the low at 58, that's a 21-point move if you just get out when it retests the low. So again, more touches the 20. Now it always comes up and breaks through. So how many times have I been in trades like right here and I just get absolutely railed? Plenty of times, right? But that's why we have stop losses, right? That's why we say, okay, I'm shorting here. I've got a 20-point stop loss, 20-point target, 30-point stop loss, 30-point target. And sometimes it doesn't go your way. But this is why I think if we just look at the trade setup alone, the first time it crossed, let's look at the blue, first time it crossed. Okay, it's the tough one, right? Here you're probably stopped out down here, unless you just bailed on a break even after this bar failed to go up. You could just bail on a slight break below the low. Again, just since this presentation, what did we get? The bearish cross with the trend. We know the trend's down today, right? We can see it. We got the red moving averages above, and the 5-minute is a downtrend. You can even see here the 5-minute moving averages provided resistance, right? So what did we say about having multiple things? Do you think a 5-minute 20 with an S1 pivot point with the open of yesterday is like a powerful area to watch for reversal? Yes. All right. So again, just ideas, guys. So we crossed over, 20 crosses the 50. We sell the pullback into the area. What happens? Huge bar down. I would be very happy if I had taken this trade. Wouldn't that have been sick if I had actually taken this trade on my funded accounts? But that's okay. So we immediately return to the low. I'd be out right here as it returns to the low. Good stuff. So let's take a look at the ES real quick and see if we have any of these trades on the ES today that I've kind of showed you guys. Again, because I don't want to cherry pick, I just want to show some stuff. So again, this is a rough trade on the 20, right? I could see myself thinking like, okay, I've got yesterday's high, I've got the 20, you know, I might be trying to go short. I might be trying to go short here. Again, just trying to give you guys like an honest perspective of what might happen, right? I might be trying to go short here, right? And guess what? I'm not filled, right? It tanks. I'm like, oh shoot, I missed it, you know? And then maybe you get short this pullback when it comes back up, and obviously it's a burn, right? There's no profit in this. I mean, I can't really even make an excuse. I'd probably be stopped out when it breaks above this bar here, right? So guys, there's no like total solution here, right? But I think if you want to learn to be a trader, you learn to be a trader and you see the market, right? What do we have here? Yesterday's close, 20, lining up perfectly. Look at that short. Look at that short. What you can also say here, and this again, this is all in hindsight. I get it. I get it. I get it, you know, but you got the low from this morning. Markets going down. Bust the low from this morning. I think a pullback here is a great option for a trade, right? She crosses here. By the way, I don't want to forget about this cross here. It crossed here, and that's not really a profitable venture there unless you're saying you're in right here. I mean, that's, you know, you could take that double bottom with a crossover long. So here, 20 and 50 cross, buy the pullback. That's a winning trade. So here, 20 and 50 cross, sell the pullback, winning trade. And look at that, the low from this morning. The low from this morning, guys, comes into play. So I need to develop an indicator for this, more of an intraday support and resistance view. So yeah, now in the ES, you're seeing all these zones. These are where things overlap. So like if there's a pivot point, like here's the pivot point. If there's a pivot point with things overlapping, like the low from 3 days ago or a whole number, it's going to show a zone. So this is my key levels confluence indicator. So guys, we have 15 minutes left. I hope you've enjoyed the charts and just kind of getting back to the basics and seeing the real genuine me actually just get excited about trading again. This is so fun. I'm going to take a moment and show you my trade copier. I promised I would do that. Then we'll talk about some of these chart trader features. But again, if you guys want to explore what I've created, my website's going to be the best place. You can dive in, plenty of time tonight, tomorrow, the specials I'm offering, to look at what I'm offering and check it out. So big reveal. Here's my accounts. You guys ready for this? Haven't touched them. Oh, I take that back. We have touched the PA. So I created a new account with Apex, fresh account underneath my business, and I have these 20 funded accounts. How fun is that, right? So we'll see if they even pay me, if I can follow the rules. But if I follow the rules, they ought to pay me, right? You get that $40,000, 2,000 times 20 accounts payout, or I might take 10 at a time in case it doesn't go well. I could trade these 10 first. Not sure what I'm going to do. These are my Bulanox accounts. I didn't know this, but apparently you can only get 3 at a time with them. So these are funded accounts of Bulanox, and this is my live account sitting on a sad $439. By the way, I had this theory that I wonder if NinjaTrader even, like when you deposit money with a broker, do they even like, is that money actually even being traded, or do they just like toss it in another account and then you're really trading a sim account? Just something to think about. I wonder, because most traders lose money, right? So if you deposit 10 grand with me, I think I would hold that 10,000 unless you trade a sim account. But just a thought. I don't know how all this stuff works. I think it's all a little bit shady behind the scenes sometimes, but you know what? There is a path to success, and that's what we're here for today. I've had $30,000 in payouts. Rory's gotten payouts. I know that Leigh, I'll say his name correctly. I'm not sure if Leigh's gotten payouts. I know Rory has. And so I believe there's a path to success, and I truly want to help you guys on that path. So anyways, these are my funded accounts coming soon. I will email you guys later if you want to stay in touch. Okay, but let me minimize this. Any questions, by the way? Just put the questions in if you've got them. Would love to look at those, make time for those. This is my chart trader. I've got lots of different tools here. Obviously, I showed you the buy click and the sell click, how easy it makes it to place orders in the chart window, no more right clicking. Like if you're familiar with Ninja's standard, attaching orders to plots. You know, I told you a big way I trade is on these moving averages. So check this out. We got the 20 EMA, right? So if I hit sell click and I move my mouse and I hover, See how it snaps to the 20? Now I can click and I've immediately have an order that's trailing down with the 20. Right, so this is the most basic feature I can demonstrate to you guys. I won't even get into everything in this presentation, but I've got the essential tools. So if you quickly just compare, see how the essential, watch closely, it adds button. By the way, there's the break even button, right? So if I want to, I can even adjust this break even +4, +9, right? The essential tools, if I click, is now going to include a bunch of position sizing and preview, right? So if I'm looking at this, I can quickly change my ATMs to a 15-point target, a 20-point target, a 25-point target, and even my sizing. So I'm on micro contracts here. My sizing adjusts automatically. So obviously if my stop's bigger and I want to risk, say, $200, I'm going to have less contracts in my sizing. So by the way, you can see here it says MNQ. I can trade, or I'm sorry, right here it says micro. I can select either mini or micro, so I can quickly toggle between. It can be risky if you're not paying attention, but I can click, I can trade micro contracts on a mini chart. Right, so if my charting is want to be based on a mini, but I want to trade the micro as possible, I put that in here probably a year ago. Advanced exit orders management. So these are additional buttons. This is one panel, many products, many features, right? So you got customized trailing stops. Like for example, I can put a trailing stop on any plot and have it immediately take effect when I place a trade. Renko, wow, how do you make sense of this thing? It's crazy. You got Renko guys. But Renko, let's say I want to take the next reversal bar long, I would just hit the button and look how it trails down. It's going to trail down until the reversal bar closes, and then you'll be filled on the buy stop. So this is going to be a way to semi-automate your Renko entries. I can just click to cancel the entry, click to place the entry, click to cancel. Same thing for range. Range is kind of the same deal, right? It's like you know when the bar is going to close. I call it the known close. You can enter on the bar close. Let's say I want to enter on a green bar up or a red bar. Or I want to get long on a red bar down, or I want to get long on the next bar, whatever it is. This would be getting long. If the bar closes green, I can do that. Up here is your standard ATM strategy features. And so we'll just watch this enter here as this counts down to 0. I've got my own counter down here. I've cleaned it up. The default timer says time remaining. I just cleaned it up, so it's just showing you the seconds there. Man, this is fun. I'm having fun. I hope I'm not just like talking to myself, but man, I'm excited to get back into futures trading. And I'm excited to keep pushing through all the challenges of building a software company because it's hard. And trading's hard, right? But I think together we can do it. So there's the entry long when the bar closed, just a simple feature. You can also trade signals. So if you have an indicator that plots signals, like here's an example down here with the stochastics, I can get in when a bar closes with my signal or the bracket. This is Leigh's thing, right? One click to put a buy stop and a sell stop if you're trading like a news event. You can also set this up on a timer. So I know it's a fire hose, guys. I know it's a fire hose of features on the enhanced chart trader, but I hope you'll go look at the videos and the products on my website. I'll show you that in a moment and see what I have to offer in the enhanced chart trader. And then one more time on the trade copier, I hope you'll check this out. Again, I have a whole video that with almost 30,000 views on YouTube that kind of overviews all this and how it works, how it's designed with risk management features. So I hope you'll go watch that. But anyways, I'm going to get back to the charts because this is the main thing I want you guys to see and consider is a suite of indicators to make your charts look exactly like this. I'm going to hop back into some of my offers here and give you guys lots of options on what you can get from me today. And then we'll wrap it up with questions. Any questions? I see Ray has been blowing me up. I see, yeah, Ray's the only one that's talked here. So yeah, I would love to hear from you guys if you've got any comments, feedback, questions, hate, love. I'm here for it all. Let me go ahead and put the PowerPoint back up real quick. So if you want to get started with me today, and I'm sorry, I'm trying to get this on the right slide. So if you want to get started with me today, you can start with the basic chart trader tools for $115, 40% off. Everything through Traders Corner today is 40% off. The essential chart trader tools, which includes the position sizing that I showed you briefly and the preview of your targets and stops, $595. Okay, and then we got all these other features. Actually, no, I'm sorry. I put that down to $395. So I'm doing 60% off. If you want to start with the enhanced chart trader with the position sizing and previewing your targets and stops, I think it's the best chart trader on the platform. Obviously, I wrote it, designed it, $395, 60% off. Let's keep moving through here. All these other features, if you were a trailing stops, if you're a Renko range trader, if you trade on the bar close or other features, these products are going to be $295 a piece. So you can buy one or multiple of these products, build out the chart trader for what you need. That's the idea. Okay, and then the accounts dashboard right here. This is my trade copier today for $175 or bundled with the risk management features, including daily goal and loss, $295. And then two more slides, support and resistance suite. So this is what you're going to need to set up the charts exactly like my charts today. So actually I've got something in this suite that I didn't even talk about. It's called the first touch signals indicator. This is going to plot signals when a pullback occurs to the moving average. So it's going to help you see those pullbacks, and it doesn't plot every pullback. There needs to be a certain number of bars, which you can predetermine, such as like 10 bars where it has to drop below and stay below before it pulls back. But guys, I do believe moving averages are so important and helpful. I would encourage you to look at them again if you haven't. In fact, I think I saw Marina present earlier today. I think she uses moving averages and tick charts. But anyways, so that's going to be $895. You're going to get two support and resistance indicators, the first touch signals indicator. I'm going to give you also the moving average trend indicator, which draws those moving averages from the 5-minute chart on a 1-minute or any other chart. Let's say you want to take a Renko chart. You want to plot a 1-minute and a 5-minute of the moving averages. You can do that. That's going to be $895. Lastly, if you want to go all in with me, I know a few of you are going to hopefully want to do this. I would be so honored and grateful. You can get the whole chart trader package, I think it's like 10 products built into the chart trader, all sorts of features that's going to be basically 40% off. It's going to be $23.95. But if you purchase that, I'm going to throw in the support and resistance. So you're going to be able to set your charts up exactly like my charts, okay? And get all the chart trader features that I built. And with that, hopefully I'll be able to developing more features. And it's definitely the guys that own the professional tools that get the most time and attention from me and my team. So definitely something you guys will want to consider. I want you guys to make sure you look at my reviews as well. And then lastly, here's the offer. I will put it in the page in the chat again. This is going to be good through Friday, August 1st. You can go to the link, 40% off everything plus special offers, right? So let's take a look at the website real quick. Very last thing, I want to just kind of walk you guys through this. Trustpilot reviews at the top. If you want to see a list of all my products, you can go right here, NinjaTrader products, see all products. This is the special page for Traders Corner. with discounts, especially, well, this should be $3.95, but that's the one discount. I'm going way down to 60%. But I always love to just discount the stuff because I want as many of you guys to have it as possible. I think it's going to help you. And so here's all the discounts listed. You can click more information to learn more about each one. There's going to be videos. Most of these links will have videos for you to learn more about what I offer and what I've built. Again, here's all the chart trader features listed out as well. So yeah, that wraps it up for me. I don't see any questions. Guys, if you want to reach me, the best way to do that is bottom right corner of the website. You see this down here? Click the button, click send us a message. I've got my lovely team of 3, actually 4, to help answer your questions. But yeah, it's such an honor, and I'm so grateful to be here on Traders Corner. Thank you, Anthony, again for having me back, continuing to invite me in to what you guys are doing. And yeah, I hope you guys will all check out the website. And I hope I will hear from some of you soon. So thanks a lot.
Joel, thank you so much, Joel. That was a true toolkit upgrade for any NinjaTrader user. And thanks again for taking time out of your very busy day today. And we appreciate it and enjoy all of your hard work. We sincerely do. So thank you so much, Joel. Thank you.
All right. Thanks, Anthony.
You're welcome.
Thanks, everybody.
And finally, closing out our incredible day is the YouTube trading star Rory Powers from Right Line Trading, here to reveal the cutting edge of AI-powered trading tools. In his talk, AI-powered bots, new ChatGPT agent revealed, you'll see how AI agents can research, reason, and take action on your behalf. Why context-aware logic is the future of trading, and how ChatGPT is now integrating with trading systems to deliver speed and accuracy once reserved for institutions. Let's welcome Rory Powers.
Hey, Anthony, thank you for that great introduction. Very nice.
Yeah, I appreciate it.
Thank you so much for having me here. What a great presentation by Joel. I tell you, I watch his presentations. I feel like a kid in the candy store. I want it all.
Well, tell me about it.
What a
Thanks,
talent.
Rory.
Oh, man, it's just incredible. Great job, Joel.
Yep, I'm sticking around for what you have to say, man. Thank you for saying that. I appreciate it.
Awesome. Thank you. All right, everybody. Very excited about this presentation today. We've got some really great updates. A few that are coming out this Friday, and one that's the big one that's coming out in just a few weeks that I'm going to kind of preview today. So stick around. I've got a short but sweet power-packed presentation on the AI Auto Trader now with the ChatGPT agent integration. That's going to take it to a whole new level. So stick around. I've got some really brand new information. We have an advanced machine learning algorithm that we've integrated into NinjaTrader language. And before I get too far into it, I just want to satisfy the CFTC. It's important to know that I am not a licensed financial advisor. I'm not offering any trading advice today. I'm just very familiar with the products and services of Right Line Trading. There is a significant amount of risk when trading the financial markets. If you're not familiar with that risk, please consult with a licensed financial advisor. With that being said, I'll tell you, one of the character traits that distinguishes Right Line Trading from some of our competitors is that we trade our systems on a live market every morning. And the reason I bring this up now is I want to invite everybody here in attendance. It's been a long day, a ton of information. Probably by the end of this event, you're gonna, see double. So I'm going to invite everybody here for free to come join me tomorrow on YouTube, and we're going to watch the AI automated system trade a live market. So I'm going to put in the chat box this link where you'll be able to come in. Let me send it to everybody. There we go. Okay, so I just put it in the chat box. Every morning at 9:15 a.m. Eastern time, right, 15 minutes before the market opens, we trade these bots on a live market. And listen, if we have a bad day, it shows like a pimple on the end of our nose. There's no hiding from it. And I think that transparency really goes into the integrity and honesty that we want to bring to the table. We've been around for 14 years now, and our vision here is to provide trading strategies and indicators that provide our members with an edge, some kind of insight into the future direction of price. That's the valuable information, right? It's kind of like having the winning lottery numbers prior to the drawing. Along the way, we've built a beautiful community of traders of all experience levels, from the complete newbie to the full-time professional trader, and all experience levels in between that wide spectrum. And we have a very supportive community. And I always say there's power in numbers. To learn what's working for others, sometimes more important, what's not working, so we could sidestep some pitfalls and speed bumps. It's very valuable information. And I just want to take just a brief moment. I know it's been a long day, but I want to recognize my team here at Right Line Trading. We have a really extremely professional, educated, I like to think handsome, team of professionals here at Right Line Trading that are all behind the scenes. Well, most of us are behind the scenes. Mr. Craig Emery, first our professional traders. Mr. Craig Emery is our futures trader. Mr. David Kushner is our prop trader. And we have our options guru, Mr. David Wyse. And man, can David Wyse trade options? He is on fire. He, maintains a 90% win rate. So excellent traders. Behind the desks here at Right Line Trading, we have Mr. Brock Miller. He's a college student getting his degree in computer science. And then we have our computer professionals, engineers and software developers, a powerhouse team, a trifecta. We've got Charles Sayre, UCLA graduate, has his master's degree from UCLA. We don't hold it against him, just kidding. We have Sergio Luque Rodriguez. He has his master's degree in computer science. And the team is led by Mr. Mark Miller, who has his MBA from Cal State. It turns out he's an engineer, and his expertise and experience lies in automation and robotics. It's important to know, and I think the most important thing, because going into these characters and values of our company, Mark Miller's a U.S. Army vet. To know him is to love him. He has a contagious enthusiasm in everything that he does. And just being around him is always really a privilege and honor. But he brings to the table those core military values of honesty, transparency, integrity. And he's made sure that they are at the forefront of everything that we do here at Right Line Trading. A little bit about the voice that you hear behind the screen. My name's Rory Powers. I graduated from Syracuse University. I reside down in South Florida, and I've been with Right Line Trading for 12 years now. I'm on my 12th year, and I've worn several different hats here over the years. My favorite role here is answering the phones. I'm kind of a people's person, and I love talking to traders. I'd like to hear you guys are struggling like me, because we're in this battle together, and that's what it is. It's a battle. But a little bit about myself. I reside in South Florida. Other than trading, my passion is saltwater fishing. I live in Florida, all the way down by the Florida Keys. And, I always think if you live in Florida and you're surrounded by the water, it's crazy not to live right on the ocean. So I'm way down south, just a stone's throw away from the Florida Keys. Love saltwater fishing. On a recent fishing trip, this is Mark Miller, the owner. Sergio, he's our software developer. We caught some beautiful grouper and snapper. Once the boat got to the dock, they cooked them up fresh right in this restaurant. It's freshest, most delicious fish ever. But my prized catch, the one that did not get away, is my beautiful wife, the catch of a lifetime. God blessed me with a woman with Christian values that is really has been a huge inspiration in my life, really my rock. And God has blessed us with two beautiful girls, a 6-year-old and a 2-year-old. My wife's a little younger than I am. My friends tell me I have more guts than brains when they see the pictures with the young kids, but I wouldn't change a thing. I am so happy. So let's get on with the show. The genesis of the AI auto trader, of these automated bots, is really our lack of consistency as traders. And I say that in the first person. I'm not pointing my finger at anybody here. My lack of consistency, and we share that as traders. Remember, I answer the phones here, and I hear everybody's struggles, and it's good to know. And I think you'll be happy to hear that 95 to 98% of the people that I talk to, they all have their struggles and their pitfalls and their speed bumps. And that's, just part of this journey. So that was really the genesis of the AI auto trader. If I was to put this slide into words, because it's my favorite slide, I love it. This nice professional woman who seems to be very conservative. She's wearing a business suit. She's at her desk here. It looks like at some form of office, perhaps. And she has watched the equity in her trading account slowly over the course of the last 6 to 8 months dwindle down to nothing. And she's come to a boiling point, a bursting point. She's resorted to taking the old sledgehammer out of that bottom drawer, that bottom desk drawer, and she's ready to smash that computer monitor into smithereens now that her account is just about down to nothing. And I can't tell you how much I can relate to that, thinking that there's absolutely must be a conspiracy going on, right? It's just impossible that every time I get in, that they want to take my stop. Price reverses against my stop. And then maybe it, just to laugh at me, it continues in the direction I had the position in. It just seems like maybe the market makers or my broker or even the prop firm, who knows who, were all in on this to get my money. And that's just what this nice woman is feeling. And that was the genesis of the AI auto trader. That's our motivation. Because we've all experienced problems making money and being consistent. It turns out I was right here on Trader's Corner a few months back, and a very educated, talented guy, his name was Chris McMillan, did a study on human personality traits and whether or not those personality traits lend well to being a good disciplined trader. And what he found was there's about 10 or 12 core personality traits. You have the analytical, the driver, the emotional, and we all share a combination of these traits, some traits more than others to a certain degree, and that makes us all unique as individuals, okay? But what he found, very interesting, he found that maybe one or two tops of these core personality traits lends well to being a good disciplined trader. So listen, if you're one of the 9 of the 10 traits, if you have those 9 or 10 traits that don't lend well, like myself, listen, we can blame it on our genes. It's not your fault. It's not your fault. This is built into our genes. Those 3 professional traders in my first slide that I introduced, they all have something in common. What they have in common is they're very disciplined and patient. And in their mind, they have a trading plan, a set of ironclad rules that are etched in stone that must be present on their charts prior to them pulling the trigger. And they have the discipline and they have the patience to wait for it. They wait, they sit and they wait. In fact, a lot of them take it as a red badge of courage that they didn't take a trade at all today, or they haven't taken a trade in 2 days. And because they're very disciplined, they do not want to get in unless they find that risk is at its lowest, almost like a robot, almost like a robot. Okay, so those human errors that we make, they're all tied into our personality, human errors. Sure, we may have bought indicators that just didn't work or lacked a proven trading methodology, but we all know where it all winds up. It all winds up to blowing out our trading accounts, our prop accounts, our live accounts. My goodness gracious, I've blown out so many accounts, I want to cry. And I was desperate to find something. So this was really why it's become our team's commitment. It says my commitment. It's really been my team. I'm really part of a great team. It's our commitment to bring this to an end. You see, we've narrowed it down to two things that we believe are going to create trading success. Number one, and I'm going to flip the script on this slide, okay? Number one, because we suffer from those human personality traits, and 9 out of 10 of us just don't have those core personality traits that lend well to being a good, disciplined trader. So ideally, we need software that can get us in and out automatically, so we can quit sabotaging our own trading. We need a system that can do it automatically. Number two, and even more important, is we have to have the proper tool set, right? Listen, unless you've been living under a rock, you have to mention that we're in the midst of an AI revolution. An AI revolution. I've heard it likened to the invention of the wheel, the automobile. That's how big this thing is. And I truly believe we're just scratching the surface of this, okay? Listen to this. I don't know if you knew this or not, but did you know that AI has worked its way in to 10 of our top sectors in our economy? Just to name a few: entertainment and media, energy, agriculture, education, transportation and logistics, manufacturing, algorithmic trading. Did you know that 95% of large institutions, hedge funds, investment firms, they're trading with AI-powered bots? They're not sitting behind the mouse and clicking on the thing and trying to get in at the right time. No way. These huge investment firms and hedge funds, they're using bots, algos, that are leveraging AI, okay? By the way, the number one sector in our economy that's leveraging artificial intelligence, which really makes me happy, I lost my mother and father, is in healthcare. And God, I pray that they come out with some breakthroughs to some of these horrible diseases. So the number one sector is in healthcare. But AI is really making every single sector and industry that much more efficient, with a tremendous amount of data that it can process and turn out something with such great efficiency. It's just remarkable. I mean, if you think about it, look at NVIDIA. NVIDIA now, who's really, has a tremendous percentage of the market cap of these AI chips, is the first $4 trillion company. It's not a coincidence. And I truly believe that we're just scratching the surface. Where we're headed, what I'm going to do today is I'm going to briefly explain what we've done so far. I'd like to explain where we're headed with this. And then I'm going to show you our most powerful bots and some results and a very special offer. And I'm going to do it all under 30 minutes. Okay, so stick with me. The main benefits from using our AI auto trader. Well, listen, it's going to eliminate all of those human emotions out of our trading. The way it does that is what this AI integration does. I'm going to outline 4 different ways that we're using it. Number one, it's going to dynamically, and I want to back up just for a second. We're trading today in an extremely news-driven market. News-driven throughout the day. We have all types of economic news reports, sometimes even geopolitical reports. Sometimes it's the administration, the presidential administration with new policies. But these reports that come out during the day are very instrumental on the direction that the market takes. We can go from a choppy, ranging market in one moment, and the next moment we're on a rocket ship headed to the moon, or vice versa. So the 4 ways that we are leveraging AI currently is we are dynamically moving our stop and our profit targets based on the average true range of the market. So the elephant in the room with automated bots is, well, I've heard it, I've heard a lot of members say, well, I've bought some bots before, but out of the box they came out and they did well for a week or two, but then the parameters got stale. They just didn't work any longer, and it was useless after the first few weeks because they just weren't optimized any longer. Or I had to constantly optimize the inputs. Or they say, well, only under certain market conditions did it do well. Or they would tell me, well, in the first hour of the market it does well, but then the rest of the session it gets crushed. Well, these are all legitimate and very genuine reasons why automation failed in the past. And these are all being solved with this AI integration. This AI integration is able to dynamically adjust your stop and your profit targets based on the average true range of the market. So you never have to optimize these inputs. They're always optimizing themselves. It's also going to optimize the trading hours that it trades. It's not going to trade during times of the day that historically it gets crushed. It changes its own trading hours. The bots have 4 different triggers that will get you into a trade. This self-learning algorithm does 2 things. It learns which trigger is going to be the best in the current trading environment. And lastly, we have what we call our candlestick pattern recognition. That's also part of this machine learning algorithm. You see the charts are very symmetrical, geometrical. They have candlestick patterns that repeat themselves throughout the trading session. The system learns what the reaction is. For example, if we're in a short trade and all of a sudden we get this big, ugly, bullish engulfing candle, well, that usually signifies a reversal, and the system's going to exit the trade and take profits. So that's the last and fourth way that we're currently using this AI automation. And I always like to bring over, and I'm going to do it very, very quickly today. I always like to bring over the actual strategy itself, just so you could see as an illustration what I'm talking about. What I'm talking about here, you can see in our global parameters that the way the system works, if we have what we call a bot and a drone that run in tandem. They're both really bots, but the difference is the drone is exactly what it sounds like. It's just a bot, but its inputs are static. They never change. It trades 23 hours a day. Okay, when the market's open, it trades. It never will hold a position overnight. Never holds a position through the session break. So the drone and the bot, the drone is what it sounds like. You think of a drone, you think of like a small aircraft hovering above and looking at the landscape below, getting a bird's eye view of the overall landscape. That's exactly what this drone is doing. It's getting an overall bird's eye view, a picture of the trading environment. What is the maximum forward excursion, the maximum adverse excursion? What's the range of the market? Which signal is working the best in this current environment? And it uses a tremendous amount of data to learn the best output. So let me get back to the bot now. So the drone is static, and it's telling the bot the hours out of the day that it does the best, okay? Being a software developer, especially with automation, something that we've learned through the School of Hard Knocks, I'd like to say, is that it's more important to filter out the losers than it is to pull in the winners. So at the expense of letting some winners pass us by, we have to filter out the losers. How do we do it? This is one way we do it. The bot is only going to trade during the times of the day that historically the drone does the best. Remember, the drone is trading 23 hours per day. So if it finds that there's a time during the Asian Open or the London session or during the New York Open or throughout the trading session of the New York Stock Exchange that it does well, well, it's going to only trade. It's going to dynamically change those trading hours in your bot to trade the best times of the day. Okay. It's also going to choose which signal or trigger that it's going to take. We have 4 different triggers that the system will take. If it enables the signal A, then we have a bunch of conditions that must be met in order for the trade to actually trigger on your chart. But this system is going to learn and only take the signal that's currently working the best. Okay. And last but certainly not least, we have our candlestick pattern recognition, where it recognizes certain candlestick patterns. And we have extremely sophisticated ways to manage these trades. And I'm going to show you a short video of one of the new releases that's coming out Friday. We call it the Leapfrog. The Leapfrog runs in tandem with our profit window. Our profit window, and I want to explain this really quick because it's a really big reason for our success without going too deep into the minutia. But let's just say that our profit target is 100 ticks and our stop, for this example, let's just say it's 50 ticks. With our profit target window, if we put our window at 25 ticks, what will happen is if price comes within 25 ticks of my profit target, my profit window is at 25, my profit target is 100. So if I come within 25 ticks of that 100 tick profit target, price will be at plus 75. At that point, my stop is going to immediately come to 25 ticks behind price. So I'm only going to risk at that point as much as I have the potential to make. So my risk to reward equals out very quickly once I'm up $250 on this trade. Well, what if the market is really, trending and it's moving very nicely? Well, we'd be selling ourselves short by just stopping with a 100 tick profit target. The system will see that it's trending and it uses what we call the leapfrog. And if I put the leapfrog into this equation, I'm going to show you a video of what it does. It will go in a loop and it'll keep locking in profits and running that trade down and letting it mature to the full excursion. And believe me, in the equity curves, you don't want to cut all of your winners short. It makes a tremendous difference over the course of a month to have a few runners in the equation. So that's a little look under the hood without going too far into the minutia of the strategy. This is showing you the candlestick pattern recognition, how our drone and bot runs in tandem. Our drone will run 23 hours a day. And if it learns that maybe from 9 to 11, it does extremely well, but then come around lunchtime up until the closing bell, it's hit or miss. Well, the bot is only going to trade those times that it does the best. It'll come back on and it will sit on its hands through these trading session hours that the drone just gets hammered. Okay, so it filters out a tremendous number of losers. Let me just show you a real life example. Let's take a look real quick at, this is the NQ20U sniper bot. This is the sniper bot. And the bot, you can see that we're up for the month. This is July 1st to the 31st. We're up $1,388 and our drawdown was $1,800. Okay. If we look at the drone of that same sniper, it made $1,600, but look at this. It pulled in $9,700 of losing trades, and the max drawdown was $5,600. If you're a prop trader, or even if you're trading a live account, none of us like that pain of a drawdown. It hurts. We don't sleep well at night. So to have that bot almost with the same amount of profit run that much more efficiently really is significant. And I can go through all of these examples on all of these, and you'll see the same thing. On the Haymaker drone, it was up $3,200. It pulled in $19,000 of losing trades, and the max drawdown was 3,400. Where if I look at the bot of the same Haymaker, now it's only pulled in $2,000 in losing trades in comparison to 19,000. Okay, so it eliminated $17,000 in losing trades. And our max drawdown is only $700. So it's running that much more efficiently, and that bot drone technology is working as planned. So where are we going next? What we've just gone over was how the system uses the average true range to position the stops and profit targets, pick the best signal confirmation, and manage the trades using the AI integration. Where we're headed with this next, and what's going to be released within the next 2 or 3 weeks, is we've integrated into this the ChatGPT agent, a very sophisticated system. And what it does is it actually uses ChatGPT. They have a new feature that's called the agent. And what it does is through connectors, well, first it allows the ChatGPT agent allows ChatGPT to complete complex online tasks on your behalf. What it does is it has connectors in it, and it's going to act as a bridge between a number of different apps and websites to provide the system with a tremendous amount of data. This is how this system thrives, okay? This is what makes it so powerful. It's going to use a tremendous amount of data between a number of different websites and apps, and it's going to seamlessly switch between reasoning. It's going to be able to reason and think and learn, and then it's going to take action. It's going to be integrated right into NinjaTrader. At first we're thinking, looking at the legalities of it, that it would come up on ChatGPT and you would have to authorize it to make changes to your system. So we're looking at the legalities of it, but we'll overcome it. Don't worry. But this AI trading bot with your authorization is going to take into consideration, it's mind-blowing, the information that it's going to learn. Number one, it's going to learn the economic news reports when they're coming out, when the high impact reports are coming out. It's going to sit on its hands. It's going to let the market settle down. It's going to learn what the reports were. Were they expected results? Were they out of the ordinary? Is market sentiment going one way? It's taking a look at the macro, and it's taking action on your behalf in a way that has never been done before, okay? And this is the power of this AI integration that's going to be coming within the next 30 days. And we're very, very pleased, excited. Remember, I started the presentation introducing my team. These guys are like a kid in the candy store. Like when I saw Joel showing that bracket and all those great tools, that's what these guys are thinking with this. They're playing with these inner workings of this new agent, and they're like kids in a candy store. They're loving it. And we've got a really great team that's really putting a lot of time and effort into making this something that's really unique, very powerful. So that is where we're headed with this, and it will be available in the very near future. So let's take a look at the numbers. With automation, I think that's what most people look at anyways. And I'm running out of time, so I want to hurry up. Let's go over the most powerful bots. Our ES30 range historically has always done great. We have a member of our community, his name is Robert, happens to be a professional in this niche. He shared the inputs, and some of our best ideas come from our members. If I tell you how is, the backstory, and I'll just take a minute to tell you the backstory. He is a professional. Robert, a member of our community, has bought several bots from maybe 5 or 10 different vendors. It's his passion. He loves it. And what he loves to do with them is he loves to optimize them. He does back tests. He has a tool that he uses, and he optimizes all of the parameters. So he optimized this 30 range on the NASDAQ. Okay, catch that. He optimized it for the NASDAQ. And he accidentally, when he loaded it into NinjaTrader, it did not load on the NASDAQ. It accidentally loaded on the E-mini. And it turned out that it was probably our best bot that was ever found or invented. And it was done on the wrong instrument. Okay, that's how we came into this bot. He made over $65,000 over the course of 6 months with it. Referred several of his friends to us when he saw how great it was. And he told me, he said, Rory, I've bought 5 or 6 different, bots from different vendors, and yours is the only one, well, not mine personally, but our company's, that I've never had to change the inputs. They optimize themselves. I'm like every day, I'm like a full-time job. I'm changing the inputs on these other bots. With yours, I've never touched them. And I'm up $60,000 over 6 months. So this ES30 range from June 1st to July 18th, after commissions, is up $6,178. Our NQ20 Unorenco Sniper from June to July 18th is up $8,740. These are not back tests. I want to assure you, these are all trades taken on a live market. This isn't a strategy analyzer, a back test, none of that. So the 20 Unorenco, it really does great. And just to show you why, especially in this type of trading environment that we're in right now, the 20 Unorenco really does a great job of filtering out a lot of the static. It eliminates all of that whipsaw. So if I show you a 20 Unorenco chart, this is what the charts look like. And we provide you with all of the indicators on all of our charts. We have very clean charts. And you can see these beautiful, smooth charts that the 20 Unorenco trades. They're absolutely beautiful. So this sniper, which is trading a huge Unorenco bar, a 20 Unorenco is very big. It has a 100 tick reversal, 120 ticks from top to bottom on a reversal. Really does a great job of smoothing out the charts, but it's up over $8,740 after commissions from June 1st to July 18th. Okay. Our 150 range RJ, we have a very nice diversity of not only instruments. We're trading the futures index equities with exception to the Russell. So we are trading the S&P 500 futures, the ES, the NQ, the NASDAQ, the Dow, the YM, and we've diversified into crude oil and gold. Crude oil and gold aren't our most consistent bots, but let me say this about them. They're very good to have in your toolbox because when there's a geopolitical unrest like we saw recently, they became our hottest bots. And to have those in the toolbox are always nice to have. But anyway, not only do we have a nice diversity of instruments, but time frames as well. This one runs on 150 range, a pretty big bar. But from June 1st to July 18th, it made over $10,000. By the way, RJ happens to be a member of ours that shared these inputs with us. So this is the prop trading segment. Prop trading has burst into the seeds. I'd be derelict in my duties if I didn't bring up prop trading, right? These bots can trade a live account, a prop account, a sim account. As long as you got NinjaTrader 8, these bots can trade with a live data feed, okay? Any type of account you want. For prop traders, we've designed pre-formatted templates that are specifically designed for prop trading. There's two stages of your prop accounts. You have your evaluation stage. Number one, the evaluation, for example, if you have a $50,000 eval, you have to make $3,000 before you lose $2,500. Oh, yeah, and believe me, it's a trailing drawdown. At any time of your high water mark, even unrealized gains, you cannot let price come back $2,500, and that's going to trail you. So they've made something a little bit, that's something that's hard to begin with, trading, and they've made it even a little more difficult. They also have some consistency rules when you get to the next stage, which is really the next stage is your PA account, performance account. Different prop firms call them different things. We at Right Line Trading also have a funding arm. Our sister company is called Right Line Funding. So we also are in the prop trading world. So the PA account is our vehicle to getting payouts. These are they're actually SIM accounts. They're not live accounts. But if you conform to all of their rules, the consistency rules, you don't blow the account out or breach it, then you can request a payout and get paid real money. Okay. So we have templates that are very aggressive that will get you past the evaluation very quick. We call those our one-day passes. However, once we get the PA account and we pass the evaluation, we pivot to a much more conservative strategy. Okay, now that we've paid our activation fee, we have a little more skin in the game. We went through a little something or other to get to that PA account, and now that we've got a little more skin in the game and we've shed some blood, sweat, and tears, we don't want to blow that PA account just so quick anymore. We start practicing capital preservation, and we have our daily profit goal or our daily loss limit that we can put right into the parameters of these strategies. So we have customized templates that do just that. Our one-day passes, we go on a pass or fail. It's not an equity curve that we have on our one-day pass. My slide says 50%, but remember, I answer the phones here. I'm going to underpromise every time because I'm going to answer the phone and I'm not going to have to stutter and tell you what went wrong. So let's bring it down to 33%. 1 out of 3 on these one-day passes. They're one trade and you're going to pass or fail. So when you see a prop firm is running a 90% sale and it's 15 or 20 bucks to get a prop account, well, if you buy 5 or 10 of them, 1/3 of them statistically, now this is trading, I can't guarantee anything. Statistically though, I'm comfortable in my own skin telling you 1 out of 3 of these is going to get you a funded account. I saw today that we got a few of them that passed running them on our one-day passes. So 1 out of 3, 33%. Listen, there's a chance you could hit 3 in a row. There's a chance you could lose 3 in a row. You could lose all 3 in a row. This is trading. But statistically, 1 out of 3, you're going to find that if you trade the NQ or the ES, you're going to win 1 out of 3. And then our PA accounts. Listen, you know, a lot of people take it for granted that because I personally work for Right Line Trading, that I'm a great professional trader. Nothing can be further from the truth, okay? And I'm not too proud to tell you that. In the course of my trading career, which, you know, is over a decade now, I've blown more accounts than you can count, than I can count. I've gone to bed talking to myself in my sleep, just so disappointed that I just couldn't turn the corner on my trading career. Let me tell you something. These bots have been a game changer for me personally. I'm the one that trades these bots every morning on YouTube Live, and I do it on 3 PA accounts. From January 15th to today, July 31st, my P&L is over $32,000 trading these bots on my PA accounts, okay? I'm very particular with capital preservation. My profit goal is anywhere from 250 to 500, and when I reach it, I stop. I promise you, and vice versa. If I lose it, I stop and I put my tail between my legs and I go home talking to myself. I'm humbled again by the markets, but I come back the next day with a vengeance. And I come back and I stick to my game plan and I trade the same bot and I do the same routine over and over and over again. And that's why I want to invite you tomorrow to come witness firsthand these bots on a live market. I think you'll be very impressed. Just to give you an idea of what they did today, this is my leaderboard of what the bots did today. Were they all profitable? No. There's bots on the bottom that lost today. But I'm going to explain the methodology of how we trade this tomorrow in my live stream. But listen, we as humans, there's no way in the world that we could simultaneously trade 5 different instruments and put up results that look anything close to that. Let's be realistic. We just can't do it. With this tool, it provides you with a significant edge and will provide you with bots that have the potential to make a lot of money. The real appeal with the prop accounts is using the trade copier. And I use the affordable indicators one, and I do it every morning on YouTube. So you can 5x, 10x these bots via the use of a trade copier, all without risking your own capital. That's the beautiful part about these prop accounts. You have no real skin in the game. If you lose, it hurts. But you know what? When you lose a live account, it hurts more. I've lost both ways. Losing the real money, it hurts more. We're all getting payouts, not only our team here at Right Line Trading, but our members, which really, to me, spiritually is more satisfying than getting these payouts from Apex. Seeing our members win and share that they're winning brings a greater satisfaction than getting these payouts myself. A few of our members, I'm getting to my special offer. One of our members I wanted to mention, I'm coming right up to the end of my time. And I just want to mention, because I'm not going to have time to get to most of the questions. If you have a question or you'd like to talk to me one-on-one, please do me a favor. Put your name and your number in the chat box, okay? Nobody else can see it. Anthony can see it, but Anthony sounds like a pretty decent guy. I don't think he's going to call you in the middle of the night. And I'm just going to call you once, and I'm going to do my best to answer your questions. So please, if you have a question, put your name and your number in the chat box. I remember Judy. A lot of people I talk to on the phone, they're retired. They're retired, or they're getting ready to retire, or they're working and they want something to supplement their income. Judy is retired, and she wanted something to supplement her retirement. These bots are providing her that. She travels the world. It's amazing, and you'll see her most likely, God willing, in our YouTube stream tomorrow. She's trading from currently in Dubai. This picture, she sent us a video in our Discord how she's trading. This is a picture of her balcony in Dubai. Before that, she was on a cruise in the Mediterranean in Italy. This is her portable workstation coming from an MSC cruise off of the Mediterranean in Italy. And she's getting payouts and trading these bots with a tremendous amount of success. Simon is from across the pond. We always get questions. Hey, I'm in the UK. Hey, I'm in Switzerland. I'm in Australia. Can I trade this? The answer is yes. If you have NinjaTrader 8 and a live data feed, you're in business. Limit up. Steve, rest in peace, Steve. Steve Cherry, a valuable, loved, cherished member of our community, died. But this was his passion. He died a happy man. But Steve, God bless you, rest in peace. Last but not least, Ron Nettles made $10,000 in gold during the geopolitical unrest I mentioned. Suzanne is a leader in our community. Let me tell you guys, the women got us beat. I'm telling you, the top traders in our community are females. Between Judy, Suzanne, we have Marcy, Carol, and several others. We're in trouble with these women. They're much better traders than we are. Okay, let's get to the special offer. For Traders Corner, we're going to do the full Monty. The full Monty. What I mean by that is the discretionary system. What I mean by discretionary are those beautiful chart indicators that I showed you. They come in pre-formatted templates. Everything we provide you with are all pre-formatted. If you're not good on the computer, don't worry. We got a great team. We got great customer service. If you see our reviews on Trustpilot, very much like Joe's, we got some beautiful reviews. Customer services are really one of our strong points. So the discretionary component, pre-formatted chart templates, pre-formatted strategy templates, the entire workspace is going to be provided to you on a silver platter. Not only do we do a white glove installation, but through the lifetime of your membership, we're going to provide you with customer support. And man, is that important. Oh my God, is that important. Listen, with any new system, there's a learning curve. And to not have that support really makes things much harder. So not only do we provide you with tech support, but ongoing support with trading. We trade on a daily basis on YouTube. We do a weekly live training, and all of our members of our team, including myself, meet with our new members 2 or 3 times to make sure that we get your questions answered. All right. I said all of that to tell you we're doing a 50% off sale. The monthly membership is normally $11.98. Today it's going to be $5.99 through the end of the weekend. $5.99 for the month. The much better value is going to be our annual or our lifetime memberships. Our annual membership, I think, is just an absolute steal at $14.99. If you divide the 12 months into that $14.99, I think it comes out to about $120 a month. For $120 a month, you're going to have a home that you're going to trade with us every morning, Monday through Friday. You're going to have white glove support, and you're going to have a community of traders supporting you and cheering you on and sharing information with you to help you on this journey. For $120 a month, you'll have the strongest, what I believe to be the most technologically advanced automated bots out there for a retail trader, bar none, with this new update we're going to have. So $14.99 for the annual. The coupon code for the annual is save 50%. My associate Brock, let me make sure. Yes, he dropped the coupon codes and he dropped my link in the chat box. Now, the best value is going to be the lifetime. The lifetime is the $24.99. Normally it's $49.99. It's half off, 50% off. If you have the means, really, that's going to be the best value. If you don't like subscriptions or recurring payments, I hate them. It only hurts for a second. You're going to be very happy that you did it. $24.99. This is a system that has the potential to pay dividends for a lifetime. And I want to tell you this. The main reason Mark Miller purchased this company was for this system. The majority of the company's resources, and when I say resources, I mean time and money, are going into the further development of this system. So this is a system that is going to continue to get more and more powerful as this technology advances. So we're really excited about what the future holds. So $24.99, you'll be with us for the long ride, the full ride, $24.99. Use coupon code 50% off at checkout. Before I go, I just wanted to end with one last slide showing the Discord chat group. Let me bring it up, excuse me. Here it is. Okay. So our AI auto trader This is our Discord. We have the general chat, a user's guide. We have a 50-page user's guide that's illustrated that from the second you order the AI Auto Trader, it takes you through the entire setup, best practices, all in writing and illustrated with pictures. We have a daily results channel. Every day we post the results of our day. Every week we give the best 3 bots, so you always know which ones are performing the best. If you're a prop trader, we have a ton of resources, coupon codes, tools, copiers, everything that you could want as a prop trader is going to be in there. Improvement ideas, some of our best ideas come from our members. If you just need if you need assistance or support, we have a link for tech support. If we ever have updates, we post them in there as well. We have our Hall of Fame, our strategy collaboration channel. So we have a beautiful Discord server. You're never going to be in the dark. And before I turn it back over to Anthony, I just want to thank everybody for their time. Please do me a favor. Come and join me tomorrow. Do yourselves a favor. I want you to know, and this is the God's honest truth, that I really thought that I would never be a profitable futures trader. I just didn't think I had it in me because I sabotaged my own trading. I'm somebody that habitually squeezes their stop. If a trade goes against me and I'm taking some heat, I see those red numbers on that P&L and I squirm and I squeeze I bail out of the trade only to watch it go in the direction I initially had the position. I'm the world's worst trader left to my own devices. These bots have been a turning point in the trajectory of my trading career. And I honestly believe that this is a viable option, that it can do the same. It has the potential to do the same for you. So please come take a look tomorrow. It's totally free. It's at 9:15 a.m. We have a good time. It's going to be Friday, and we'll watch the bots trade a live market. Thank you so much, everybody. I know it's been a long day. Thanks for your time. Anthony, again, thanks for having me on Traders Corner. It's always a privilege and honor to be on your venue. Thank you, Anthony.
Thank you, Rory. That phenomenal close. AI in trading is no longer the future, it's now. Rory's offers in the chat. Be sure to check it out tonight and trade tomorrow. What a great trading seminar today. We hope all of you took something meaningful from each of our presenters. To all of our amazing speakers, thank you for sharing your years of trading experience and trading wisdom that can only be shared by those who have been down those long trading journeys and for all of the new innovative tools with our community today. And to our audience, we hope you're leaving this summit with strategies you can apply right away. Don't forget to revisit the chat to grab any offer links you missed. And thank you again for joining us for Traders Roadmap to Success. We'll see you at the next Traders Corner event. Have a great evening, everyone, and trade smart. Thank you.